Good afternoon, traders. Good evening, good morning to all of you. Welcome once again to this live commodity analysis. स्टार्ट करते हैं आज का सेशन। निफ्टी बैंक निफ्टी को देखोगे गैप अप ओपन हुए थे, थोड़ा बहुत प्रॉफिट बुकिंग आ गई है कल के मोमेंटम के बाद। क्रूड ऑयल भी थोड़ा बहुत मोमेंटम में बुलिश ही है। कल एक सेलिंग का ट्रेड बनाया था, एक फेक ब्रेकआउट जैसा दिया था, रिवर्स आया एंड देन उसी का रीटेस्ट करके चला गया ऊपर। नेचुरल गैस का रेजिस्टेंस पे था, वहीं क्लोज हो गया था, आज भी वहीं पर चल रहा है फिलहाल के लिए। मल्टीपल टाइम टेस्ट हो गया, लेट्स होप अब ब्रेक करता है अगर अपसाइड की ओर। 1:30 लंदन सेशन ऑलरेडी ओपन है। इवनिंग पे आज कोई डेटा तो नहीं है, कल ब्लैक फ्राइडे रहेगा तो कल यूएस मार्केट थोड़ा जल्दी क्लोज हो जाएगा आपका। मार्केट इंडियन मार्केट बाकी ओपन ही है। एंड 6:30 न्यूयॉर्क सेशन की ओपनिंग, 8 बजे यूएस मार्केट ओपन। लॉन्ग हॉलीडे है तो थोड़ा ध्यान रखना। बाकी कोई न्यूज़ वगैरह ऐसी है नहीं जिसका कोई डायरेक्ट इम्पैक्ट मार्केट पे देखने के लिए मिले। नॉर्मल प्राइस एक्शन ही रहेगा। कल यूएस मार्केट भी ठीक ही था, लेट्स सी आज किस तरह से रिएक्ट करता है मार्केट। बाकी क्लोजिंग देखते हैं। बैंक निफ्टी तो अभी भी पॉजिटिव ही दिख रहा है ओवरऑल इंट्राडे में। निफ्टी थोड़ा सा ज़्यादा प्रॉफिट बुकिंग में आ गया है। प्रॉफिट बुकिंग ही कहेंगे, ओवरऑल तो बुलिश ही है मार्केट। प्रॉफिट बुकिंग इज इनफ फॉर निफ्टी। गैप अप हुआ था अपर लेवल से, देन मूव डाउन साइड।
Yeah, give my number. I'm at 7:50. But I didn't
work on by EMS and other law enforcement. So each one of them is an entry.
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. Chancellor Rachel Reeves raised taxes on 1.7 million workers and the wealthy to pay for welfare spending and build up her fiscal headroom. It is her second tax hiking budget in a row, with levies on savings, properties worth more than £2 million and a range of other measures. Speaking after her budget in an exclusive Bloomberg interview, the Chancellor refused to rule out more tax hikes in future.
I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Although the Chancellor touted growth, the Office for Budget Responsibility downgraded economic growth in every remaining year of this Parliament. But investors have so far reacted positively to the budget, which set aside more money as a buffer against gilt market swings. So did Labour's rank-and-file MPs, who were pleased to see a cap on welfare payments to families with multiple children lifted. But question remains about whether Reeves did enough in her budget to help her and Prime Minister Keir Starmer to survive. The pair are Britain's most unpopular Prime Minister and Chancellor since polls began in the 1970s. Well, the UK government is expecting a bigger windfall from its taxes on non-domiciled residents, despite reports of many of them leaving. The Treasury expects to take in nearly £40 billion from people who live in Britain but keep their wealth overseas. Billionaire founders like Revolut's Nick Stronsky and Checkout.com's Guillaume Pouzaz are among those who have publicly left Britain thanks to those measures. Now elsewhere, Hong Kong's deadliest residential fire in decades has killed at least 44 people, with hundreds still missing and unaccounted for. An 8-tower housing complex has been burning for over 20 hours, throwing fresh scrutiny on the city's housing standards. Our China correspondent Min Min Lo says a number of issues could have caused the blaze.
The crux of the issue is what exactly caused this fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards.
Bloomberg's Min Min Lo speaking there. Rescue operations are expected to stretch into this evening, more than 24 hours after the blaze started. Chinese President Xi Jinping has urged all-out efforts to reduce casualties. Global equities are close to erasing their November losses as rising bets for Federal Reserve interest rate cuts have revived markets. The MSCI All-Country World Index has climbed for another day this morning, cutting its November drop to just 0.5%. The moves have tracked increased confidence about Fed rate reductions. Money markets are pricing in roughly an 80% chance of a quarter-point rate reduction next month, and then 3 more by the end of 2026. The moves come as the central bank's Beige Book survey of regional businesses showed employment declining slightly and prices rising moderately, with US economic activity little changed in recent weeks. 2 members of the US National Guard are now in critical condition after being shot near the White House. The suspect was also shot before being taken into custody by other Guard members and Washington, D.C. police. Authorities say that the suspect, a 29-year-old Afghan national, a short time after his nationality was revealed, the US government said that effective immediately, the country has stopped processing immigration requests from Afghan nationals. Here is President Trump reacting to the events.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity. The hearts of all Americans tonight are with those 2 members of the West Virginia National Guard and their families.
That was President Donald Trump. He has also ordered an additional 500 National Guard troops to Washington following the shooting. And lastly, JP Morgan has announced plans to build a new tower in London's Canary Wharf as its UK headquarters. The office building will span 3 million square feet and could host up to 12,000 employees. That's according to a statement from the investment bank. The construction is expected to take 6 years, with the building being designed by the British architect studio Foster & Partners, which previously designed the firm's global headquarters in New York. So those are our top stories for you this morning. Let's look at the markets this hour. So a little bit more benign sentiment. Global equities are rising on the All-Country World Index. In Asia, you've got gains. For example, the Nikkei up by more than 1.2%. European stock futures, though, are lower this morning. Gilts and sterling climbed after the budget yesterday. 30-year UK gilt yields fell 12 basis points, its biggest daily drop since April. The dollar this morning is down. Bitcoin regains a 91 1,000 handle. So reclaiming that level for the cryptocurrency. Those are the markets. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience.
This is a difficult one because if you've got a family that are on these credits for children, and they've got more children and they genuinely can't work, or we need to look after those kids and keep them out of poverty. But by the same token, there's potentially a real trap here where we finance people to stay at home, give them all these universal credits, and they're not really motivated to go to work. Now, the devil's in this detail. I don't know if they're going to find a way of driving people into work. But we've got 1 million young people between 20 and 30 out of work. That has to be solved. But we have to create jobs for them and motivation for the future, and that's where the inward investment comes in.
Isn't the best way to do it growth? This is what we're lacking here at the moment. Yes, the budget ticked all the boxes yesterday. Yes, it was maybe the budget that we all should have expected. But it wasn't a budget that is going to significantly change the economic trajectory of this country.
No, absolutely not.
How do we do that? You've run a business. Tell me.
It's relatively simple. First of all, we are where we are financially, so that gives us a difficult headwind. But we go out, we send 20 titans of industry all around the world, meeting businesses that might come to the UK, which have been previously not found by...
I thought businesses were leaving the UK at the moment. I thought people were leaving the UK, not
yes,
coming
but
in.
that's not businesses. That's not businesses leaving the UK. It's rich people. But to my point earlier, if rich people leave the UK, will rich people who want to bring a business to the UK come? We need to make everything business friendly, and the last budget was not business friendly or rich friendly. But we are where we are now. What we do now is we send 20 titans of industry out into businesses to research what do we need to do to get you to move your business into the UK. And corporation tax would definitely be one of those, but also a concierge service to make it easy to move to the UK, to reduce restrictions and bureaucracy. And if we do all of that and drive these people in really proactively, go and find them and negotiate with them to come in. And we create high-paid jobs because they're all in the high technology spaces and environment, medicine, you know, all those areas where there's a lot of money to be made. We can then pay higher salaries to people, and if those businesses achieve the number of employees that they forecast and the higher salaries, then they get a reduced corporation tax. That costs the government nothing because we haven't got those businesses. And what we do is produce GDP growth for Britain. It's a simple formula. It's, you know, it's a hard task to do. That's why I use the expression titans of industry. People who would volunteer to go and do this job.
So that's advice, perhaps, if she's shaping the next budget. We'll see whether she's listening and whether we get any
Well, you know, that's not even a budget issue, though. I've been telling them they should do this for years.
Well, yes, and they could be doing it between budgets.
Any time. It's nothing to do with budget.
Now, you've been talking about growth, John. You've been outspoken on green growth in the past and the need to get more green growth in the UK. What do you make of that agenda in the UK right now, in particular the EV road pricing model?
I think it's all a bit of a muddle, to be honest, and it's all sending mixed messages, because what people will take away is that they've got to pay 3 pence a mile, I think it's from 2028, on their electric vehicle. Now, if you're going to go to a 3 pence a mile or cost per mile, why not scrap road excise licence altogether and have every vehicle owner paying a pay-per-use on the mileage?
Maybe this is the start of that.
Well, maybe it is, but why not just do it? Be radical. What we need is radicalism that changes the UK for the better and that simplifies things and makes it a clear, simple formula. So the cost per mile on EVs could be a much lower level than the cost per mile on diesel engines and petrol engines, to drive the right behaviour and to just have one simple formula.
You're staying, right? You're not going anywhere.
I'm staying. I'm not going to stay here for very long because it's a bit cold.
You're dressed for the London weather.
And on that note, what a perfect point. We will conclude the conversation. Lovely to see you, John. Thanks for stopping by.
Okay, pleasure, thank you.
Here, British entrepreneur, John Caldwell. That wraps things up. We have spent the morning out here digesting, discussing the budget. Have we reached any conclusions?
Well, I think growth came out from that, those clips.
Yes.
You know, people reflecting on, well, okay, that was all very well, but where's the growth? That was the big message.
There's growth, there's more taxation. If we don't get growth, then at least maybe the fiscal finances will get solved. There is maybe a silver lining.
Okay, happy Thanksgiving Day.
Thank you. Thank
Yes,
you.
I want to find pumpkin pie.
Yes, we're going to go do some turkey eating after this. That does it for the opening trade. The Pulse is up next. Thank you for joining us today. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
On the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
In case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
Coffee
lovely Tara.
coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's
Okay.
You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade. Live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it on Bloomberg Open Interest.
Well, if you're worried about inflation, maybe buy gold. If you're worried about tariffs, maybe buy gold. If you're worried that markets are too overvalued with the equity market and with credit spreads incredibly tight, buy gold.
What people are not talking about that they should be talking about is every major currency in the world is collapsing relative to gold. It's been going on for decades.
Don't miss Open Interest live weekdays.
Global stocks gain as traders raise bets that the Fed will cut rates next month. Traders are also locking in a December cut by the Bank of England as the pain of tax rises in the budget is actually postponed. Shares in Puma soar on reports that China's Anta Sports is considering a takeover. We'll have more on that Bloomberg scoop. Plus, JP Morgan announces plans to build a new tower in Canary Wharf in what will be the UK's largest office building. So this is an artist's impression. We have a lot going on, actually, between new buildings in Canary Wharf and the markets left, right, and center. Now, this is a picture for the European Stock 600. Again, they're pretty much flat. I have to say the mood for the moment is very focused on the Fed. We had the budget here in the UK yesterday. It hasn't really moved markets that much, although there is a bit of a move on gilts just as traders are digesting exactly what it means for future spending. Now, look, global equities, again, on track for the longest winning streak this month. It does reflect the strength of a recovery that's, again, fueled by these bets that the Fed will probably cut interest rates sooner than previously thought. The CAC 40 down 0.1%, and then you can see the DAX, and over in Milan, the FTSE MIB gaining a touch. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. Happy Thanksgiving to those that celebrate. I'm Francine Lacqua here in London. Global equities close to erasing their November losses, revived by growth optimism, or by growing optimism that the Fed will cut interest rates. Now, sentiment also supported by the possibility of a more dovish new U.S. central bank chief. So we're now joined by Claudia Panzeri, Chief Investment Officer in France for UBS Wealth Management. Claudia, thank you for joining us. I mean, look, there's a lot going on. There's always concerns about valuations in the markets, especially when it comes to AI. So we have this like pull and start from the markets. But actually, if you look at the Fed and Fed expectations, the markets are fine because they're expecting a cut.
Yeah, so thank you for having me this morning, Francine. I think the market is very focused on what the Fed is going to do in December, and we are expecting 25 basis point rate cut. The market probability about the rate cut has been decreasing a few weeks ago and now moving back to 80%, so that is quite important. The rate cut in an environment where we see some slowdown in employment market, even if we haven't seen the data for a few weeks now, now is supporting multiple expansion. And I have to say that while many clients are concerned about this multiple expansion in US, there is still growth there in terms of earnings. And so the earnings season was pretty good. And we recently upgraded US stocks, but also European stocks. So let's say we meet the market expectation in terms of future performance.
What's your take on equities in 2026? I know we're close to the end of the year, so there's the outlook that's coming up for the year ahead. If you look at AI valuations, are they going to be problematic?
I think one of the particular element is that demand is still there. When we look into the rate of implementation of AI across the different industry remains still very low. So for the time being, what we see are CapEx spending, which has been very strong this year. We have expectation of CapEx rising 2026 and 2027. Demand is also increasing. So valuation in some cases is a bit stretched. But when you look into the companies which will benefit of AI implementation, valuation is around the long-term average. I'm thinking about companies which will implement AI, not only hyperscaler, but really application, and then valuation are around 20 times and not 28 times when we look into semiconductor. When we look into the overall landscape for 2026, with rate being down, multiple expansion can be continued to increase. So we are not concerned about the valuation right now. Volatility will probably increase from time to time. It depends over the last 2 weeks. But we are still convinced that AI will be a big driver for next year. What we are doing, we are more, I say, more diversified than in the past, so that's also help.
So how do you diversify your income? And I know, for example, you like commodities, but you also want to take advantage of what's happening in China.
I think in terms of diversification, within the equity space, we have increased Europe, where valuations are quite attractive, but also where we expect 2026 and 2027 growth to pick up after a few years of zero growth. We have been moving positive on Japan with the fiscal support that could push a bit not only the growth on the economy, but also economy on the earnings side. And we have been positive on Chinese stocks, especially Chinese stocks which are linked to AI. So relative to the past, where we have been focused essentially only on US stocks, we are now more expanding our overweight, our preference in our region. And then in terms of diversification, we remain very diversified across asset class. Our call on fixed income is still positive. We are still positioned on high-grade bonds and commodities more recently, with gold diversifying and reducing volatility across portfolio. So clearly, 2026 is less concentrated than it was 2025 in terms of allocation, but also we see more growth coming and the Fed continuing to cut into early next year. So really, we're still very positive about the global outlook.
Okay, Claudia, don't go anywhere. Of course, Claudia Panseri stays with us because we'll now focus on the UK. Of course, it was budget day. Markets reacting positively, more or less, or kind of muted, I would say, after the UK Chancellor Rachel Reeves delivered her autumn budget. Now, Reeves also boosted her fiscal buffer with tax rises totaling £26 billion.
I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Now, the shadow Chancellor of the Exchequer said it was, quote, utterly outrageous and potentially criminal that the OBR released the budget before the Chancellor gave her speech.
It is unprecedented that this should have happened, that you have a Chancellor of the Exchequer standing up in the House of Commons whilst the entire contents of the budget has been released by the OBR about an hour before she did so. That is clearly completely unacceptable. So we do need a thorough investigation into it to understand exactly what has happened and therefore what consequences should follow.
Well, joining us now is Kit Reese, co-editor of Bloomberg Markets Today. Kit, so first of all, I mean, there's two things, right? First, the OBR budget leak, which I'm assuming and hoping it will be dealt with rather firmly, and this we understand is like a digital security lesson maybe for others. But the bigger part, the budget was okay. It didn't ruffle any feathers. But do we worry about growth in the future?
Yeah, well, this is the really big question. I mean, markets seem to be breathing a sigh of relief that after weeks of chaos, speculation, and U-turns, that, it was pretty much in line with expectations. So there are 88 measures, a huge amount to get through, lots for markets to digest. And while, they are breathing a sigh of relief that it is as expected, a bigger focus on tax, raising tax in order to fund spending cuts, there's this big question over growth. And ultimately, is it going to kickstart the economy, which looks kind of unlikely at the moment. So we'll be hearing, of course, from business leaders and think tanks and the rest of it on what it could mean. But overall, there's still quite a lot of questions left there.
I mean, if you look at the reaction from the markets, I mean, again, it's muted and then you have a little bit of flare-ups as they're trying to digest. I had understood that this budget was never going to be growth positive. So is it in locksteps? You kind of, try and deal with it now, keep the show on the road, and then you take bolder measures further down the road?
Yeah, that seems to be very much the case. So kind of like spend now and tax later, and these things are being pushed out into further years. So there's a lot of uncertainty around that. And of course, with so many measures, lots of this sort of smorgasbord approach, which has been touted, where we have lots of little tweaks, it's not really certain how this will filter down into the economy and affect things later on. Also, it is the Thanksgiving holiday, so liquidity is going to be a bit lower. So any moves that happen, they might be exacerbated, and it might take a few days for this to properly filter through the market. So there's still a lot going on, still a lot to digest, questions over growth and the measures and getting through it all. So we'll see how it plays out in the next couple of days for sure.
Yeah, you're absolutely right. Volumes are muted, so you could see some flare-ups out of nowhere. Kit, as always, thank you so much. Kit Reese there, our co-editor of Bloomberg Markets Today. Now, to discuss the impact of the budget, let's get back to Claudia Panseri from UBS. Claudia, I mean, your take, again, the market, I guess, is now doing a bit of yoga. They're saying, okay, let's see what happens next. And she kind of calibrated, the chancellor calibrated so that there were no huge surprises.
So I think there are two elements which are quite positive. And I mean, we would love this kind of budget in France and this fiscal room. The first one is the deficit trajectory. So the deficit trajectory is going down. So that is very positive. And the second one is bond issuance. When you think about the market would have been expect much more bond issuance for next year, the reaction will have been negative. And these two elements are taken positively from the fixed income investors. The third element probably is about the Bank of England. I've heard many comments say that the economy will slow down, but at the same time you have a BOE which will cut rate in December, and then still, according to our scenario, 2 times next year. So I think the risk of growth is offset by monetary policy. So on one side you have some fiscal, let's say, discipline, and on the other side you have a monetary policy able to offset the risk on growth. So this is the reason why the market has been reacting well yesterday.
Yeah, and Claudia, I mean, to your very good point, the OBR was also saying that, these plans will basically knock off some 0.5 percentage points off inflation the second quarter of next year. So was this thought out to give a helping hand to the BOE?
Yeah, exactly. That is also the point. The implementation of the different tools which have been used to push down inflation, that will be positive and will push the BOE cutting rates, which is not always expected by the market. So you may have the short-term end of the yield curve moving down a bit, and that will help as well, to balance the risk I was mentioning before about growth. And everyone is mentioning that there will be impact on growth because of the rise on tax. I mean, once again, I think the UK situation is much better than the French one.
Yes, it's always relative. Claudia, thank you so much for joining us. Claudia Panseri, Chief Investment Officer, France for UBS Wealth Management. We'll talk extensively about France as well. Coming up, we speak to the President of the European Bank for Reconstruction and Development on Ukraine's IMF deal. That's next, and this is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
Entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francie Lacqua here in London. Now, at least 44 people have been killed and hundreds are still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Our China correspondent Min Lo has the latest from the scene.
I'm right here at the scene of the fire in Tai Po, the most devastating fire that Hong Kong has experienced since 1962. It started yesterday at 3 p.m. We're well into the second day now, and yet firefighters are still trying to put out the fire. Rescue efforts are ongoing, and then the crux of the issue is what exactly caused this fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards. They found flammable materials like styrofoam boards sealing some of the windows, and they have arrested 3 people from the engineering firm for manslaughter and gross negligence. And residents certainly are demanding answers from the government as to why this was allowed to happen. Many of the residents are just completely shocked and heartbroken. They're figuring out what is the longer-term housing situation, and the authorities are now converting some schools in the vicinity into temporary shelters for them. But it's going to be a long, harrowing night for many of these displaced residents. Min Lo, Bloomberg News, Hong Kong.
Well, that's our China correspondent Min Lo. Now, 2 U.S. National Guard troops have been critically wounded in a shooting just blocks from the White House. Officials say a gunman was taken into custody after another guardsman returned fire and moved in to stop him. President Trump was in Florida at the time, but has ordered an additional 500 troops deployed to the nation's capital.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
Now, Puma is the biggest gainer on the Stock 600 today, following news that the Chinese sportswear company Anta Sports is believed to be amongst the firms exploring a potential takeover. Sources say that Anta, which is listed in Hong Kong and owns brands including Fila, has been working with an advisor to evaluate a bid for Puma, whose shares have fallen more than 60% this year. Now, let's bring in our Manuel Baigori, our team leader for Asia Deals in Hong Kong. Manuel, Puma shares have really struggled this year. So what's the appeal for a Chinese bidder?
Francine. The appeal is mostly to continue to expand and to get hold of a very iconic global brand such as Puma. As you well said, the company has been struggling. That's been reflected in the share price this last year. The company also had a new CEO in place. They held a capital markets day a couple of weeks ago with the expectation that a new strategy and a focus on new marketing and new products would rev up and kind of like create a little bit of a catalyst for the stock, but that doesn't seem to play out that well so far. Now the question is at what price this company can trade. Shareholders, including the Pinot family, who have a significant stake in the company, obviously, they have very high price expectations. Just a year ago, the stock was trading at 45 euros a share versus 15 euros a share, excluding the bump today, following the exclusive from Bloomberg News. So there is a bit of a gap there that needs to be bridged between potential buyers and sellers. Meanwhile, bidders including Anta and Li-Ning, two very well-known sportswear companies in China, as well as ASICS, are doing some preliminary work, talking to prospective advisors, also potential partners, including private equity firms and financing banks, to see if they can put together a bid. So it's slowly moving. There is work behind the scenes being done, but there is a very wide bid-ask gap there that will have, to be addressed and may become a challenge.
Yeah. Manuel, thank you so much, as always, for that briefing. Manuel Bagori there, our team leader for Asia deals in Hong Kong. Now, the IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the war-torn nation's international allies. This comes as the repercussions of the war are being felt economically in both Ukraine and Russia. Now, we're joined by Odile Renaud-Basso, President of the European Bank for Reconstruction and Development. Thank you, as always, for joining us. I mean, it's been a complicated situation, frankly, for Ukraine over the last 2 weeks, with the comings and goings with the U.S., the allegations of corruption, very close also to President Zelensky. And then we have the news that actually at the staff level, there could be this big loan from the IMF. How much of this is a game changer?
I think this is a very positive news. I was in Ukraine last week when the IMF was discussing with the authorities, and I think that having this agreement at the staff level on a macroeconomic program for Ukraine is very positive, because it creates an anchor for the policies to be implemented and for supporting countries to continue to support Ukraine in its difficult situation.
Odile, this is basically a 48-month arrangement, right? Under the extended fund facility, so they could potentially, access $8 billion, but there are conditions attached, including adequate financing assurances from donors. What does that mean for what Ukraine actually has to do in terms of concrete steps?
So there are two elements. The first one is indeed they need financial contribution to support the program, as it was in the previous program, and that's where the EU funding is very important, because the European Union is one of the key funding partners for Ukraine program, macroeconomic program, together with other G7 countries such as Canada, Japan, and so forth. So setting the support is very important. And the second one is a policy that Ukrainians need to continue to implement in terms of reform, anti-corruption functioning bodies, progress in the governance of the state on enterprise, but also fiscal efforts in order to improve tax collection, enhance the tax base, and so forth, so as to have also the capacity to provide more internal resources to finance the big deficit and the war effort.
How delicate is the situation on the ground, given all of these corruption allegations?
So the situation is delicate, first of all, because of the war, and a lot of attacks on civilian infrastructure, on energy infrastructure. So a lot. the situation is, for example, on access to electricity, access to energy, very challenging. This is our top priority at the bank, to ensure that Ukraine has the capacity to support the winter through, for example, providing heating to people, and we work a lot with the authorities on an additional support for the gas company in order to be able to buy more gas and to have supply through the winter, but also build up more generation capacity. So the energy situation is very, very fragile and very worrying. And of course, for people living in Ukraine, it's a very difficult situation because you have a lot of alerts, a lot of civilian victims, and of course the situation of the front is also difficult. But overall, the resilience, the determination of the country is important. You mentioned the issue of corruption. Indeed, there is this investigation going on. On the positive side, having effective anti-corruption body that can investigate freely, on the public and pursue the people who have been at the core of it is very important, and this is a very positive step. The role of civil society in Ukraine to support also this anti-corruption bodies and so forth is key, as we've seen in the summer, and this is a good progress, and this will need to be followed up, of course.
Have you? I was going to ask, because this corruption scandal, has rattled a lot of Western investors, has rattled a lot of Western allies. Have you thought about it differently in terms of putting actually things in place to make sure that it's ring-fenced?
So we've worked already, for a long time on governance, for example, because this case is related to one state-owned enterprise, Energoatom, who is in the nuclear sector, and so state-owned company governance was for us
ओके गाइस, क्रूड ऑयल में देखो यहाँ पर एक एफईजी है। इसी एफईजी पे प्राइस काफ़ी टाइम से रुका हुआ है, ऊपर जाने का नाम ही नहीं ले रहा है। इस पर्टिकुलर एफईजी से ऊपर रेजिस्टेंस 5350 360 के अराउंड ही है। इस पर्टिकुलर एक बार सेलिंग आई थी, लो बनाया था, दूसरे बार लोअर लो, थर्ड टाइम एक और लोअर लो बना है, तो स्ट्रॉन्ग ही है। बट देयर जो एफईजी नीचे सपोर्ट से परसों ही सपोर्ट ले चुका है, तो बार बार इस एफईजी पर रुक रहा है। चांसेस है एफईजी ब्रेक करता है तो मेरे अकॉर्डिंग फिर निकलना चाहिए ऊपर की ओर। मल्टीपल टाइम रिजेक्शन इस पर्टिकुलर जोन से भी मिल चुका है मार्केट को। परसों एक बार सेल ऑफ आया था 21 को, उसके बाद 25 को सडनली जो मोमेंटम आया था। इवन तो मार्केट फिर भी रिकवर करता जा रहा है। बेस्ट केस सिनेरियो ये रहेगा कि नीचे कोई सपोर्ट बनाता हुआ अगर आता है पुल बैक में, वहाँ तक गिरे, अगर गिर नहीं है या फिर अगर ब्रेकआउट करता है। परसों क्रूड ऑयल इस लोअर एंड से सपोर्ट लेके गया नीचे, सपोर्ट बहुत बड़ा है, मैंने छोटा कर दिया है वैसे वो 5040 तक पूरा सपोर्ट जोन ही है। इस लेवल पे भी देखोगे मार्केट मल्टीपल टाइम होल्ड करके गया है। रेजिस्टेंस था काफ़ी स्ट्रॉन्ग, सेल ऑफ आया था, फिर एक ब्रेकआउट हुआ था 23 अक्टूबर को, पहली बार रीटेस्ट 13 नवंबर को हुआ, उसके बाद से फिर रीटेस्ट में ही है। 21 नवंबर को रीटेस्ट, देन 25 नवंबर को रीटेस्ट, फिर कल भी रीटेस्ट जोन पर ही था 26 नवंबर को। एक ही चीज़ थोड़ा सा इशू है, ये पहली बार जब यहाँ से ब्रेकआउट हुआ था रेजिस्टेंस का हाई बनाया था, दूसरे बार लोअर हाई, फिर तीसरे बार एक और लोअर हाई है। फिलहाल के लिए रीटेस्ट टू रीटेस्ट फंसा हुआ है एज अ सपोर्ट एंड रेजिस्टेंस। ऊपर मैं मान के चल रहा हूँ कि ये रेजिस्टेंस है, थोड़ा बहुत होल्ड करना चाहिए अपर लेवल पे आके, नीचे से कोई सपोर्ट बनाएगा तो बेटर है, यहाँ से नहीं तो एक और सेलिंग का ही प्लान करेंगे, बट थोड़ा सा अपर लेवल से, क्योंकि रीटेस्ट का बिल्कुल बॉटम सब टेस्ट हो चुके हैं, टॉप अभी भी पेंडिंग है। जैसे नीचे वाला सपोर्ट होल्ड करके बैठा हुआ था काफ़ी टाइम से अपर लेवल पे, एक फाइनली लोअर एंड टच करना बचा था, वो परसों हो गया है। ये क्रूड ऑयल की करंट कैंडल भी इंपॉर्टेंट ही लग रही है। अगर इसकी क्लोजिंग, अभी तो टाइम है खैर 6 मिनट, इसकी क्लोजिंग आती है 5260 के ऊपर तो बढ़िया रहेगा। अगर 5260 के ऊपर क्लोजिंग नहीं आती है तब थोड़ा सा फिर इशू है इस पर्टिकुलर जोन पे वापस से सेल इन द सेंस ऑफ तब फिर से स्ट्रॉन्ग ही रहेंगे। इंडियन मार्केट भी ऑलमोस्ट क्लोजिंग पर ही है, 15 मिनट रह गए हैं। बाकी नहीं आ रही है कैंडल क्लोज नेचुरल गैस की, सॉरी क्रूड ऑयल की। एक ही है फिलहाल के लिए, स्टिल दिस इज ए रेजिस्टेंस एरिया। निफ्टी ऑलमोस्ट न्यूट्रली क्लोज हो रहा है, सपोर्ट के ऊपर ही क्लोज हुआ है 15 मिनट में फ्यूचर तो निफ्टी का। सपोर्ट ब्रेक नहीं किया आज भी इंट्राडे का, गैप अप हुआ था, नीचे आया, सपोर्ट लिया, बैक। तक ये ब्रेक डाउन नहीं करता नीचे 26,290 फ्यूचर में, तब तक सपोर्ट पर ही है। देखते हैं ज़्यादा ऊपर अगर नहीं गया, यहीं पर एक रेजिस्टेंस क्रिएट किया, या फिर अगर कल गैप डाउन ओपन होता है तब चांसेस रहेंगे एक ब्रेक डाउन के। गैप अप फ्लैट ओपनिंग और ऊपर जाता रहता है तो फिर स्टिल बुलिश इंट्राडे। अगर अभी इंट्राडे में 26,350 के नीचे क्लोजिंग आती है, मान लो कल गैप डाउन होता है इसके नीचे, या गैप अप या फ्लैट ओपन होकर इसके नीचे क्लोज करता है, तब फिर नीचे का सपोर्ट ब्रेक होने के चांसेस है। 26,400 के ऊपर जितना जाता रहेगा, बुलिस कंटिन्यूएशन, बुलिसनेस बनी रहेगी, कंटिन्यू बना रहेगा बुलिस। क्वेश्चन हो तो कमेंट बॉक्स में बाकी पूछ सकते। मार्केट ओपन है बाय द वे, कल ब्लैक फ्राइडे है, तो यूएस में जो यूएस मार्केट है वो थोड़ा जल्दी क्लोज हो जाता है। वैसे जो यूएस मार्केट की क्लोजिंग की टाइम है इंडियन टाइम के अकॉर्डिंग रात को 2:30 बजे के आसपास है तो क्लोज होता है, बट कल ड्यू टू ब्लैक फ्राइडे अर्ली क्लोजिंग हो जाएगी इंडियन टाइम के अकॉर्डिंग। रात को 10:30 बजे ही यूएस मार्केट क्लोज जाएगा, फिर परसों और उसके अगले दिन सैटरडे संडे 2 दिन मार्केट क्लोज है। बाकी सेबी की ओर से शायद प्रपोजल आया है, सेबी भी स्टॉक्स में जो आप ट्रेड करते हैं फ्यूचर में या फिर ऑप्शन में, ऑप्शन सेल करो या फिर फ्यूचर सेल करो, फ्यूचर बाई करो या फिर ऑप्शन कॉल पुट सेल कर रहे हो, तो वहाँ पर मार्जिन की ज़रूरत पड़ती थी। शायद वो मार्जिन रिड्यूस हो सकता है। फिलहाल तो स्टॉक्स का ही पता है, निफ्टी बैंक निफ्टी में होगा नहीं होगा, डोंट नो। कैश मार्केट मतलब हो गया आपका इक्विटी मार्केट, स्टॉक्स, तो उनके डेरिवेटिव अगर आप ट्रेड करते हो तो वहाँ पर जो मार्जिन रिक्वायरमेंट अभी है बहुत ज़्यादा ही है वो वैसे भी, तो देयर इज अ चांसेस कंसिडर कर रहा है सेबी की उसको रिड्यूस करके मार्जिन रिक्वायरमेंट है, मार्केट में लिक्विडिटी को बढ़ाया जाए और पार्टिसिपेंट्स इंक्रीज किए जाएं कैश मार्केट में। ठीक है, बढ़िया है वैसे अगर ऐसा हो जाता है स्टॉक्स में भी, क्योंकि अभी बहुत ज़्यादा मार्जिन रिक्वायर्ड है। अगर आप फ्यूचर करो या फिर ऑप्शन सेलिंग करो स्टॉक्स की जो डेरिवेटिव में अवेलेबल है, बहुत ज़्यादा मार्जिन है वहाँ पे। क्रूड ऑयल थोड़ा और ऊपर आना चाहिए, अभी आया नहीं है एग्जैक्ट लेवल पे। बिटकॉइन को भी देखोगे थोड़ा बहुत रिकवर रिसेंट टाइम में कर तो दिया है इसने लोअर एंड से, बट इतना कुछ खास नहीं। इंट्राडे में आज भी थोड़ा सा वीकली टाइम फ्रेम की, क्योंकि जो कैंडल हुई थी कंटिन्यूसली सेल ऑफ ही आ रहा था, इस मंथ थोड़ा बहुत प्रॉफिट बुकिंग स्टार्ट हो गई है वापस से। एंड इफ यू लुक एट द राइट नाउ इन लाइक हायर टाइम फ्रेम, लाइक 4 आवर टाइम फ्रेम, जो लास्ट बॉटम बनाया था अराउंड 80,000 के अप्रॉक्सीमेटली, 81,000 के आसपास, वहाँ से एक मोमेंटम काफ़ी अच्छा है, नॉट दैट मच बट एज पर द प्राइस अराउंड 13%। तो मंथली टाइम फ्रेम की जो कैंडल है वो भी क्लोज होने में अभी 3 दिन है, देखते हैं कितना और रिकवरी पे जाती है अपसाइड की ओर। जिस तरह से गिर रहा है ना, अगर नीचे आता ही है तो फिर 35,000 से 55,000 के बीच में हायर टाइम फ्रेम पे, तो वहाँ तक सपोर्ट एरिया है, सपोर्ट क्या रिटेस्ट जोन है। पहले ब्रेकआउट हुआ था, रिटेस्ट किया नहीं है आज तक। 2024 में ब्रेकआउट हुआ था, उसके बाद से रैली में ही है, तो हो सकता है रिटेस्ट करने आ जाए। 150% मोमेंटम चला गया था उस समय। सपोर्ट था, ऊपर से रेजिस्टेंस, दोनों जगह फाइट हुई है।
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. Chancellor Rachel Reeves raised taxes on 1.7 million workers and the wealthy to pay for welfare spending and build up her fiscal headroom. It is her second tax hiking budget in a row, with levies on savings, properties worth more than £2 million and a range of other measures. Speaking after her budget in an exclusive Bloomberg interview, the Chancellor refused to rule out more tax hikes in future.
I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Although the Chancellor touted growth, the Office for Budget Responsibility downgraded economic growth in every remaining year of this Parliament. But investors have so far reacted positively to the budget, which set aside more money as a buffer against gilt market swings. So did Labour's rank-and-file MPs, who were pleased to see a cap on welfare payments to families with multiple children lifted. But question remains about whether Reeves did enough in her budget to help her and Prime Minister Keir Starmer to survive. The pair are Britain's most unpopular Prime Minister and Chancellor since polls began in the 1970s. Well, the UK government is expecting a bigger windfall from its taxes on non-domiciled residents, despite reports of many of them leaving. The Treasury expects to take in nearly £40 billion from people who live in Britain but keep their wealth overseas. Billionaire founders like Revolut's Nick Stronsky and Checkout.com's Guillaume Pouzaz are among those who have publicly left Britain thanks to those measures. Now elsewhere, Hong Kong's deadliest residential fire in decades has killed at least 44 people, with hundreds still missing and unaccounted for. An 8-tower housing complex has been burning for over 20 hours, throwing fresh scrutiny on the city's housing standards. Our China correspondent Min Lo says a number of issues could have caused the blaze.
The crux of the issue is what exactly caused this fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards.
Bloomberg's Min Lo speaking there. Rescue operations are expected to stretch into this evening, more than 24 hours after the blaze started. Chinese President Xi Jinping has urged all-out efforts to reduce casualties. Global equities are close to erasing their November losses as rising bets for Federal Reserve interest rate cuts have revived markets. The MSCI All-Country World Index has climbed for another day this morning, cutting its November drop to just 0.5%. The moves have tracked increased confidence about Fed rate reductions. Money markets are pricing in roughly an 80% chance of a quarter-point rate reduction next month, and then 3 more by the end of 2026. The moves come as the central bank's Beige Book survey of regional businesses showed employment declining slightly and prices rising moderately, with US economic activity little changed in recent weeks. 2 members of the US National Guard are now in critical condition after being shot near the White House. The suspect was also shot before being taken into custody by other Guard members and Washington, D.C. police. Authorities say that the suspect, a 29-year-old Afghan national, a short time after his nationality was revealed, the US government said that effective immediately, the country has stopped processing immigration requests from Afghan nationals. Here is President Trump reacting to the events.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity. The hearts of all Americans tonight are with those 2 members of the West Virginia National Guard and their families.
That was President Donald Trump. He has also ordered an additional 500 National Guard troops to Washington following the shooting. And lastly, JP Morgan has announced plans to build a new tower in London's Canary Wharf as its UK headquarters. The office building will span 3 million square feet and could host up to 12,000 employees. That's according to a statement from the investment bank. The construction is expected to take 6 years, with the building being designed by the British architect studio Foster & Partners, which previously designed the firm's global headquarters in New York. So those are our top stories for you this morning. Let's look at the markets this hour. So a little bit more benign sentiment. Global equities are rising on the All Country World Index. In Asia, you've got gains. For example, the Nikkei up by more than 1.2%. European stock futures, though, are lower this morning. Gilts and sterling climbed after the budget yesterday. 30-year UK gilt yields fell 12 basis points, its biggest daily drop since April. The dollar this morning is down. Bitcoin regains a 91,000 handle, so reclaiming that level for the cryptocurrency. Those are the markets.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines.
Hi, I'm Kim Vanell in Wanganui, New Zealand. It's Wednesday, November 26th. Today, Zelensky says he's ready to advance a US-brokered peace plan, as sources tell Reuters it drew from a Russian document. Nigeria grapples with mass abductions and allegations of Christian targeting. Thanksgiving travel ramps up, but not as much as you might think. And Shein goes to court in France. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. We start with a Reuters exclusive, which has found that the US-backed 28-point peace plan touted by President Donald Trump for ending the war in Ukraine drew from a Russian-authored paper. There's been criticism among some Ukrainian, European, and even US officials that the proposal is too sympathetic to Moscow. It's now been revealed that the Russians shared their conditions for ending the war with senior US officials last month. Conditions like Ukraine ceding more territory in the east. That paper became a key input for the plan the US eventually put forward. Before our exclusive was published, Ukraine's president said he's ready to move forward after a meeting in Geneva where all sides, bar Russia, worked on the US proposal to make it more palatable.
And I'm ready to meet with President Trump. And there are sensitive points to discuss. We have them still.
The White House didn't comment directly on the Russian paper, but cited Trump's comments that he is optimistic about the 28-point plan's progress. The FBI is calling 6 Democrats in for interviews after the lawmakers posted a video telling US troops they can refuse unlawful orders.
You can refuse illegal orders.
You can refuse illegal orders.
President Donald Trump has accused the group of sedition. As we reported yesterday, the Pentagon has also weighed in, threatening to recall one of the lawmakers, Senator Mark Kelly, to active duty as he's a Navy veteran and could potentially face military charges. The group say they were simply reflecting US law that troops swear an oath to the Constitution, not to the president. A Justice Department official says the interviews they're asking for are to see if any laws were broken. Some big news now for anyone on Medicare. The program has negotiated lower prices for 15 of its most expensive drugs, including popular treatments like Ozempic and Wegovy. From 2027, Ozempic will cost about $280 a month, down from more than $400. Other drugs for cancer, lung disease, and asthma are also dropping by thousands of dollars. The pharmaceutical industry has opposed Medicare price negotiations. President Trump says China's Xi Jinping has more or less agreed to accelerate the purchase of US goods after resuming purchases of American soybeans, but at a slower than expected pace. For more market news, we have the host of Reuters' new finance and markets podcast, Morning Bid, Mike Dolan. Hey, Mike, what's happening today?
Hi, Kim. Today we're going to be talking about a fascinating juncture in Wall Street's AI story. Nvidia down, Alphabet up, winners and losers. We're also going to be talking about President Trump's likely new pick for Fed chair, probably before Christmas. And we'll talk about Britain's critical and long-awaited budget and how UK markets are reacting just ahead of that later today. So if you want to hear more on those subjects, please tune into the podcast later.
Thanks, Mike. Make sure to follow Reuters Morning Bid so you never miss an episode, or you can ask your smart speaker to play it maybe right after this. A mother waits for information about her kidnapped child, one of more than 300 taken from a Catholic school in Nigeria. Last week's mass abduction in the northwest of the country is the latest in a series of similar attacks. 24 girls taken from a different boarding school in Kebbi have just been released. Details of how or why they were released are still unknown. But as Nigeria Bureau Chief McDonald Zerotwe explains, money is often the motivation for this type of abduction.
Kidnappers often ask for ransom, and parents, obviously worried about the safety of their children, they will scramble, sell anything they have from furniture, savings, whether it's grain in their reserves, just to make sure they raise money to pay the abductors. These incidents usually follow a familiar pattern. They happen in the early hours. Most of these schools are located in remote parts of the country where security is thin. The security apparatus in Nigeria is a little stretched. So you would imagine that most of these schools, there is absolutely no state security whatsoever. They are left to organize their own security.
And McDonald says that a lack of security is being compounded due to pressure from the US.
Donald Trump has said that Nigeria is allowing Christians to be killed. And because of that narrative, this is a big challenge for Nigeria to make sure that it gets its act together in terms of ramping up security for everyone. Because some of the worst affected areas are actually in the north, which is largely a Muslim region.
A record number of Americans were supposed to fly this Thanksgiving, but a 42-day government shutdown has changed that. Travellers have been spooked by weeks of cancellations and delays, many deciding it's not worth the risk. Flight bookings for the holiday are down nearly 4.5% from last year. Doyensolo Oladipo covers travel and spoke to us from Newark International Airport.
Many Americans actually made their decision to fly or not fly for Thanksgiving in the middle of the shutdown. When they were seeing flight cuts being mandated across 40 U.S. airports, many said, I'm just not going to travel this year. Once that shutdown ended, many of them did not change their mind. Now, airlines are split, with some saying they're expecting record travelers and some saying they can't even forecast how many travelers they will see due to the shutdown. And the holiday travel period is when many airlines expect many bookings, they expect healthy demand. So if you have the impact of the shutdown lingering into Christmas and the holidays, it could impact their bottom line.
In Gaza City, Nora Carrera uses a pot to clear pooled water from between tents. She says she's trying to stop her children from getting sick. Heavy rain has been swamping the tents of thousands of homeless Palestinians facing the prospect of harsh winter storms without sturdy shelter. The United Nations says it's working to bring winter supplies into Gaza, but the number of trucks able to enter the enclave is being limited by Israeli curbs on aid groups. Israel says it is complying fully with obligations under the truce deal and doesn't stop any aid from entering Gaza. While shoppers in Paris might be perusing the racks in Shein's first brick-and-mortar store, the fashion giant is in court in Paris today, facing a 3-month suspension of its online shopping site in France. French officials want to see Shein show more concrete measures to protect French consumers from harmful content after childlike sex dolls and banned weapons were found on the site via third-party sellers. Helen Reid covers the European retail industry.
The French government is really using every rule in the book to try and pin Shein down. And their case really rests on a particular article of the digital economy law. We had a French finance ministry official who said Shein is clearly very powerful. They run a very successful, massive online platform. So why would it not have the technological and financial means to ensure that such products don't end up on the platform? If it is suspended in France, it would hit Shein just at the time when it's hoping to get many, many orders through for Christmas gifts. It's the busiest time of year for all retailers, of course, these weeks running up to Christmas. So it would be really terrible timing.
Helen says Shein has made some efforts to address France's concerns.
Shein decided to suspend its marketplace in France in order to review all of the sellers on there and to ensure what they called full adherence to French law and the highest standards of consumer protection. What the French government says is that there's basically nothing to say that if they reopen the marketplace tomorrow, that these products wouldn't be found on there again.
And for today's recommended read, a Reuters exclusive on how a team from Tulsi Gabbard's office surprised the CIA, pouncing on a secret warehouse to seize classified files on the assassinations of Robert F. Kennedy, John F. Kennedy, and Martin Luther King Jr. You can read more on that story in the pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favourite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Monica Ricks. The U.S. has stopped processing immigration requests from Afghan nationals, and President Trump has urged the Pentagon to deploy another 500 troops to Washington, D.C., following the shootings of 2 National Guardsmen.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
The 2 guardsmen remain in critical condition. The suspect was taken into custody but was also hospitalized after suffering injuries during his arrest. Metropolitan Police Assistant Chief Jeffrey Carroll says it appeared to be a targeted attack.
The suspect came around the corner, raised his arm with a firearm and discharged it at the National Guard members. The National Guard members, there were other members that were in the area. They were able to, after some back and forth, able to subdue the individual and bring them into custody.
The shooter is from Afghanistan and entered the U.S. through a refugee program in 2021. The Biden administration program provided entry to Afghan nationals fleeing the Taliban takeover of the country after the withdrawal of U.S. troops. But he was granted asylum by the Trump administration in April. Hong Kong's worst residential fire in more than half a century is now triggering worries that high-rise housing in China's cities could be susceptible to similar safety risks due to bamboo scaffolding. That fire has now killed at least 55 people. Hundreds are still missing. The holiday travel rush is on, and millions of Americans are packing airports and highways to get to their Thanksgiving dinner destinations. This man tried something different.
Last year we drove, and it can be kind of a hassle. So this year we decided to take the train.
Heavy snow is slowing some drivers down in the Midwest, but for the most part, people are hitting the road for the holiday thanks to lower gas prices. Patrick DeHaan is head of petroleum analysis at Gas Buddy and says the national average should dip below $3 a gallon soon.
Yeah, we saw another week of refinery utilization that's increasing, and this is telling us that refinery maintenance, which usually is happening in fall, is starting to wrap up, and that's going to put downward pressure on gas prices in the weeks ahead.
Hear more from Patrick DeHaan on the Bloomberg Balance of Power podcast. Prices usually spike again in spring. Global equities are close to erasing their November losses amid rising bets for Federal Reserve interest rate cuts. U.S. stocks shot up for its 4th session in a row Wednesday, the Dow adding 314 points, the Nasdaq up 189. Money markets, by the way, are pricing in a roughly 80% chance of a quarter-point rate cut next month and 3 more by the end of 2026. A week ago, traders expected 3 cuts total. Wall Street's on Thanksgiving break, but stocks are still trading overseas. The FTSE in London and the CAC in Paris are both pretty flat this hour. The DAX in Germany up 80 points, about 0.3%. The Nikkei in Japan closed up 608 points today, up 1.2%. The Hang Seng in Hong Kong and China's CSI 300 showed little change. Chancellor of the Exchequer, Rachel Reeves, announced $34 billion of tax increases in the UK this week in a budget that seeks to balance the demands of both bond traders and restive Labour backbenchers. She spoke exclusively about it with Bloomberg.
My focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Chancellor of the Exchequer, Rachel Reeves, on Bloomberg TV. And shortly after Reeves delivered her budget, JP Morgan Chase announced plans to build a new tower for its headquarters in the UK, which could host as many as 12,000 employees. Construction is expected to take 6 years. Here at home, more Americans are looking to buy homes despite higher borrowing costs. Here's Bloomberg's Dan Schwartzman.
Mortgage applications to buy a home in the U.S. surged last week to the highest level since early 2023, despite still elevated borrowing costs. The Mortgage Bankers Association's index of home purchase applications jumped 7.6% in the week ended November 21st. Currently, the 30-year fixed mortgage rate is at 6.4%.
Bloomberg's Dan Schwartzman. The FDA and CDC are still looking for the source of an outbreak of infant botulism linked to ByHeart Whole Nutrition infant formula. It's now hospitalized 37 babies across 17 states. Test results are expected in the coming weeks. President Trump has signed an executive order for a new AI project called Genesis Mission to boost scientific discoveries. Bloomberg's Amy Morris has that story from Washington.
President Trump is directing the federal government to combine efforts with tech companies and universities to convert government data into scientific discoveries, acting on his push to make AI the engine of the nation's economic future. It solicits private sector and university partners to use their AI capability to help the government solve engineering, energy, and national security problems. This even after the administration cut billions of dollars in federal funding for scientific research, and thousands of scientists lost their jobs and funding. In Washington, Amy Morris, Bloomberg Radio.
And crowds will start lining the streets in New York City soon for the Macy's Thanksgiving Day Parade. It'll feature dozens of giant balloons, floats, marching bands, and performances, all leading the way for Santa Claus to usher in the Christmas season. And that's news when you want it with Bloomberg News Now. I'm Monica Ricks, and this is Bloomberg.
Exchanges, the Goldman Sachs podcast featuring exchanges on navigating macro uncertainty, exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on exchanges between leading minds at Goldman Sachs. New episodes every week. Listen now.
Carol Masser.
And I'm Tim Stenivek, inviting you to join us for the Bloomberg Business Week Daily Podcast.
Now, every day we are bringing you reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people, the companies, and trends that are shaping today's complex economy.
That's right, Tim. We're all over global business, finance, tech news, all as it is happening in real time. And we've got complete coverage of the U.S. market close. Gotta say, basically, if it impacts financial markets, if it impacts companies, if it's impacting trends and narratives that are out there, we are on it.
We also have a lot of fun doing it. Bloomberg Business Week also brings you the analysis behind the headlines through conversations with our expert guests.
And we are doing this all live each weekday. And then we bring you the best analysis in our daily podcast.
Search for Bloomberg Business Week on YouTube, Apple, Spotify, or anywhere else you listen.
Check it out on your way home from work to catch up on the conversations that you missed during the business day.
And on the weekend, check it out for a complete wrap-up of your business week.
That's the Bloomberg Business Week Daily Podcast. I'm Carol Masser.
And I'm Tim Stenivek. Subscribe today wherever you get your podcasts.
LGT's investment solutions allow you to look to the future with confidence.
Are you still bullish gold here?
Yes, we look for nearly 20% of additional price upside by the end of 26, with our forecast at $4,900 per troy ounce by the end of 26. Not as fast as this year. We're up almost 60% year to date. But the two drivers of the 25 rally, we think will be repeated in 26. Number one, structurally higher central bank purchases since the freezing of Russia's central bank reserves in 2022. EM reserve managers got this big wake-up call that they need to diversify into gold, which is the only truly safe asset once you hold it in your domestic vaults. And second, Fed cuts. Fed cuts, because gold is a non-yielding asset, tend to attract inflows into the gold ETF market. And with our economists' forecast that you see 75 basis points more of Fed cuts, we get support both from central bank buying and from private investors.
It wasn't that long ago that people were talking about the great debasement trade that was going through, that investors were reallocating away from the USD into other safe havens. A lot of that money found its way to gold. The dollar has been supported in the last month. It's actually regaining ground again. How does that impact that thesis, that part of the market?
So I would think of a potential broadening in this diversification theme, which currently is quite restricted to central banks. But if that were to broaden to private sector investors, it would cause further upside to already bullish gold price forecast. I think the key intuition for the size of this price upside from private sector diversification is that the gold market is relatively small. If you look at global gold ETFs, they are about 70 times smaller than the value of the US Treasury market. So you only need a relatively small diversification step out of, for instance, global bond markets to cause significant upside to the gold price. So it's another reason why gold is our favorite long commodity recommendation. You have significant upside in the base case. And in scenarios where markets may perform less well, perhaps concerns about the fiscal trajectory or questions about Fed independence, I think gold would do even better than in the already attractive base case.
On to one of our top stories. Hong Kong police have arrested through a high-rise housing complex, killing at least 44 people. Dozens more are listed as missing. Our China correspondent Mimin Lo is live on the scene in Hong Kong.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeated.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York.
In the markets right now, and one thing that has been kind of interesting is looking at the stocks that are up today.
Yes.
We're actually seeing Apple outperform, and it usually has lately sort of been opposite of these big AI names because it doesn't have a huge AI piece of the puzzle. And then we're also seeing Google up, which is still really big optimism after Gemini 3. So it's just interesting to see a little bit of the split that's happening there in the market.
And much of this, of course, has been built into the worry about, yes, NVIDIA has the demand. People starting to dig into accounts receivable, into inventory, but that felt like a desire to try and, in retrospect, understand why we were seeing a sell-off rather than seeing that and then seeing a stock sell-off. So can you talk to us about how things are happening in timing-wise?
The timing has been so interesting, and I think you're totally right that I speak to a lot of investors and people were sort of pulling on different things, but there was no real smoking gun great answer as to why, we were seeing this sell-off. But we have been seeing the market sort of react more to things around a Fed cut, if there's going to be a rate cut in December. So this morning, looked like things were kind of positive, and then around the Williams comments, but then, we get Mish out. And so it just seems like there's a ton of macro, and that is really what's moving the market.
I think one discourse that has been throughout is debt. And debt, particularly among players like CoreWeave in the neo clouds, but Oracle in particular. The CDS, the credit default swaps of Oracle, have become almost like a way in which we show anxiety in the great debt pile-out of certain companies. Is it rational? No one thinks Oracle is suddenly going to default, but it is being used as some sort of hedge here.
Yeah, totally. And I mean, the stock has just completely fallen off. It had that huge jump, and then we've erased all of that. And the debt question is a really big thing on investors' minds. And I think it really plays into the fears of the AI bubble or the debate around it being a bubble, because if these companies start loading up on debt, there's the potential that they could become over-levered. That could be a bigger issue down the line. And with everything as circular as it is, even though these companies keep addressing it, Jensen spoke about it in NVIDIA's calls, investors are just not convinced yet. They're just seeing the house of cards. They're worried about it.
They need to see the return on AI. Bloomberg's Carmen Reinecke has been across this story. Have a feeling she'll continue to be so. We thank her. Look, let's turn to the world of digital currencies. There's volatility there too. Bitcoin on track for its worst month since 2022. Look how much it shed, 25% of its value in November alone. It's not just Bitcoin, though. According to data from CoinGecko, the total market value for virtual coins has dropped below $3 trillion for the first time since April. James Seifert is with us, Bloomberg Intelligence. You cover alternative investments. And talk us through some of the selling pressure. You look at it particularly from the ETF lens, but more broadly, is it institutional money that's stepping away ever since that big sell-off leverage washout in October?
Yeah, so I absolutely think this is still hangovers a little bit from that October 10th sellout that you just mentioned. There's no way to know for sure it's institutional or retail, but there's some big sellers out there. And what I would say is the ETFs have mostly held strong. I mean, on a percentage basis, the amount of outflows we saw from the ETFs was way bigger in April. It was about $6 billion that came out. Right now, we're about 5.4 billion that have come out of the ETFs. But it's from a much higher base. So the percentage basis is way smaller. So most of the selling is happening from, the actual spot crypto markets. A lot of people like to look at the ETFs and they think like, oh, they're causing this problem or they're exacerbating things. But really, they're just a piece of the pie. And right now, like I said, it's only about 5.3 billion that have come out of the ETFs, the U.S. spot products. So for most of this is happening actually to the coins directly.
It's interesting that many who have been in this space for a very long time don't see this as a particularly anxiety-inducing moment because they've seen sell-offs and pressure before. It's a volatile asset class. But when you say exacerbating the situation, how much are digital asset treasuries exacerbating the situation? The sudden move we saw for companies to put digital assets on their balance sheet.
Yeah, so I absolutely do think that the DATs are exacerbating things here. So, right, I think they were a bit of a flywheel on the way up, right? They were trading at a bit of a premium. They were issuing stock to buy the underlying currencies. They were issuing debt, preferred stock, convertible debt to buy the underlying currencies. And when they're trading at a premium, that's spinning in one direction. Right now, things are spinning the opposite direction. There are some DATs out there that are selling underlying assets. We know some Ethereum ones and things along those lines. So I think this is, and then also there's a lot of traders out there that are doing things where they're hedging the underlying asset and hedging against the actual DAT companies themselves. So that whole interaction is definitely kind of spinning the opposite direction of the way it's been spinning for the last few months. And then also there's a lot of concerns about quantum computing there's a blogger who everyone kind of respects in the space that has moved up his timelines. And a lot of people like to say it's FUD, it's not real concern, but people are starting to take this seriously, including the leader and founder of Ethereum, Vitalik. So I think there's a whole bunch of things here that are compounding. Obviously, you just spoke about it. There's a bunch of risk off in AI names and just equity risk assets in general. And then I think also maybe this might be, we often see a bit of selling around this time of year, maybe into December, particularly with ETFs for tax loss harvesting. Maybe that's being pulled forward a little bit.
That's interesting. What I want to go back to is the quantum side of the equation. Look, we know that the DAT situation, digital asset treasuries, has been a case in point is Michael Saylor and what he did with strategy and people worrying that maybe that even falls out of some of the key benchmarks and that adds to the selling pressure. But quantum is more about cryptography and how that might be broken. Briefly, James, is that what people are worrying about?
Yeah, I mean, I won't pretend to be an expert on quantum cryptography or cryptography in general, but essentially the concern is that quantum computing would be able to hack the encryptions that basically keep, Bitcoin and other cryptocurrencies safe. There are, quantum-resistant cryptographies that can be used and are planned to be used in other cryptocurrencies and even proposals for Bitcoin, but they're not instituted yet. So the concern is this going to happen faster than most people are expecting? But the industry is on top of it. It's just, it's a genuine concern at this point, as far as I'm concerned.
As you say, hashtag FUD, fear, uncertainty, doubt. Hadn't heard that acronym in a little while. James Seifert of Bloomberg Intelligence, thanks so much for breaking things down. Look, let's get an investor perspective for you now. Eric Bailey, Executive Managing Director of the Bailey Group at Stewart Partners, joins us now. And FUD, fear, uncertainty, doubt, is that what is ripping through the markets?
Clearly. Yeah, yesterday was certainly eye-opening with the action in the markets, and it shows investors are nervous. We've seen it pretty much this whole month, and then yesterday really was clear that this sell-off has more legs. And, big parts of the market are in a correction. NVIDIA now down 17% from its high. You were talking earlier about Oracle. That's down 40%. And you're seeing investors are getting more defensive. You're seeing sectors like utilities, pharmaceuticals outperforming the growth parts of the market. And so this could continue, right? As we get through the end of the year, you do see rebalancing, tax selling. And that could continue as we need a little more clarity, a little more confidence to come into the market to get the growth trade back heading up.
What more clarity could you wish for? We got a relative amount of clarity coming from the world's most valuable company, Jensen Huang doing his best to try and make clear the line of sight he has on future revenues. People questioning maybe the inventory build-up now, but we did get a lot of tangible evidence there. We had people such as Michael Burry saying, who are the auditors on OpenAI? And yes, there is a lot of anxiety in the private markets, but many have pushed back on that sort of concern. What clarity do you want to see, Eric?
Yeah, no, you bring up great points. I think, right, it's a valuation issue. And right now, investors are weighing what's the value of these names. They're not clearly sold that the growth can continue. Even though you look at the analyst community, you look at NVIDIA, the average price target is 250. That's a 30+% move from these levels. So you would think at these prices, it's pretty attractive. So a lot of this is again, just market reaction going through kind of a correction phase. And I think the buyers will come back in. It's always unclear when and at what levels, but I do see the buying coming back into the markets.
There's an element of catch a falling knife, but is the Fed the key question if rates are indeed cut in December?
Yeah, the Fed adds a level of confidence to investors, and investors clearly want to see the Fed is taking action that's positive for the economy, and that right now is clearly with rate cuts. And so a rate cut would, in my view, bring in confidence to the markets and should help equities, especially growth equities. Growth equities typically do well as rates come down. And so that would be a big boost next month.
Some of these particular numbers that I relate to on a weekly basis do look really ugly. As I say, NASDAQ worst week since April, NVIDIA worst week since about April, and you see a similar thing for Oracle, worst week, in fact, since 2018. But looking at a year-to-date basis, we're still in a pretty great spot, right, Eric?
Oh, absolutely. Yeah, I mean, the S&P is still up north of 10%. Overseas markets have had an incredible year, up, across the board, north of 20%. So investors, right, they have to step back and be patient and be calm and actually look at these sell-offs as an opportunity, because this is where you can make solid returns, right? Buy great companies at lower levels. I mean, that's the key to investing, and not panicking and not selling when everyone else is selling and take losses and hurt yourself long term.
Eric, your thesis with AI, do you think it's a bubble, or do you think this is a sort of capital expenditure that's necessary to reap the productivity in the future?
The numbers you're seeing committed to this space is certainly eye-opening and nervous. And it seems like it's a few of the big, massive players in that space. And so it does bring concern. On the other hand, without a doubt, with these earnings results we've seen, just from NVIDIA, and you saw from Alphabet and the strength there, clearly AI, you have to be invested in it. Long term, it's the growth engine. And so if you want growth, AI is the place you want to be.
Alphabet at a new record high today. Eric Bailey of the Bailey Group at Stewart Partners. Thanks for your time. Happy weekend. Coming up, OpenAI. Well, it's partnering up with Honhai, also known as Foxconn, to design AI data center hardware in the United States. Details next. This is Bloomberg Tech.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
To keep pushing the frontier, we need to build these new types of AI infrastructure hardware at scale, and I'm excited for that to happen in the US and with Foxconn. Foxconn's experience building complex infrastructure and hardware at massive scale makes them the ideal partner for this, and I'm looking forward to exploring together what this can look like. We'll share insight into emerging hardware needs across the AI industry, and Foxconn will use that to design and prototype new equipment that can be manufactured in America.
OpenAI CEO Sam Altman joining Foxconn, also known as Hon Hai Tech Day, in Taipei remotely to weigh in on the company's partnership with, of course, Foxconn to design AI data center hardware in the United States. Look, under the partnership, Foxconn will co-design and develop data center server racks with OpenAI and work to ensure such racks can be manufactured across the United States. Look, Bloomberg Tech's Annabelle Drowlers, she caught up with Hon Hai chairman Young Liu to discuss the plan and his goal for scaling up compute capacity. Take a listen.
A gigawatt per week will be the goal.
Okay, 1 gigawatt per week.
Per week. That will be Sam's goal. Okay. But we can start with 1 gigawatt per month.
So you think you can add 1 gigawatt per month next year?
Starting the second half of the year.
Second half of the year, so you think you can add 6 gigawatts next year?
I'm not sure. It really depends on our study and our new way of doing things. It takes time, but eventually we're going to get there.
Let's talk about then this opportunity in the US, because as you said, the part of this is about making America. It's very ambitious. What's the capex that you need to also dedicate to the States?
The capex-wise, it's in maybe 1 to 5 billion to start with, to build the factories, to build R&D centers, but to build the working capital required to build a data center. That's totally different. That requires huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
What are the biggest challenges with scaling up in the US?
Shortage of labor. As I mentioned to you, it's not the labor cost, it's a shortage of labor.
Yes. How do you get around that? What are the conversations like, and what are the biggest shortfalls that you see?
Yeah, we have to work closely with schools and the government, which we were very familiar with when we build factories all over the world. We had to work with local agencies or local government to get their people ready for the kind of job that we require.
Hon Hai Chairman Young Liu there with our own Annabelle Drewlers. Let's break down that agreement between OpenAI and Hon Hai. Bloomberg's AI editor Seth Fiegerman is here. It's interesting timing, given the anxiety around capital expenditure, and we're hearing about how Hon Hai is using SoftBank perhaps for some of that capital expenditure and investment, Seth. But there doesn't seem to be any purchase agreements here, right?
That's right. We really don't have any numbers here. I mean, it is another testament to the scale of OpenAI's ambition, in particular on the infrastructure front, as well as Foxconn's desire to diversify away from its reliance on Apple and really gain momentum on the AI server front. But I think stepping back from it, the really important thing to take away, apart from a lot of the rhetoric around what it means for U.S. manufacturing, is what it means for OpenAI as it tries to not just move faster on the infrastructure front, even in the face of anxiety about AI spending, but also begin to build more of a moat or competitive advantage on the infrastructure side. We talk a lot on this show and elsewhere about, how much and how quickly AI models are being commoditized and whether it has a competitive advantage there. But I think what you've seen Altman and OpenAI do is try to assert more ownership over the supply chain for data center build out and chips in a way that could give it a different kind of competitive advantage and lower costs in the long term.
Again, it's a foreign company investing in the United States. $1 to $5 billion is what they're thinking of spending to grow Foxconn's U.S. manufacturing footprint. But here, there seems to be about the understanding of inefficiencies within data centers, right? What can go wrong and how OpenAI can lend a hand on telling them that.
That's right. I mean, look, most people are probably more consumed by thinking about the models that we use in the chatbots, but they're talking about a lot of the key components that go into setting up and operating data centers, from the data center server racks to cooling and power equipment to the cabling. These are not the sexiest things, but they're essential as they're trying to build out a massive scale of data centers here and abroad.
Meanwhile, OpenAI is trying to field a ton of questions right now. They are, of course, under some duress about how they're raising funds in and of themselves to spend on all the data center build out. You had Michael Burry questioning auditors, and it seems as though that we got some clarity from that on FT reporting, Seth. But how much pressure is Sam Altman and team feeling at this moment?
Immense, and we're not even mentioning what they feel from Google now, which seems to have built a model that either rivals or outcompetes anything that OpenAI currently is on the market, which gets back to, again, they want to have a competitive advantage, not just on the model side, but on the infrastructure that supports it. And increasingly, they're tying themselves to all different corners of the market and all different key players in tech to make it so they're too big to fail.
Seth Fiegerman, yeah, great context. Thanks for bringing it. Happy weekend. Look, coming up, we turn to Meta next. It's venturing into the complex world of electricity trading. We'll tell you what behind the social media giant's move. Spoiler alert, is AI. That's next. This is Bloomberg Tech.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Global electricity demand is set to surge 75% by 2050. Infrastructure alone won't keep up. To power the future, we must change how energy is used, not just how it's generated. The missing link? Demand-side solutions that unlock efficiency, productivity, and resilience. The Bloomberg New Economy Energy Technology Coalition is uniting industry, innovators, and investors to scale these technologies for a future-ready energy system. Learn more at bloombergneweconomy.com/ntech.
Shares of Ubisoft, they're climbing today in Paris as trading resumed after a week-long suspension for the gaming company. Look, it had delayed its second quarter results after auditors found it improperly recorded revenue from a partnership. Ubisoft helped reassure investors today by saying it will pay off debts with funds from an investment it received earlier this year from Tencent Holdings. Meanwhile, Meta is making a big push into AI. We know that. And to assist in that expansion, the social media giant is actually adding another business to its portfolio, power trading, hoping to help plant developers by committing to long-term energy contracts. Bloomberg's Riley Griffin covers Meta. Extraordinary story, the amount of diversification these companies are having to do to fulfill the energy and requirements for data centers.
It truly is amazing. And it comes back to this idea that Mark Zuckerberg has pitched as front-loading capacity, bringing on the energy they anticipate, the compute they anticipate for that big day that they are gunning towards, which is the idea of super intelligence. But in the interim, Meta anticipates a lot more energy needed. And so it is going to enter this power trading market in an effort to ensure that long-term capacity.
There was a great interview you did with Urvi Parek, who is heading up electricity trading for Meta. Why is she vindicating this move, and what ultimately is she thinking about doing to build this out?
Yeah, so she said that too few buyers are willing to commit to long-term electricity contracts that would justify building new power plants. So really the AI demands are clashing with the demands of the grid, and Meta is taking matters into its own hands here. By becoming a power trader, it would essentially lock in these long-term deals to support its AI ambitions.
It's interesting that certain analysts out there, you talk to the managing director of power modeling firm Habitat, saying that this is actually a natural extension of tech companies. Are investors understanding that they're all going to become basically infrastructure companies, energy company, trading companies too?
Yeah, it's a kind of managing of risk that we've seen in other industries. It allows you to lock in energy, and then if you have too much, you can ultimately sell it back. And Meta is not alone here. So we've seen Apple, Microsoft, other big players make this attempt too. So Meta isn't alone, and I think that's a reassuring thing to investors. The other very interesting comment we heard from Mark Zuckerberg on the last quarterly earnings call was that they're thinking about managing that kind of risk when it comes to excess compute as well. So we're watching closely to see if they make any moves to diversify into that API business, that cloud business, to sell that too.
Look, everyone's a hyperscaler, everyone's a cloud provider, now everyone's an energy trader too. Bloomberg's Riley Griffin. Fascinating. Thank you very much indeed. Coming up, well, we talk about AI a bit more with Rebecca Lin from Canvas Prime. She's going to tell us why, well, she thinks we are in an AI bubble and how investors can navigate it. That's next. Keep an eye on crypto, of course, amid the AI anxiety. We're seeing continued pressure on Bitcoin, 83,000, off by 4%, worst month since 2022. Welcome back to Bloomberg Tech. Let's check in on these markets. Let's give you what we did for the week, because it's been under pressure for the course of the week. On the day, the Nasdaq is actually trading higher. We're up about 0.1%. On the course of the week, though, we are lower to the tune of 3%. Let's call it the worst week since April, since the real torrid anxiety around trade tariffs really hit the market. We look at individual movers, and when you're thinking under the hood, which are the key players that have been dragged to the downside? Today it's a day of volatility as we think about what the Fed does in December. On the week, it's anxiety of AI bubble or not, about whether we can afford the capital expenditures. Nvidia is off by 0.9% again, after stellar numbers, after more than 60% growth in terms of revenue yesterday for the fiscal quarter just gone and pointing to the fiscal quarter to come. And yet that line of sight on $500 billion worth of revenue, not enough to cool market anxieties. Instead, we're talking about accounts receivables, what they're owed by their customers. What are they owed by Oracle? What is Oracle having to do in terms of debt issuance? That's what the market is questioning. We're off by 6%. It's having its worst week since March 2018. We're off by 6% on the day. Let's talk about all of this, the big tech binge on debt. That's what people are talking about. While in the absence of a leverage underpinning the AI build-out has long been used to dismiss bubble concerns, but there has since been a bit of an uptick in borrowing, and it's starting to change the narrative. Bloomberg's tech equity reporter, Ryan Vlastelica, is here. And look, we're not talking that Alphabet or Amazon or Microsoft are suddenly going to go broke here. They have huge cash on hand. But why are Oracle's CDS in the line of fire?
Hey, good morning. Thanks for having me. So yeah, Oracle is really sort of the focus when people are starting to pay attention to the debt that is being issued by all of these tech companies. I think the five big spenders on AI, which is Microsoft, Alphabet, Amazon, Meta, and Oracle, together they have raised more than $100 billion in debt this year. That is more than 3 times the average over the past decade or so. Oracle in particular, because they are seen as having one of the weaker balance sheets of them, they're going to have negative cash flow this year. That's expected to deepen in the coming years as they invest aggressively into their cloud business, which has been a big beneficiary of AI. But if you look at their credit default swaps for the next 5 years, which is really being used as a kind of proxy for AI risk, those have skyrocketed over the past couple of months. I think they're around 44 basis points in September. They're over 100 now. So this just shows you how people are growing concerned about all of this CapEx. When is it going to pay off? What is this doing to the balance sheets of all these big tech companies? And really, how should that impact the way we are valuing them?
Rating companies are keeping an eye, and I think Oracle's been put on negative watch in case it does need a downgrade from its debt issuance. But what's interesting is there's been a lot of creative financing around this. Look, there was $18 billion issued by Oracle, and there was $38 billion of bonds issued for Oracle data centers, but not by Oracle at all. And then we think about the private credit markets and what Blue Owl's been up to with Meta. How much is this actually not being seen at the moment?
That's a great question. I think this kind of gets to the bigger picture concerns right now about just all of this spending, how it's being done. We've seen so much these circular financing deals. You've seen this off-balance sheet debt. All of these things, it just seems like they add to the risk of the market. Or people are saying, like, we don't really know the full picture of all this stuff. We have one of the biggest, most important companies in AI, which is OpenAI. They're private. We don't have as much information about them as we do public companies. When you get all that, it's like this is just more things that people are uncertain about, numbers you can't fill in, and that just causes people to think maybe this is more risky than we thought. This is a good opportunity to be taking risk off the table when you see all these things sort of building on each other.
Ryan Vlastelica, always a must-read. some of the most read stories throughout the week. We really appreciate it. Look, let's talk about some of that anxiety in the private markets. Concerns about an AI bubble, they swell there too. Rebecca Lynn, Managing Director at Canvas Prime, is one who's saying we are in a bubble. Look, you're here to tell us a little bit about what's impacting your investing approach. And first, give us your thesis on why it's obviously an AI bubble.
Right. Well, I think we can debate whether we're in a bubble or not, for the better part of the day. I definitely think we're in a bubble. But what's more interesting, I think, to talk about is how we as early stage investors react and how we invest in incredible companies that will be the next, $5 trillion companies, and how we execute on that no matter where we are in this hype cycle.
Well, Rebecca, for example, those that would say we're not in a bubble or not in similar to .com is that actually a lot of these companies are very profitable. Nvidia, very profitable. Alphabet, Amazon, all the likes. But OpenAI and the private side, we know that thus far they haven't been profitable because they're having to invest so much. So let's turn our attention to the private side. What security are you getting from the companies you want to invest in that they are keeping pace with growth trajectory on the bottom line and the top line?
Very interesting. So what we're doing is we're really having to dig in the companies we invest in on the customers and go in and talk to their core customers and ask questions. Questions I haven't had to ask, honestly, since I've been in venture, like, let me see all of your contracts for every single deal that you have signed up. Because what we're seeing in private markets is the ARR is probably the most overused term in the English language. And so people are misused, let's just say misused. And
annual revenue, that's what you're trying to get at. The idea that you look at what revenue you've had in the month past and you can extrapolate that out on a 12-month basis.
Exactly. Or annual recurring revenue. How much have they contracted with their customers? And when a company gives you that number, you really have to peel back the onion. You have to go and talk to the customers. You have to look at the contracts. And in the contracts, oftentimes what they're accounting as annual recurring revenue is not at all. There are things like pilot revenue or very like installation revenue, things like that, very ephemeral revenue, or the revenue could go away with a 30-day out clause at any point in time. So we really look for companies where customers are using the company not just as a trial or an R&D experiment, but are really using that company and count on that company for their day-to-day operations, either in financial services or healthcare.
I think back to the lessons learned in FTX. And when we all suddenly realized this company that everyone had piled into, thinking it was a winning formula, was actually, I think, using QuickBooks in terms of its own accounting methodology. How much have investors, VCs, become so savvy to the cult of a personality, to the CEO, to a story that is of growth, but actually really trying to peel that onion, as you say you're doing?
Yeah, I mean, it's just what we stay focused on. I tell my team, do the right deal, not the hype deal. And it's hard. It's hard when they bring a company in and people are piling in at $500 million valuations with really no revenue, and they're great firms. We call them the big box firms here in Silicon Valley who have raised hundreds of over $1 billion, $2 billion to invest. And they just have a fundamentally different problem right now. I think they're not doing a lot of the diligence. They can't do that really deep diligence because they simply have too much capital to deploy. And when I talk to my brethren over there, that they'll say things like, our job is in part just deploying capital. And so I think sometimes, unfortunately, they skip over the part that I think is the most important part of the job, which is diligence and governance on these deals, and really diving deep to say, is this a company that can make it for the long term and really return a lot of capital, or is this a company that might be running on QuickBooks, like you said?
The thing is, you're in the Series A and Series B. I think of just the extraordinary numbers that, look, we were talking about a potential project that Bezos is launching with initial seed funding of $6 billion. You got Mira Murati raising a company's funding at potentially a $50 billion valuation, is what's being reported by Bloomberg, when ultimately a seed round was giving her a valuation of $12 billion, and she raised $2 billion on that. What are the numbers that you're seeing to get into these rounds?
Well, I think, first of all, what you have to realize is that, the large majority of capital is going into a handful of deals. I think 62% of all the money that went in last year in venture, or actually this year, is going into 8 deals. And so I actually see that as an opportunity. And it's a feature, not a bug, in terms of what I'm doing. And we are seeing deals. We're seeing Series A's that we were interested in initially with sub $10 million of actual revenue going for $500 million plus in valuation.
Wow.
But I think the more interesting thing, I actually walked away from 2 deals in the last, I would say, 30 days that had that profile. But even if you could get comfortable with the valuation, what people really aren't talking about right now are the governance issues. And so in both of the deals I walked away from, the founder, demanded in the Series A complete and total board control, not just in voting shares, but on every major decision that the company could make going forward. And what I've seen, I was around for the .com bubble as an operator. I've been investing through multiple cycles. And what I've learned is that that is a recipe for disaster in most situations. And so I'm actually more concerned with the lack of governance going on right now, even than the actual valuations and the money going in.
People are not talking about it, but you're talking about it, and you're talking about it on this show. We so appreciate that you do. We love the right deal, not the hype deal. Rebecca Lynn, come back soon, we hope, Managing Director at Canvas Prime. Thank you. Coming up, we're going to be speaking with the CEO of Cerberus Systems, Andrew Feldman, as the US approves the selling of advanced AI chips in the Middle East, how it affects his startup. And we're watching, of course, publicly traded shares too. Netflix, Paramount, Comcast. Initial offers have been put on the table for the Warner Brothers Discovery. Paramount wants the whole thing, remember. We're up 1.3% on Paramount Skydance today. Comcast up almost 2%, but Netflix under pressure. This is Bloomberg Tech. Let us...
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Check in on chipmaker stocks because it has been a wild week. It's been a wild day as well. We are currently off in negative territory if you're looking at the semiconductor index, the Philly one. We're currently flat, just down on the stocks as we see Applied Materials trying to do its best to lift us higher. But on the downside, Broadcom from a points perspective, but NVIDIA off by 0.5%. This is the question mark we still have about how much customers owe NVIDIA, and indeed their inventory backlog is being thought about. But AMD off by 2%, TSMC even being dragged lower by 1.4%, as we still question some of that anxiety in the market regarding AI bubble or not. But this is all as this week we saw the US actually approve the sale of advanced AI chips into the UAE, into Saudi Arabia. That's boosting the Gulf nation's AI expansion efforts, so should be a key area of demand. Andrew Feldman, CEO of Cerberus Systems, praising the move, saying we're grateful for the administration's decision, which allows us to scale US-built wafer-scale AI systems into one of the world's fastest-growing AI hubs. Andrew joins us now for more. So you, of course, have the CS3 system, new class of AI supercomputer. You want to be able to ship it more into partners. You have G42. You're working with the UAE. How much will you be working with Saudi Arabia?
I think we've begun working with Saudi Arabia. We now have salespeople on the ground in the kingdom. It is a new effort for us, and it's not as far along as we are in the UAE and in some other territories. But it's an exciting opportunity, and I think the move by this administration to allow our allies and our partners in the Middle East to gain access to advanced AI compute is a good one and thoughtful. And I think having U.S. technology, from chips to software to the full stack, in the hands of our allies is good policy.
Hands of our allies. You have CS3 system, which you say is quickly, easily clustered together. You make it the largest AI supercomputers. The allies are in the Middle East, but there's always been this worry that it would be a backdoor into China. How do you make sure that your IP is protected, Andrew?
Look, I think we work closely with G42. They're our strategic partner, and we have been working with them for more than 3 years now. And they have developed a restricted technology environment, an approach that sort of surrounds the technology with security. I think it is both forward-looking and extremely sort of rigorous. We're really confident that it will keep the technology both physically from being transported to China, as well as used by by Chinese agents. And so we're very confident. We've visited facilities. We've seen the restricted technology environment in action. I think they're doing an extraordinary amount of work to earn the president's announcement.
You do have that relationship with G42. How does the relationship of expansion, sales groups on the ground in Saudi Arabia square with that relationship? How many sales do you think you're going to be able to get right away, Andrew?
I think sales in any territory take a little bit of time. You have to build relationships. You have to build credibility and legitimacy. But I think our success with G42, the work we're doing with other customers like Meta, like IBM, the work we're doing with large enterprises like Mayo Clinic and GlaxoSmithKline, and the work we're doing with leading AI startups like Mistral and Cognition, all of these make entry into new markets a little bit easier. You have examples you can point to. You have large customers or partners they can buy from. And I think this is what it means to be expanding quickly in a global environment.
Is the US government doing enough to help startups such as yours vis-a-vis NVIDIA, which in many ways gets a lot of the voice support from the administration briefly?
Of course, and sort of they've gone through this process too, right? They weren't always a giant company. I think it's taken them 25 years to earn their position at the top, and so we have extraordinary access. We do big business with the Department of Defense, with the DOE. Actually, I was with Jensen and Lisa Su of AMD, with Secretary Wright. The DOE is a leading organization for U.S. AI policy. It's been, I think you always want more, but I'm proud of what we've been able to accomplish with the government.
Andrew Feldman, come back soon, we hope. Cerebras Systems CEO, appreciate you joining on the day. Meanwhile, coming up, design software firm Canva is rolling out new AI tools, integrating recent acquisitions and speeding up product launches. We'll look at what that means for the company and for the creative industry. That's next on Bloomberg Tech.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Canva's Affinity suite of creative tools, well, it's topped 2 million downloads since its launch, just free software a few weeks ago. The free product offering is part of Canva's increasing effort, really to challenge rivals like Adobe. Let's talk about this with Canva's co-founder and COO, Cliff Obrecht. Cliff, extraordinary level of uptake. Were you expecting that?
To be honest, and thanks for having me first and foremost, we've been absolutely blown away by the level of uptake. It probably really speaks to the creative community screaming out for choice and us delivering on it. But yeah, we've been absolutely blown away with the pickup so far.
Affinity is about professional design in many ways. But how are you seeing being adopted more broadly, and who is it that really wants to lean into this type of sophistication?
So Canva is a design tool, and when we launched Canva, there were only professional design tools. So we launched Canva to enable the 90 to 99% of the world who couldn't design to be able to design and express their creativity. And what we did with the acquisition of Affinity, we acquired that company and we just launched it 100% for free. And that really gives creative freedom and the ability to create and design to the other 1 to 10% of the organisation. So now we have both professional designers and everyone else able to design for free and with ease, and not let the tools or cost get in the way of people achieving their goals through visual communication.
Look, I'm looking at some analysis that was put out. One analyst is calling it from a visual suite to a comprehensive creative operating system. They say that it launches Canva into beyond the tools.
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Monica Ricks. President Trump is doubling down on his administration's efforts now to deport migrants and has paused all immigration application processing from Afghan nationals following the shootings of 2 National Guard members in D.C. yesterday by a man from Afghanistan.
We must now re-examine every single alien who has entered our country from Afghanistan under Biden, and we must take all necessary measures to ensure the removal of any alien from any country who does not belong here or add benefit to our country.
The suspect was identified as an Afghan refugee who came to the U.S. after the Taliban's takeover in 2021, but he had just been granted asylum by the Trump administration in April. Defense Secretary Pete Hegseth now says the Pentagon's doing everything it can to protect the nation's capital.
We will secure our capital. We will secure our cities. In fact, this happened just steps away from the White House. It will not stand.
The president has asked for an additional 500 troops to be deployed to D.C., but that shooter is in custody, and at last check, the guardsmen are still in critical condition. At least 55 people have now died in a deadly apartment complex fire in Hong Kong, where fire officials spent the night searching for trapped residents. Hundreds are still missing. 3 men from a construction company have been arrested on suspicion of manslaughter. A judge in New York who oversaw the sex trafficking case against Jeffrey Epstein has ordered the Justice Department now to take new precautions to protect the privacy of victims after some of the women's names were made public when Congress released a trove of documents. The DOJ has till Monday to privately show him information it seeks to release and provide a detailed description of the privacy process to protect Epstein victims. The documents are part of the Justice Department's request to unseal material from the grand jury that indicted Epstein in 2019. The Federal Reserve has released its Beige Book, and it shows little change in U.S. economic activity in recent weeks, with overall consumer spending declining, except among high-end shoppers. Employment was also down slightly, and prices rose moderately. It helped boost stocks, which closed in the green Wednesday for its 4th straight session. U.S. markets are closed now for Thanksgiving, but stocks are still trading overseas. In Europe, the FTSE in London is down about 0.1%. The CAC in Paris is pretty flat right now, and the DAX in Germany is up about 0.2%. The Nikkei in Japan closed up 608 points, about 1.2%. The Hang Seng in Hong Kong and China's CSI 300 were mostly unchanged. PopMart shares jumped the most in 3 months, leading a broad rally in China's consumer stocks after Beijing announced new measures to boost spending. The Labubu maker's stock climbed as much as 10% today after China unveiled plans to better align supply and demand for consumer goods. It's banking on big sales from global fans for Thanksgiving and Christmas. Toyota sales advanced in October as U.S. demand helped make up for a downturn in China and Japan, thanks to strong demand for the RAV4 compact crossover and other vehicles. Global sales climbed 3%. Toyota's nearest rivals, Honda and Nissan, both saw sales declines in October. Chancellor of the Exchequer, Rachel Reeves, announced $34 billion of tax increases in the UK this week in a budget that seeks to balance the demands of both bond traders and restive Labour backbenchers. She spoke about the budget exclusively with Bloomberg.
I was always clear that I would never play fast and loose with the public finances because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do, more than ever, is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Chancellor of the Exchequer Rachel Reeves on Bloomberg TV. Here at home, FedEx plans to cut hundreds of jobs in Texas after a third-party logistics customer moved its business to a new location and different company. More than 850 workers will be affected. The move comes towards the end of a turbulent year for the logistics industry, jolted by President Trump's trade policies. FedEx is also undergoing major restructuring to merge its air and ground shipping operations into a single network. As millions hit the road over the holiday weekend, prices at the pump won't be too bad. According to AAA, averages are hovering just above $3 a gallon. But Gas Buddy's Patrick DeHaan says they could be even cheaper this winter.
I think we're going to see more months, more days below $3, potentially than above $3. So I think this sets us up for a very good 2026. Now, maybe a little front end loaded with lower prices in the first half of the year than the second half of the year.
Hear more from Patrick DeHaan on the Bloomberg Balance of Power podcast. He says prices tend to spike heading into spring and summer.
The dream team.
And it'll be a battle at the box office this Thanksgiving weekend, with Disney's Zootopia 2 expected to top Wicked for good with as much as $150 million in ticket sales over the next 5 days. Wicked could make another $100 million. But even that huge haul may not even touch last year's Thanksgiving weekend totals. Wicked Part 1 and Moana 2 generated a combined $422 million. And that's news when you want it with Bloomberg News Now. I'm Monica Ricks, and this is Bloomberg.
Exchanges, the Goldman Sachs podcast featuring exchanges on navigating macro uncertainty, exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on exchanges between leading minds at Goldman Sachs. New episodes every week. Listen now.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
Hi, I'm Kim Vanell in Wanganui, New Zealand. It's Thursday, November 27th. Today, 2 members of the National Guard are shot in an apparent targeted ambush in Washington, D.C. Hundreds are missing as a huge fire burns out of control in Hong Kong. And it's Thanksgiving, but hold the sweet potatoes. We look at the more expensive elements of your dinner. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7.
गाइस ये नेचुरल गैस में यहाँ पर बुक कर लेना, एक छोटा सा बाइंग का प्लान है, वापस ऊपर जाता है, वापस सेल कर देंगे ऊपर से, रेजिस्टेंस स्ट्रॉन्ग बन गया है, अब नीचे ब्रेक होगा तो फिर नेक्स्ट सपोर्ट काफ़ी दूर दिख रहा है, लेट्स होप ये सपोर्ट अगर ब्रेक होता है सेलर्स बुक करके बाइंग थोड़ा बहुत, फिर ऊपर से वापस सेलिंग.
Days a week. First responders surround 2 National Guard members lying on the sidewalk. One appears to be receiving CPR. Near the other, 2 National Guard soldiers hug after an attack authorities are calling a targeted ambush, all just blocks from the White House. Michael Ryan was heading out for lunch at the time.
As soon as I got up 17th and I Street, we heard rapid gunshots.
He says the area was quickly swarmed by police officers and other National Guard members.
They had a person pinned on the ground yelling at him to stay down.
President Donald Trump, who's in Florida, is calling the shooter an animal who will pay a very steep price. Reuters correspondent Leah Douglas was at the scene.
So when I arrived at the area where the shooting took place, Farragut Square, which is the park that the shooting was near, was already taped off with yellow crime scene tape. And there were dozens of fire trucks, police vehicles of all kinds, and a helicopter circling, and several National Guard members standing on a corner, kind of watching the situation unfold.
The suspect, who was wounded in an exchange of gunfire before he was arrested, has been identified by the Department of Homeland Security as Rahmanullah Lakanwal, an Afghan national. The US Citizenship and Immigration Services Agency says it's halted processing of all immigration requests relating to Afghan nationals indefinitely. Leah says no motive has been given so far, but that officials say the suspect was a lone gunman.
So we heard from officials, and what they described was that the suspect had come around a corner at an intersection, which is in a part of D.C. that's a lot of office buildings. It's just 2 blocks from the White House complex. The park that it took place near is like a popular lunch destination, lots of cafes, lots of pedestrians, things like that. And so this person, the suspect, came around the corner and, quote, ambushed them, according to someone from the Metropolitan Police Department in D.C.
US Secretary of Defense Pete Hegseth says the Pentagon will beef up National Guard numbers in DC as a result of the incident. A huge apartment tower block is on fire in Hong Kong, with firefighters still trying to reach residents potentially trapped on the upper floors of the high-rise buildings. The blaze in the Wang Fuk Court housing complex in Tai Po has been burning for more than 24 hours. More than 40 people are dead, and hundreds are still missing. Hong Kong police say the fire may have spread due to unsafe materials, including the bamboo scaffolding and mesh surrounding the building. Police Superintendent Eileen Chung pointing the finger at the construction company carrying out maintenance work. 3 people from that company have already been arrested on suspicion of manslaughter. Reporter Farah Master in Hong Kong is covering the story.
It's a complex of 8 buildings, and they're all high-rises with like 31 floors. So they're really tall buildings, and they're all stacked very close to each other. So what had happened was one caught on fire, and then it spread very quickly to the others. There are around 2,000 apartment units within these 8 residential high-rise blocks, and there are around 4,600 people living in these blocks. And the fire authorities are trying hard to get to the higher floors of these residential buildings, and it's been very difficult. There are many, many of these cases where people are trying to find their loved ones that are still stuck in or that are missing. We've had really harrowing cases of one man who was outside and his wife was trapped in. He's 70 years old, and yeah, he just broke down. So it was really terrible. And there's another case of a lady, she's looking for her daughter. Her daughter just graduated from university here. And she hasn't had contact with her daughter since yesterday afternoon when she was inside the block.
Farah says there are concerns that the fire could trigger discontent in the city, where housing is already an issue.
I think it's definitely going to be a really hot button issue. Housing has always been a really tough issue in Hong Kong. It's super expensive to live here. And these people, they've paid so much money to get an apartment in this complex. So there'll be a lot of anger as to how could this happen in Hong Kong, which is so developed.
You might be settling down today to a Thanksgiving meal. And for one thing, you might be thankful that prices were a bit cheaper than last year. According to the American Farm Bureau, the average price per person of what it calls the Thanksgiving staples, everything from turkey and sweet potatoes to peas, stuffing and pumpkin pie, will cost around $5.50 a person. That's down 5% from last year. But as our Fed reporter Howard Schneider has been reporting, some shoppers are still feeling the strain.
They found that the overall price did drop a little bit this year. That's a third straight year of decline. Now, it's still higher than it was in 2019 before the pandemic by about 13%. And here's the deal. There's a little bit of sticker shock under the hood when it comes to the sides because the wholesale price of turkey is higher, but the retailers, particularly at a time when stores are very sensitive about market share, being very aggressive about discounting. So some stores we found are even giving away turkeys for free if you spend a certain amount of money. Things like sweet potatoes costing a lot more than they did last year. A lot of the other sides are up as well.
Russia says the leak of a recording of a call between top advisors to Donald Trump and Vladimir Putin was an unacceptable attempt to undermine peace negotiations and amounts to hybrid warfare. Bloomberg News published the transcript of an October 14th telephone call in which Trump envoy Steve Witkoff advised Putin's foreign policy aide, Yuri Yushakov, on how to pitch a Ukraine peace plan to Trump. Russia says it won't make major concessions on a peace plan for Ukraine. Witkoff is due in Moscow next week for talks with Russian leaders. A Georgia prosecutor has dropped all criminal charges against President Trump for trying to overturn the state's 2020 election results, ending what was once seen as one of the most serious legal threats the president faced. The case was brought by Fulton County District Attorney Fannie Willis in 2023, but collapsed after she was removed over ethics complaints. It's the latest in a string of criminal prosecutions against Trump that have fallen apart since his return to the White House. Now, you might not want to hear about belt tightening today of all days, but in the UK, they don't have Thanksgiving and instead have a government keen to balance the books. British Finance Minister Rachel Reeves has announced a big tax-raising budget aimed at giving her more room for deficit reduction targets.
And I do recognise that I was asking ordinary people to pay a little bit more, but I've managed to keep that contribution as low as I possibly can.
As well as a so-called mansion tax on properties above £2 million, there were higher taxes for Britons on everything from milkshakes to electric vehicles. Reeves also announced some measures to lower the cost of living, cutting energy bills and removing a cap that had prevented low-income families from receiving further benefits when they have more than 2 children. Pope Leo is heading to the Muslim-majority nation of Turkey today on his first papal trip abroad. He'll also head to Lebanon. On Leo's agenda is a meeting with President Recep Tayyip Erdogan. And in a departure from normal practice, Leo is expected to speak English in his speeches in Turkey. Happy Thanksgiving to all those who celebrate. As you digest your turkey, you might already be browsing for the more popular deals for Black Friday. So, for today's recommended read, we dive into what shoppers are looking for in the shopping season, which typically accounts for 1/3 of American retailers' yearly profits. There's a link in the description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
LGT's investment solutions allow you to look to the future with confidence.
Renaissance Macro, where he said that he thinks the train may have already left the station when it comes to Fed rate cuts and the potential damage that has been foisted upon the economy. Why are you so negative as well?
So what I'm seeing, I think, is what we're calling the end of free money, and kind of being a bit cavalier about that. But there was a time, right? If you announced you were spending X billion on data centers or AI, your stock went up 2X. And all of a sudden, now you're seeing people question that. You're seeing stories emerge about, which technology should we use? So I think we're going through this breather, right? A year ago at this time, if you didn't have an AI strategy, you were ridiculed as a CEO. Your stock was going to suffer. So there was spend. There was this kind of real rush to spend. Now I think everyone's sitting back, okay, what do we want to spend on? What is the best value? And the hyperscalers, right? All of a sudden, you can't just say you're going to build more and your stock goes up. So this is kind of this first time I think we might see a bit of an AI diet where people are like, okay, how do we be cautious on this? Where do we spend? What do we spend on? What technology is emerging? We haven't talked about anything out of China yet that could derail some of our stocks. So I think this is where we get a bit of a slowdown right now.
Before we get into the details of the AI trade, you said the end of free money. And I want to dive into that because yesterday we were talking about tightening liquidity conditions. Now, a lot of people attributed that to the sell-off that we saw in things like Bitcoin and also the big tech names. Why is this now the end of free money with the Federal Reserve cutting rates and ending quantitative tightening?
Well, you've also seen, coming back to some of the crypto, you had the DATCOs, or, the digital asset treasury companies. Some are very sophisticated, some do a lot of things, some simply buy the underlying. And there was a period of time, right? If you bought X amount of Ether, your stock went up 2X. All of a sudden, that's not happening. So all these trades that were kind of self-perpetuating are falling down. And you're having a bit less liquidity come through this. And everything I hear and see when we're talking, whether it's consumers, corporate, I feel there's belt tightening going on everywhere. I think people are going to be a little bit surprised as they go through the budgeting process that companies are actually shrinking their budgets rather than growing, full scale.
What do you think the administration does in this? Because we were speaking with the Commerce Secretary yesterday who was beating the drum saying AI has been such a boon for our economy. David Sachs, the crypto czar, which also has an ear to the administration, was putting on X yesterday that it is an AI-related investment accounts that half of GDP and a reversal would risk recession. Is this an administration that would see this sector as too big to fail, as Sam Altman has hinted at to the chagrin of others at OpenAI?
What I think they are doing, and I think it's rightfully to do, is investing heavily in electricity and energy production, right? We are putting money into nuclear. We're putting money into everything that's really the bottleneck right now is this electricity. And supposedly that's one of the arguments with the TPUs versus the GPUs is lower electricity usage. So I think electricity is actually a bottleneck. I see the government spending a lot of time on that, which fits very much, I know you're sick of hearing it, but production for security or PROSEC. I think they are trying to figure out I think these are the things that the government's trying to make sure goes along. I think it's going to be hard for them to intervene directly in AI. But yes, if we get this AI slowdown, unless other parts of the economy really pick up, we are going to see that this potential, maybe not a recession, but a slowdown, and that's why I'm concerned.
How does the wealth effect play into that? Lisa's been talking about how just more of everyday people, of households own equities at this point, and a lot of the gains in equities have been tied to AI. If AI starts to take a breather, what overall wealth effect does that come back and have on the consumer?
Well, I think we've already seen a big hit to crypto, right? Bitcoin itself is down $650 billion, and it seems to track very well. I always use ARKK as a proxy for disruptive, stocks. Those stocks are down. So you've kind of seen this big move in certain segments of the market. Almost anything momentum related is down. So I think you've already seen a chunk of wealth wiped out for people who would spend that money. So I think we need to see this turnaround, or you're going to see everyone, hey, maybe we got to be a little bit cautious, right? We are everything's going to the moon. Crypto's going to 200,000, whatever the number is. All of a sudden you're sitting here at 86,000 on Bitcoin. I think it does create this negative wealth effect where people are going to be conservative coming into their spending.
So there are three ways to look at this. There's one way to look at it saying, okay, this is going to be a recession next year that no one's expecting, which is typically how it happens, which is what we heard from Neil Dutta. Then there's a way of saying that actually there's going to be a rebound early next year because of the tax refunds and other types of stimulative effort, but that there will be sort of this flagging growth. And then the third way of looking at this is it is going to be morally hazardous for either this administration or the Federal Reserve to allow this market to crater. So you're going to see this bazooka of stimulus coming from quantitative easing, from Fed rate cuts, and from fiscal that will ultimately propel this market higher. Where do you fall in?
I do think coming into the midterm elections, we are going to see a huge effort. I think Trump and Trump 1.0 learned the pain. If you don't win the midterms, it's really hard to govern your next 2 years. So I expect a lot of stimulus coming into that. And I have liked, for example, my favorite trade right now has been to be underweight NASDAQ 100, so QQQ in ETF form. And I like the S&P 500 equal weight. So RSP is one, ETF that you can use for that. And I think you're going to get this bit of a rebalancing, right? Some of the air is going to leak out of the AI. Some of it should be transferring to the rest of the economy. And that's why I like kind of the equal weighted S&P 500. I think as we take away investor focus from the AI to electricity, which is still going to be a part of this, but what else is going on in the economy? What else are we building? What are we making? We are going to be trying to build manufacturing plants. We're going to be trying to build mines. We're going to be trying to build refining and processing companies. So there will be activity, and I think that's the area that's going to shine next year.
If you are defensive, can you go into long-term bonds with the expectation that this is an incentivized Federal Reserve to ultimately bring down long-term costs in whatever type of financial engineering it requires?
Normally, I would say yes, but I'm kind of stuck more on the belly of the curve, 5 to 7 years. I just think there's going to be some outward pressure on the 10s and beyond as people are nervous. Did we cut too much? Are we being too aggressive? Are we paying attention to inflation? So I think that's going to diminish a bit of the rally there. So I kind of like the belly of the curve. I think you're going to see 2-10 spreads actually go potentially to 100. So I could see us down at 3% on Fed funds, and I could still see a 10-year close to 4%.
Are you getting those vibes from the Fed that they are going to be forceful in their cuts? We heard from Chris Waller yesterday saying, yes, December, and then it's meeting by meeting.
I'll be slightly embarrassingly honest. I'm not really paying that much attention. I think we are going to get a new administration. The Fed's going to look very different next year. We're going to get to 3% before the middle of the summer. I don't really care whether it's a cut in December or not. That's kind of my base case, right? This is the direction we're headed. It's going to come almost hell or high water. So that's kind of how I'm thinking about it. I'm spending less attention to who's talking today and tomorrow. Look who's going to be talking in the future. We know we're getting these cuts next year.
I love it. It tells you something, Danny, when Peter Scheer is not keeping track of each Fed speaker. Maybe they have no clue and it's completely divided.
Also a great way to preserve your sanity, I think.
100%. So congratulations for being sane. Peter Scheer, the sane one, is going to be sticking with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. Fighting between Russia and Ukraine continuing overnight with heavy Russian drone and missile attacks on Kyiv and Ukrainian assaults on southern Russia. The exchange is coming after President Trump suggested, quote, big progress was being made on a deal to end the fighting following weekend talks in Geneva. White House Press Secretary Caroline Leavitt says he still hopes the deal can get done by Thanksgiving. President Trump and his Chinese counterpart Xi Jinping held their first talk since agreeing last month to a tariff truce. Trump says the call was very good and touched on issues such as trade and Ukraine. He also says he will visit Beijing in April and that he invited Xi for a state visit next year. Shares of Google parent Alphabet rising in the pre-market on reports Meta is in talks to spend billions of dollars on the search giant's AI chips. The information reporting Meta plans to use Google's Tensor processing units, or TPUs, in data centers from 2027. An agreement would help establish TPUs as an alternative to NVIDIA's GPU chips. That's your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. All right, this is the time. Just 5 minutes.
Oh, wow.
5 seconds.
Thank you. I'm so
GPU
honored.
versus TPU.
Okay.
30
GPU,
seconds.
NVIDIA's chip, originally for graphics processing, so it takes a lot of energy and has a lot of broad applications. TPU, built by Google, very application specific, so more efficient, maybe a better chip, but people are already using a lot of NVIDIA chips, and there's a kind of locked-in thing to it, so it's hard to get to the other one.
This is the debate. More energy efficient, although more restrictive, or potentially more expensive, energy intensive, but flexible. The race is on. Up next, we're going to be talking about lowering the temperature with China.
It lasted about an hour, and it was a very positive call. The focus was mainly on the trade deal that we are working on with China and those relations and how they are moving in a positive direction.
Bloomberg's Michael Solner joins us next. This is Bloomberg Surveillance.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment. Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Stocks just kind of meandering here, dipping just a touch after yesterday's surge, the biggest in 6 weeks for the S&P 500, the biggest two-day rally for the S&P and NASDAQ going back to May. Today, taking a little heat out of that, down about 0.1% for S&P futures, seeing yields just up marginally, but still lower than they were to start yesterday, 4.03%. Meanwhile, take a look at NVIDIA and Google Alphabet in pre-market trading. A huge dispersion here in the fates of the two, and they're connected with Alphabet shares up 4.1% in pre-market trading. NVIDIA lower by 3.6%. On that news that Alphabet might be gaining some clout in the TPU game. We'll get into that coming up. Under surveillance this morning, lowering the temperature with China.
I did speak with him about the call. It lasted about an hour, and it was a very positive call. The focus was mainly on the trade deal that we are working on with China and those relations and how they are moving in a positive direction. And the president and President Xi discussed continuing to stay in correspondence.
Here's the latest. President Trump saying his call with Chinese President Xi went well. The two leaders now planning in-person meetings next year. Bloomberg's Mika Solner joins us now. Mika, what was the understanding of what was discussed in that hour-long phone call between Xi and Trump?
Yeah, so the president and the Chinese president spoke for roughly an hour, largely focused on trade and trade negotiations, particularly around soybeans and how, China is impacting U.S. farmers as well. So that was a large focus of the call. But the two also touched on Ukraine-Russia war briefly. But I know that, there's been significant steps taken with the two promising to see each other in person next year.
Mika, the two readouts, whether it was from China or from the U.S., were vastly different. The one from the U.S. was talking about trade as well as a little smattering of Ukraine-Russia. The one from China really focused on Taiwan. Can you talk a little bit about that huge difference between the two readouts?
Yeah, I think that's really interesting, and I do think that there's going to be tension around Taiwan. I know that that's a big priority for the administration, but I also think that President Trump really wants to have a good relationship with China. I think that it's really different from previous administrations in the way that he negotiates with countries considered to be U.S. adversarial to the U.S. So there's going to be a lot going on and a lot of reaction from China hawks as well in terms of what's going to happen, particularly around Taiwan.
Mika Solner of Bloomberg, thank you so much for that. Peter Shear of Academy Securities is still with us. Mr. Prosek, let's put that hat on, because ultimately this really does go down to what is your takeaway? Does this have more consequences potentially for Ukraine, Russia, or potentially for Taiwan?
I think probably more for Taiwan. So when we're looking at this, and again, I work with 30 retired generals and admirals, a couple CIA people, so we spend a lot of time on where this is all playing out. And I think as we're having conversation with clients, we're reminding, one, Xi said he wants his military to be ready by 2027. It's not a sign that he's going to do anything in 2027. But we've always thought what's going to happen is there's going to be a multiple application of the levers of power. So the levers of power are diplomacy, information, military, and economics. So the DIME framework. I think they're going to put so much pressure on Taiwan that Taiwan may eventually just say enough's enough. And we are seeing the U.S. pivot a little bit away from the kind of this global, policeman of the world to really focused on domestic, right? North-south. The Monroe Doctrine seems to be taking place again, right? We moved the Ford into the aircraft carrier into the Caribbean. So there's this big domestic focus. So I think there is some risk that Taiwan feels a little bit maybe left out, a little bit nervous. And when we look at trade negotiations right now, the two things that I think China has some power over us are still the processed and refined rare earths and critical minerals. So on PROSAC, I think we are trying to do a lot of that. I am convinced that this administration, from some talks as well, one, we want to produce the rare earths and critical minerals, but really we want to make sure we can process and refine them to break that lock that China has on us. We control the chips. We control the best quality chips. Again, maybe now we throw the TPUs into that. Those are things China wants. At the same time, China controls a little bit the ability for Taiwan to ship things. So far, China has not done anything, but they do have this very, very large maritime militia. They've used it in the past in little incidents, but they could put this to work. It's largely shipping vessels. They have larger vessels within that, and they would just disperse themselves in such a way that it would slow shipping down. They would throw logs off back. They would throw nets trying to, foul propellers. So they could do a lot if they really wanted to push on us against Taiwan. So I don't know where this is all headed, but it feels a little bit parcel and parcel where we're focusing a little bit more north-south, Monroe Doctrine, and maybe China has a little bit more control in that region.
Where does that leave someone like Japan, who has been leading on the U.S. alliance in their current heightened tensions with China after the prime minister made those off-the-cuff remarks that they would support or take action if China had military action against Taiwan?
I think it leaves everyone a little bit questioning, what is our mission, right? The Biden administration was very clear that we would support Taiwan. Trump has not been clear so far. And our official doctrine before Biden had always been ambiguity, right? So strategic ambiguity has been a part of this. The one thing, to me, it comes back, and we've been talking to clients about this for 4 years, and people used to kind of roll their eyes at us, and now I think they're listening, is shipping, you have to diversify your supply chains along shipping routes. You cannot be dependent on one shipping lane. So Thailand and Vietnam, you're not diversified. They're going through the same place, maybe even South Korea. So I think this is a kind of a huge wake-up call that everyone has to look at shipping as a bigger risk than we ever have in the past and say, hey, what happens if, and maybe it never happens, maybe we go on living peacefully and we have these great economic deals that allow it. I think we have to prepare for more and more deglobalization and more risk.
That's so interesting you say that, because I've had conversations with private equity executives who have companies, lots of them that need to deal with supply chain issues. And they've said, we've done such a good job since Trump came in as president because we've de-risked from China. And now we're in South Asia. To your point, we're in Vietnam. We're in these places that still might feel blowback should there be a larger scale conflict. Are there other options? Is the supply chain resilient enough to completely move away from that region, even if it's not China?
No, but I think you can diversify. You can have some there. You can have some other reasons, because you are going to want to try and sell into that region, right? India is a huge growth story. There's all sorts of opportunities. So you want to be there, but I think you want to look at South and Central America. What's going on there, right? Whatever happens, how do we do better with Brazil? So far, Brazil's been tough. We are working closely, I think, with Argentina. So I think there's going to be a lot of opportunities in that north-south. And again, keep coming back, and lots of things I've learned not being military, but, they talk about at Academy Securities the tyranny of distance. So in war, it is really hard to fight a war if you're far away. If you look at where Guam is relative to Taipei or Taiwan, it is a very far distance. It's going to be hard for us even when we try and do something to support that relative to what China. They have the same problem when you look at Central and South America. And let's not forget, the first place Marco Rubio went was the Panama Canal. That has never really happened in our history, right? The Secretary of Defense, Secretary almost always goes to the UK. He went to the Panama Canal. So there is something shifting in this administration. So I pay close attention to that. And if you want to be where the U.S. government's going to protect you and do the most, I think it's pretty clear to me you want to be edging or favoring North and Central and South America over Asia.
5 years ago, when the pandemic was raging, everyone was talking about the deglobalization and this idea that you had to build in sort of inefficiency in your supply chain to create redundancies. It was going to be inflationary. Now we're not talking about inflation. We're talking about disinflation from artificial intelligence, even as we see an acceleration of this trend of being more regional. Is there still an inflationary overlay to this that's the reverse of what globalization provided?
I think there is as it comes online. There is going to be some pressure on commodity prices. If we really start building these factories, if we build out the energy production that we need or electricity production, we are going to see levels of inflation that have been higher. I think it's persistent, say that 2.5% to 3.5%. It's not going to get out of control. But over time, we've also built a much more secure system. I think costs will go down over time, right? If you're not shipping things long ways. Again, I just keep coming back to, I really believe this kind of concept of production for security is going to replace kind of ESG. When we're thinking about sustainability, it's going to be much more like, what do we need at the base? And this is going to sound wonky, but, I look at Maslow's hierarchy of needs. I always think that's probably the most useful course I took was Psych 101. But it talks about you basically need shelter, you need food and all those things before you can move up to self-actualization. And we are kind of at the self-actualization. What we would like, I'd love to do this, I'd like to do these things. And then we realized we had our base eroded. We cannot produce the things that we need. How can you be safe or sustainable if you're not making some level of your basic necessities? So I think that's where we are headed. I think the government's the first to see it. I think capital is already starting to flow into it. So capital is going to be second. Corporations are going to adopt it. And I think Europe's going to start following. I think Europe's going to fight it a bit more tooth and nail. But ultimately, they're going to get dragged into this where you have to produce your basic necessities or some portion of it yourself and work with close allies, because you cannot just rely on China to be your friend.
Peter Scheer, thank you so much for being with us. Always really illuminating. Peter Scheer of Academy Securities, and this kind of goes to the heart of the issue. I remember a year ago when APEC was being held in Peru, and there was a real question over who is going to win the war right now. Is it going to be China or is it going to be the United States for one of the most important reserves of copper, of pretty much a ton of minerals that are absolutely essential to our modern world?
I remember when you were there and the reporting you did was China is so present at this conference. They're present there. They're present in Africa. What does the U.S. do about that? To Peter's point, as they increase their reliance on those beneath us to the south of us.
There were Chinese flags. Xi came. He was going down the boulevard. Everything stopped. Real difference in tone. Coming up, we're going to be talking more about the emerging markets as well as artificial intelligence with Ed Al-Husseini of Columbia Threadneedle, who thinks that maybe AI productivity gains are overstated.
Silence isn't empty. It's full of proof. When a silent gesture orchestrates masterpieces, we're not just one step ahead, we're in a league of our own. From 50 years ago to today to tomorrow, CIB has always been here. Growth, innovation, and setting the standard for half a century. Progress driven by quiet mastery.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
We are heading into the open about 3 hours away. Right now, what we see in the morning futures is lower across the board after the biggest one-day gain going back 6 weeks. NASDAQ leading the charge lower, down 0.3% despite the gains that we're seeing on the likes of Alphabet. What you are seeing yesterday was the biggest two-day pop for both the S&P and NASDAQ going back to May. Optimism around potentially Fed rate cuts. Take a look at 2s, 10s, and 30s. You do see a bit of that optimism fading, but definitely below where they were yesterday. Two-year yields getting a bid after we heard from Mary Daly that she was inclined to cut rates next month. She is not a voting member. Nonetheless, she tends to work with Jay Powell and tends to agree with him. John Williams also on deck for a cut. I am the one who's actually watching, Danny, and counting each of these. It looks like it's pretty evenly split right now with a lot of undecideds, and a lot of people are saying this is up to Jay Powell to decide whether or not this is a Fed cut or a Fed hold.
Which is why Mary Daly was so important, because, to your point, she's very closely aligned with him. It's a very different environment. We've moved away from consensus building. And I also think interesting in that Mary Daly article, interview with the Journal, was she said, this is a good thing, this is a healthy thing, you don't want groupthink. The question will be whether that protects the Fed or exposes them in an era where you have a Trump pick at the top of the helm.
Yeah, and whether it gives any kind of guidance at a time where the guidance aspect is very much part of monetary policy transmission, which is a key question. Right now, we are 3 hours away from the cash open. Let's get some morning movers with Vonnie Quinn. Vonnie.
Well, Lisa, it is all about AI today, so let's take a look at these companies because you've been talking about it already this morning, TPUs versus GPUs. Remember, NVIDIA was great at making those graphics processing units. Well, now Meta is in talks, apparently, according to the information, to buy billions of dollars worth of TPUs from Google, the Alphabet company. Obviously, that could have an impact on NVIDIA going forward. Now, is this the very, very beginning of maybe what looks like the end of dominance for NVIDIA? Maybe. We'll see. But the shares are definitely suffering. Pre-market down 4%. AMD also along with it down 3.5%. And the Google parent up more than 4%. Let's switch it up because we are now looking at Alibaba. Just reporting this morning, we were talking about Qwen yesterday and the relaunch of all of its AI tools and its push into that. Its rivalry with Tencent and with Baidu, well, paying off apparently in the quarter. The ADR is up 4.5%. Overall revenue was up 5%, but its cloud intelligence revenue up 34%. Massive growth in that revenue in the quarter. And then let's take a look at SanDisk because, You mightn't think of it. It's a memory chip company. We all remember carrying around those thumb drives and so on. But this is also really an AI story. This was bought by Western Digital back in 2016, spun out this February, up 530% year to date since it was spun out, up another 2% because it is now joining the S&P 500, and that's been giving the shares a boost. But obviously, there has to be an AI portion to this. It's in talks for the build-out of large-scale data centers as well. So that's helping this memory chip maker today.
Thank you so much, Bonnie. On our radar this morning, tensions rising between China and Japan over the status of Taiwan. President Donald Trump holding back-to-back calls with the leaders of both countries. Any sign of the U.S. aligning with Japan could end up derailing its trade truce with China. Meanwhile, NVIDIA under pressure following a report that Meta is in talks to spend billions on Google's AI chips, millions, billions, trillions. The information reporting Meta plans to use Google's tensor processing units in data centers beginning in 2027. And real quick, TPU versus GPU, Danny, it is...
I wish I brought my PowerPoint with me.
Yeah.
Okay, TPU is Google's chips. They're specifically designed to do the tasks of Google's cloud, so they're very efficient, both in terms of ability to get work done and energy, versus NVIDIA's GPUs, which were originally built as graphics processors, so they do more tasks, but a little bit more clunky, take up more energy. So you could say Google's better. The issue is there's a lot of locked-in syndrome. It's really hard to change cloud providers because so many people already use those types of data centers with NVIDIA chips. It makes it harder to transfer to Google.
There is this 1-2 punch, and it comes to something we were discussing yesterday with OpenAI and this question of whether Google could potentially supersede it in terms of Gemini 3 and some of its capabilities. This next story about NVIDIA versus Google and the idea of Google selling chips to Meta just reiterates this feeling of disruption and this ongoing sense that the story that we're seeing right now in AI is not the full story. It is not the end of the story. This is just the beginning, and we're not really seeing the full iteration.
And it's still a market, you'd have to argue, that hasn't decided who the winner is. You could do the Dan Ives thing. He's just put out a note with his top AI picks. It's kind of literally all of them. So that is one bet and one way you could do it. But if anything, it's a market that is more discerning. And again, I think Alphabet coming in as a challenger is so interesting because they have so many corporate relationships. They have better brand power than OpenAI does. So who's to say, if they can get people to switch over, that they're not going to be the ultimate winner?
Yeah, and just to add on to this, SoftBank shares tumbling to a 2.5-month low, with investor concerns really coming out after OpenAI with respect to potentially Alphabet's Gemini 3 superseding OpenAI, which is part of the reason why people are wondering, what is this iteration going to look like? Let's stick with AI. Ed Al-Husseini of Columbia Threadneedle casting doubt on the so-called productivity boom, writing, AI will lead to an acceleration in automation, which has been a central feature of economic growth. AI will have no impact on aggregate economic productivity. Ed joins us now with that bold statement. Ed, why do you think that that's the case, given the fact that so many people are saying that is when this will start to pay off? That is when this will be disinflationary and not necessarily just the investment in nuts and bolts in the physical world?
Yeah, absolutely. Look, we've seen these waves before. The point I wanted to make is it's really difficult to translate technological innovation, which we've seen pretty much continuously over the course of the past 40 years, into aggregate economic productivity. That's extraordinarily difficult. It really requires us to reorganize how we make economic widgets.
So at this point, you're saying that there are implications for the fixed income world in terms of the ultimate payoff, right? Because it comes to not only the corporate debt market that's been fueling and funding a lot of this, but also it goes down to the expected inflation rate and just what kind of growth you can see on the heels of AI. So where do you think the biggest misunderstanding really is right now?
Yeah, I mean, part of the problem is we're channeling an extraordinary amount of savings now into the AI thematic. It's going to cannibalize to some extent the capital that's available to other parts of the economy, including the treasury market. We're in the early stages of this. The AI theme has just come to the investment grade market wholesale. It will be with us for a number of years, no doubt. But one of the risks is it starts to lift yields across the board and starts to make the cost of capital more expensive for other companies. That ultimately could be a drag on growth down the line.
This is a real crowding out, because not only in capital, but in manufacturing capacity, the way that energy is used too. So wouldn't that be a healthy thing if all of a sudden we've decided we've gone so too far and AI backs up and the spending on AI backs up? Does that open up other parts of the economy to make use of this capital, make use of the energy, make use of America's manufacturing capacity?
Yeah, eventually. That could very well be the story. We've seen this happen in other parts of the world. China is a fantastic example of this. It's gone too far. We're now seeing deflation, outright deflation because of that capacity in China. It's very early in the story, but one of the risks is we've invested an extraordinary amount of capital, some starting with a T at this point, in the AI thematic, and some of that capital either depreciates rapidly or is stranded and doesn't contribute to economic growth.
What happens to private asset players who've all started to pour money in this? A lot of the conversation there is, we're not taking AI risk. We're taking meta risk. We're taking Oracle credit risk. If what you're talking about, that corporate bond markets also start to feel some of the pain, what does that do to this entire ecosystem of funding?
Yeah, it's quite vulnerable. Let me say this. The good news is we're starting with corporate balance sheets that are extraordinarily strong. These are high quality, high grade issuers. The corporate bond market, particularly the investment grade market, was practically invented for this. It's there to fund these themes. So it's going to be a while until we get to a point where it starts to degrade and we see whether it has an impact on earnings. But the fact that the story is so deeply interconnected is definitely a vulnerability. That's not a new theme, but it's going to be with us for some time.
So how much of a liability do you think this is for the Treasury market?
A little bit. And again, the good news is we're sort of focused on the narcissism of small differences. What is the Fed going to do in a couple of weeks? The AI theme doesn't affect that in any meaningful way. One of the core questions for the Fed in the next couple of years is, should we assume, the way Greenspan did in the mid-90s, that productivity is rising? That's a license to keep monetary policy tighter than it would have been otherwise. If they make a mistake, and look, Greenspan got lucky and he got it right, but if we make a mistake, that leads to lower growth, that leads to tighter policy, that leads to lower inflation in the coming years. And that's going to be a really, really interesting debate in both 2026 and beyond.
If this does lead to greater weakness and potentially overly tight financial conditions, at least for the rest of America or the rest of corporate America that hasn't experienced the AI boom, are you expecting this to be essentially disinflationary for the wrong reasons, right? The idea that it could actually slow growth and end up in a situation where the corporate debt issuance really suffers because the growth just isn't there to really fuel the returns and the profits in an ongoing way?
Yeah, let me start with the second part of the question. So if productivity does not materialize, or in other words, productivity is very concentrated in parts of the economy that potentially deliver earnings to these companies, it's fine. If productivity becomes more diffuse and the economy as a whole starts to lift, that's a license for, again, higher interest rates across the board. That's a license for a healthier growth story. That's something we saw in the mid-90s through the mid-2000s. Great outcomes in terms of inflation, fiscal, interest rate stability, and so on. The challenge for the Fed is, again, if we make the wrong assumption in the short term and we put that higher productivity story into our strategy at the moment, you could make a much stronger case for tighter policy, and that would be a mistake at this stage.
So if that's the case, what's your highest conviction right now heading into year-end, into 2026?
With respect to interest rates, look, I think we have a starting level of real yields, inflation-adjusted yields across the board that are still quite healthy. At the same time, when you look at the corporate debt market, where we're financing and underwriting this AI story, corporate spreads are extraordinarily tight. There's a lot more room for those spreads to widen, and there's a lot more room for real interest rate, inflation-adjusted yields to come down in the course of the next 12 to 18 months.
What would it take for spreads to widen, though? Because this is a market that's flush with cash looking to put it to work. And it feels like every single auction, every single debt issuance, that there is so much demand that spreads, even when they widen, are widening to 70 basis, nothing crazy still, even when you do see widening.
Absolutely. And the appropriate answer is, I have no idea. All I know is, at the moment, investors are not being compensated for a lot of the risks that they are taking, particularly in weaker balance sheets. How quickly those balance sheets degrade ultimately is going to be the key part of that narrative for next year. And then most importantly, we need a shock to our beliefs. That's what always happens. There are deep stories that are embedded in the way we price these spreads. There are deep stories around the AI thematic, for example, that are being embedded in how we price assets in the economy. Shocks to stories like that ultimately are what reorient credit spreads.
I think that we've had enough shocks for this year, but we could have more, and that's what Al Husseini of Columbia Threadneedle is laying at. And thank you so much for being with us. Have a wonderful Thanksgiving. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief, the Vonnie Quinn. Vonnie.
Lisa, thank you. UK Chancellor Rachel Reeves is getting ready to deliver her autumn budget tomorrow. Sources telling us here at Bloomberg she will announce plans to slash the amount Britons can save in their tax-free cash ISAs each year by nearly $16,000. The decision is part of Reeves' push to get households to invest more in UK stocks. Apollo Global Management CEO Mark Rowan saying people have, quote, lost their minds over private credit fears. Rowan rejecting the notion that adding private assets to retirement and insurance portfolios could pose a systemic risk. According to the Apollo executive, most private credit held by insurers and by pension fund buyers is rated investment grade. Rare layoffs taking place at Apple. Sources telling us here at Bloomberg the iPhone maker has eliminated dozens of roles in its sales organization in a bid to streamline the way it offers products to businesses. The affected positions include account managers and staff who operate Apple's briefing centers and product demonstrations. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, looking for the edge in trade talks.
I think the question that we are negotiating is how to do things bigger and better together between our two great economies.
Former senior White House trade advisor Kellyanne Shaw joining us next. This is Bloomberg Surveillance. Good morning.
Global electricity demand is set to surge 75% by 2050. Infrastructure alone won't keep up. To power the future, we must change how energy is used, not just how it's generated. The missing link? Demand-side solutions that unlock efficiency, productivity, and resilience. The Bloomberg New Economy Energy Technology Coalition is uniting industry, innovators, and investors to scale these technologies for a future-ready energy system. Learn more at bloombergneweconomy.com/ntech.
Less than 3 hours away from the opening bell, you can see a little bit of a rebound from the earlier lows in futures. Futures softer across the board, down about 0.2% for S&P. But you can see a bit of just sort of meandering after yesterday's rally. Yields marginally higher on the long end, lower on the front end, 4.03% on the 10-year. Take a look at these retail names. We are getting some earnings this morning. We're getting Kohl's, Dick's, Best Buy, Abercrombie & Fitch, Dell, HP. Just moments ago, we got Burlington Stores, which is a discounted retailer. And Danny, it did seem to be a beat, which is, again, sort of this interesting question of, is a beat on some of these discount retailers a good thing for the U.S. consumer, or one that potentially belies a little bit of concern and choicefulness, as the word of the day seems to be?
You add that, and then you add Walmart doing better, getting higher income consumers coming down. Maybe it's not a great thing, but I have to say expectations clearly were very high for Burlington. Shares are down very sharply, and I wonder if it has to do not with what they're saying are great trends, but the fact that their third quarter comp sales were much less than expected, about half the rate that they expected. Maybe they didn't raise things enough. So it's one of these companies that people are like, yeah, you're a discounter. We know you're doing well. And if you don't show up and raise things more than you have, we're going to punish you.
Yeah, revenue missing. They did say that traffic to our stores fell off significantly after the back to school period, driven by unseasonably warm temperatures in our major markets. This comes after some discussion over hurricane season when it comes to the Lowe's and the Home Depots of the world. We'll be watching out for other retailer earnings, just as a forward-looking read on what we might expect during this holiday season. Under surveillance this morning, looking for the edge in trade talks.
I think the question that we are negotiating is how to make the deal bigger, how to make it stronger, how to make it more inclusive, how to bring in these digital markets act and try to improve that for digital America, how to maybe do steel and aluminum and how to include that, how to do things bigger and better together between our two great economies.
Here's the latest. Talks underway to preserve trade deals reached earlier this year. Former senior White House trade advisor Kellyanne Shaw writing, the détente between the U.S. and China is continuing to hold, and I expect it to through New Year's. I am increasingly skeptical about the durability of the U.S.-EU trade deal. Kellyanne joins us now. Thank you so much for being with us, Kellyanne. Let's just first talk about what you make of the idea of negotiating a deal for the EU and the U.S. that supposedly was already set in stone.
Yeah. Good morning. Thanks so much for having me on. This is why I'm so skeptical about this deal and frankly watching it very, very closely. The United States and Europe announced back in July that they had agreed on a package of mutual concessions, including tariff cuts going both ways. The U.S. implemented that going all the way back to August 1st. The EU has only introduced its legislation with no real hope of even passing it in the short term. So the EU has yet to cut a single tariff line. Now, the U.S. is in Brussels. You have Ambassador Greer as well as Secretary Letnick, who are there talking to their counterparts. What seems to be on the table is a potential deal on steel in exchange for concessions on the digital single market, on the DMA, on some of these digital regulations. But the EU has said that they're not budging on that. So I don't expect the U.S. to budge on steel and aluminum either, which means we have an impasse. And I think as soon as the president starts to connect with the fact that the EU hasn't cut a single tariff line, that's going to spell some serious trouble for this relationship.
That relationship has been frayed for quite a while. There are ongoing questions also about the U.S. and China. And I think that right now more people are focused on that just simply because of how essential trade is between these two economies, particularly when it comes to rare earth minerals and a couple other products. I'm just wondering what you make of the phone call between President Trump and President Xi and this idea of a visit coming in April.
Yeah, this was a really interesting conversation. It wasn't interesting so far as the two leaders spoke. They speak all the time. It's not unusual to follow up with a successful meeting and a deal that is being implemented to touch base, to talk about the trade issues, to talk about China's soybean purchases, wheat purchases, and other commitments that are coming due. But what I found so interesting were the competing readouts, and one in which China really rushed to get out. The president didn't even give his own readout for several hours later. China's was almost exclusively focused on this issue of Taiwan, on the importance of Taiwan, saying the U.S. had acknowledged the importance, talking about its criticality for the post-world international order, while the U.S. readout didn't mention Taiwan at all. It was focused on the trade deal, focused on Ukraine. And so it's this he said, she said, what actually happened in this call mystery. Now, of course, there are no transcripts available to the public about what happens in these behind-the-scene phone calls. But what is interesting is the narrative that both sides are laying out. And I think what is clear is what's on China's mind right now. I think the president's focused on this trade deal. But when the president does go visit President Xi in April, I have no doubt that Taiwan is likely to be on the agenda, at least from China's perspective.
The fact that Taiwan wasn't mentioned by President Trump, Kellyanne, does that say anything about the White House's willingness to step in should there be military action from China to Taiwan?
I certainly wouldn't read that into an omission. I think from the U.S. perspective, this call was really about checking in on the trade deal, discussions around what's happening in Ukraine. The administration has said several times over the past few months that there's no end to the Ukraine-Russia war without China's active participation. So I do think that those are the things that are likely on the administration's mind right now. I think what is clear based on what is happening between China and Japan right now, the concern over Taiwan is really this messaging campaign that we're seeing from China. This seemed to me more about a race to win the narrative versus what actually happened in the call. And I think that's why you're seeing the U.S. just not address it.
I was going to say, in terms of competing narratives, you also had the Japanese prime minister say that she received a call right after that China-U.S. call from the president. But we didn't really hear about it from the side of the U.S. Kellyanne, what do you make of that?
Yeah, clearly there is a tremendous amount of tension right now between Japan and China. China's threatening to cut flights. There is a huge diplomatic row right now over the prime minister's comments about the existential threat to Japan of any sort of military incursion by China into Taiwan. I think what the United States president is showing is solidarity with the prime minister. I think this is about saying that we are with you. We stand with our ally. I don't think the president needed to issue any sort of statement to make that point. The fact that that phone call happened was the message. And so I do think that the United States and Japan are united. But again, this issue of Taiwan is increasingly on President Xi's mind. And I think this will be a real point of tension, particularly going into those April meetings. And I expect President Xi to try to squeeze the president for something on Taiwan. And that's when we'll see what the U.S.'s real position is here.
Kellyanne, how much is it a tit for tat, this idea that if the U.S. does shift away from hardcore rhetoric around Taiwan, that China will help with the Russia-Ukraine war and potentially bringing an end to it sooner?
Look, I think that China is likely to use all of its leverage points in terms of trying to push issues that are so important to it. And Taiwan is issue number one in terms of the things that President Xi wants to do. But look, I do think that the U.S. position is strategic ambiguity. I don't think that the fact that the president hasn't departed from that, or at least said anything from that, indicates a different pivot point in U.S. policy. But again, the rubber is really going to meet the road come April, when I fully expect President Xi to push the president on this issue. And then again, we'll see what the result is. But the U.S. position, as far as I'm aware, has not changed. I think strategic ambiguity continues to be the U.S. view.
Former senior White House trade advisor Kellyanne Shaw, thank you so much for being with us. Definitely the two different readouts were notable, given the idea that people were wondering, what exactly is this phone call and what exactly will this meeting be in April?
Right. And what did President Trump say about Taiwan? What was his response? Because the Chinese angle was very clear. To them, it's a matter of sovereignty. And for the White House's response, just question marks at this point.
Yeah, and question marks around AI and just how much the U.S. was willing to sell chips into China. Coming up next, John Bilton of J.P. Morgan Asset Management, Jeanette Lowe of Strategas, Lauren Murphy of Wells Fargo, and Samantha Dart of Goldman Sachs as we get retail earnings as we parse through the day ahead with Google very much front and focus.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
What I am a little bit worried about is that the Fed is kind of dragging its feet.
It's sort of confusing what you're hearing out of the Federal Reserve.
You might not want to hold the Fed to the same standard as in normal times.
It's certainly a much more rowdy and disorderly process from the Fed than what we're accustomed to.
We will get 3 rate cuts over the next 12 months, but December's still a toss-up.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks meandering after the biggest two-day pop since May, taking some heat out of that today in futures. Retail sales trickling out for the likes of Burlington earlier, Kohl's and Dick's Sporting Goods as the holiday shopping season kicks off, with traders awaiting September retail sales data in about 90 minutes' time. And Alphabet becoming the U.S.'s third most valuable company, approaching $4 trillion in market capitalization as it presents stiff competition to both OpenAI and NVIDIA. Danny, this question of disruption very much roiling the artificial intelligence space.
It does. There is so much churn underneath the surface as the market hasn't fully decided on who's the winner. We're going from the, yay, everybody's a winner that does anything with AI and spends money, to, hey, maybe not everybody is going to be okay. But one of the interesting things is, despite how volatile that sort of back and forth has been, it is the Fed that's dictating the overall directions of markets. It was yesterday in hopes of a cut that was lifting us up. Weeks before, it was doubts of a cut that was pushing us down.
Yeah, and this is really going to the bifurcation that you're seeing in the market. So even though we did just see the biggest two-day pop going back to May, there was Again, that bifurcation, this tale of two halves within the market, with about half the market not participating, the consumer-facing stocks not exactly rallying. You saw, for example, Carnival shares falling quite considerably. And it goes to this question, how long can the AI trade continue unless you get participation of the rest of the economy? And is the Fed too late to turn around the weakness that we've seen in certain pockets, akin to what we were hearing yesterday from Neil Dutta?
I also think that's why what El Hudsaini told us from Threadneedle was so interesting, because the idea that a productivity boom is going to come to the rest of this market and to save us, even if AI spending slows, he cast doubt on that. And that's a real problem for those that say, yes, the AI trade, but all these other companies are benefiting from it too. What happens if they don't? And what happens if that happens at the same time of a slowing consumer?
Meanwhile, this is the shopping season, and that's the reason why the retail earnings have been so interesting. We saw from Burlington, they did raise their full year forecast, still taking a beating on comp sales. Kohl's, just take a look at that, jumping 15% after their comp sales beat estimates in the third quarter. This is a company that just had a new CEO come in, but those shares really rallying after seeing full year operating margin significantly above where it previously expected, and just beats pretty much across the board, Danny. This to me is really interesting.
It is fascinating. And the margin story, which you just pointed to, again, this is a sector that we assumed margins would be really bad. We assumed that they'd be paying more and they'd have to move it along to the consumer. That's not what's playing out. They're finding clearly efficiencies from somewhere else. And for a company like Kohl's that has been in such need of a turnaround plan, the idea that they're able to do it in this environment with a new CEO at the helm, again, is getting greatly rewarded by this market.
The word efficiency keeps coming back to that, and we will keep looking at that. Right now, the efficiency in market is just slightly lower after yesterday's rally. You're seeing equity futures lower by about, it was 0.2%, reprising some of that as we do get some of these earnings now basically unchanged. We are seeing unchanged on the 10-year. Wow, this is not a very active board today. Coming up this hour, John Bilton of JP Morgan Asset Management, as investors maybe tap the brakes, maybe just take a pre-Thanksgiving pause. Jeanette Lowe of Strategas as Ukraine peace talks gain momentum, and Samantha Dart of Goldman Sachs on why energy is the key to winning the AI race. We begin this hour with stocks sort of meandering following yesterday's tech-fueled rally. John Bilton of JP Morgan Asset Management seeing potential for positive returns, writing, the recent pullback is presenting a buying opportunity, and we feel the gloomy narrative on tech is somewhat overdone. John joins us now. John, thank you so much for being here. I could use a little bit of excitement and optimism this morning. I'm wondering why you think that any kind of rally is going to come on the heels of people watching the AI space and gaining enthusiasm about it again, rather than focusing on the transformation and the competitive landscape that we're seeing, certainly on a morning like this one.
Well, I think we've got to remember what tech actually is. It's about innovation. It's about the next new idea, and it's about continually challenging itself. Think back to, I think it was February time, when, of course, we had DeepSeek suddenly appeared on the horizon, and everyone thought, oh, my goodness, what does this mean for US tech? You know, it's all over. Was it? Absolutely not. We got the strongest rally out of tech that we've seen in an awfully long time from April onwards. So I think what we're beginning to see is something of a maturation. We're seeing competition begin to come in. You know, we're seeing different opportunities using different technologies for different purposes, etc. There's a lot of money going in. This year's or this third quarter's results from the tech leaders show huge capital spending commitments, which will continue to boost the investment share. Open question on productivity. Longer term, you know, we've looked at this in our long-term capital market assumptions work. We do feel that productivity is set to gain, but it's a long burn. It requires the investment first. And so we think that there's reasons to be positive, and we think that with this cycle of investment happening now, there's reasons that we will see dips bought.
Is there enough cash and enough investor enthusiasm to supersede any kind of hiccup that would come from, say, just theoretically, a company that's worth about $500 billion and is private, that has a lot of loans, that's sort of trying to grow into the image that it has for itself, OpenAI? If you do get some sort of blow up of one of these companies that has been more speculative?
Well, look, take a step back from the individual companies themselves. There's a lot of capital in motion right now. There will probably be winners and losers out of that. I'm not a stock analyst. I wouldn't want to project as to who's who. But with the amount of capital being spent, we know that up to around 80% of total factor productivity gains typically can be explained by the upfront investment. Bigger issue we have right now, actually, again, if we take the long view, we know that the input of labour into growth going forward is going to shrink. We've got bipartisan support for clamping down on migration, and it's a global factor, by the way. It's not just a US thing. So it amplifies the impact of an aging population. So as my colleague Dr. Kelly likes to say, someone who I know is on this show quite a lot, productivity is what happens when you run out of workers. And guess what? So we are constructive there, but we're tracking a chain of events from the investment being made to the technology being built to the adoption taking place and then the full deployment. No prior tech cycle, mainframe, e-commerce, mobile telephony, and now AI, has not gradually broadened out through time. So we are optimistic about the overall technology cycle here, and still in the early stages, we think.
It's incredibly complicated, though, and I was joking with Lisa earlier that, I, for some reason, spent a huge chunk of my day yesterday understanding the differences between TPUs and GPUs. You say you're not a stock analyst, and you're certainly not a tech-specific one at that, but is there a sort of sense that in order to be an active investor, in order to actually understand who are the winners and losers, you need to have a technical know-how that most people don't have? Does it pay to be hyper-specialized on tech in this kind of environment?
Well, I think the same is true on any sector. If you get down into the depths, if you don't know the difference between an oncology drug and a therapeutic, you're not going to be a very good pharmaceutical analyst.
But this is a sector that dominates the market, though, whereas you can't say the same for pharma.
But fair point. But if we think about it, you can break it down into the jobs that tech is doing. Highly specialized functions need that real top-end cutting-edge innovation. That's where your GPUs are coming in. Your TPUs, which are much more, brute force, can apply a lot of processing power to a more single direction. I think the ability to be able to scale and learn fast about what one is investing in. Actually, funny enough, if you think about it, that's an amazing AI use case. So I think what we can see is how we stratify different uses of AI. Are we automating simple tasks? Are we doing large modeling of very unstructured data? Those are two different endpoints. But just having that basic understanding of what's leading where, I think, is reasonable as a financial analyst anyways.
To that point, there was the dream of agentic AI and superintelligence, and it's something that Sam Altman talked about, Jensen Huang, and it's a thing that really built up stocks and had this, I don't know if you want to call it bubble, but anyway, high valuations because of this far promise in the future. Has something changed? Have we decided that we care less about what's happening in the future and more about the here and the now in terms of profitability and actual use cases of AI?
Well, I think there's a little bit of both, really, because I think that we always want innovation. It's one of the reasons why we continue to see that the US carries on dominating global market capitalization, even out 10 to 15 years from now, when we look at the work we've done in our capital market assumptions. So that innovation cycle is incredibly important. But at the same time, this is what separates in our mind from the dot-com era to where we are now. We've got high-quality, cash flow generative companies making investments that actually have real-world gains. And once more, I'd come back to that point. Productivity is what happens when you run out of workers. And that's the biggest driver to us. It's not the robots coming for our jobs. It's the fact that there are fewer of us. And we still want to be able to sort of develop processes and growth around that.
This is the reason why people are having such a hard time getting a handle on what exactly is going on with the economy during this transformation that has a very different kind of time frame. We're going to be getting ADP payrolls numbers coming up on their weekly at 8:15. At 8:30, we're going to get backdated, stale data from September. We are getting details from some of the retailers who are reporting earnings today. I'm not going to have you comment on them because I know you're not a single stock analyst, but it's been generally a positive read. It hasn't been gloom and doom, and yet what we're hearing from a lot of people is that there is a lot of gloom and doom, and you are seeing that in the bifurcation of market performance. Do you think that is overstated in the non-tech names or not tech obvious names, the idea that the consumer really is a lot weaker than it might seem?
Well, I think there are differences in the consumer as you look across income cohort, for instance, but we know that the dominant piece of retail sales of any sort of activity in the consumer space is driven by the upper income brackets. Where we will get some impact, though, of course, and this is the delayed impact of the Fed, will be on gradually lowering those costs for consumers across the board. We're also seeing oil prices reasonably stable, which is great for households at the end of the day. These operate with a lag. Right now, if we had a very exuberant consumer, I'd feel much more concerned about the outlook for the economy. When you've got the consumer, when you've got consumer sentiment really, really weak. In Europe, 15.3% household savings rate. It's the highest we've seen outside of the pandemic. The consumer has actually a surprising amount of coiled up sentiment and coiled up savings as we look around the globe more generally to put to work. We get big issues a thawing between Washington and Beijing, as we've seen a little bit of. Possibly, and we hope, perhaps steps towards peace between Russia and Ukraine. As we get some of these big sort of geopolitical overhangs working their way through, the potential for a pickup in sentiment could be quite powerful from the consumer's perspective.
And a lot of retailers are trying to get ahead of that and build up their portfolios. John Bilton, thank you so much for being with us. Have a wonderful Thanksgiving, if you celebrate. John Bilton of JP Morgan Asset Management. And we are seeing certainly coal shares absolutely surging now, up more than 20% after those earnings. But what you can see across all of the earnings is a tale of different corporate execution. And this question of efficiency, this question of market share, this question of which goods they can actually raise prices on. And Danny, to me, that's the reason why it is so hard to get a more macro read from some of these micro earning reports versus just corporate strategy to adapt and adjust.
It's such a good point because you've seen it all throughout earnings season. Does the fact that all of a sudden the fast casual restaurants are doing really poorly, does that mean everybody is doing poorly, but TJ Maxx is doing well, Kohl's is doing well, Walmart is doing well? Is that a good thing or a bad thing? It is a choose your own adventure, depending on what company you pick and what narrative you want to build around it.
Just give more protein. That's, I think, what we've learned. Anyway, we'll get into that, or we won't get into that. Let's get to an update on stories elsewhere this morning. Here's a Bloomberg Brief with Vonnie. Vonnie, thanks so much.
Lisa, thank you. Tensions rising between China and Japan over the status of Taiwan. President Donald Trump holding back-to-back phone calls with the leaders of both countries. China's foreign ministry saying the U.S. initiated the hour-long call with President Xi Jinping. Trump then called Japan's prime minister to reaffirm their ties. Any sign that the U.S. is siding with Japan on Taiwan could jeopardize its trade truce with China. A federal judge has thrown out the criminal charges against former FBI Director James Comey and New York Attorney General Letitia James. The judge ruling the prosecutor who brought the cases had been illegally appointed. And nearly 2 years after the mid-air calamity that plunged Boeing into crisis, the company says it's making progress in its war against defects at its 737 jet plant factory. The company's efforts include weekly meetings where employees discuss on-the-job impediments and irritants. Boeing says it's seen encouraging results and is planning to increase 737 output to 60 jets a month. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, bringing the war to a close.
The idea that the United States of America is not engaging with both sides equally in this war to bring it to an end is a complete and total fallacy. That could not be further from the truth.
Jeanette Lowe of Strategas joins us next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Less than an hour till ADP Tuesday. It kind of doesn't have the same kind of ring, and yet we are going to get ADP payrolls data coming out at 8:15 that might give us a little bit of a current look at the underlying economy. Right now, stocks doing nothing. Futures basically unchanged. On the S&P, we're tracing losses from earlier this morning. We are seeing 10-year yields marginally higher, but lower versus where they were this time yesterday, 4.03%, and crude just off by about 0.4%. Under surveillance this morning, bringing the war to a close.
The idea that the United States of America is not engaging with both sides equally in this war to bring it to an end is a complete and total fallacy. That could not be further from the truth. I have watched as the president and his team have worked around the clock overnight with both sides on endless phone calls, endless meetings to try to bring this war to a close.
Here's the latest. Peace talks between Russia and Ukraine gaining momentum. Sources telling us here at Bloomberg, a U.S. official is meeting a Russian delegation in Abu Dhabi ahead of President Trump's Thanksgiving deadline. Bloomberg's Mika Solner joins us now. Mika, what's your sense of where we are? It's gotten from a 28-point now to a 19-point. How close are we actually getting to some resolution in this push for a peace negotiation?
Well, the White House is very adamant to bringing this war to an end, but they have softened that Thanksgiving Day deadline, which is obviously just a couple of days away. But I know that, that they're really trying to stress and emphasize. We just heard White House Press Secretary Caroline Leavitt say that they're negotiating strongly with both sides. Now, this is to say the White House is also facing some criticism, saying that they're playing too much into what Russia wants. So we're going to see what they're doing there, and they're trying to work out those kinks now.
Mika, do we have a sense of what Europe's role is in trying to negotiate this and get back on the stage when it comes to trying to understand what the discussions are, who's having discussions with whom?
Yeah, I think that the White House says that they're working very closely, trying to keep everybody in communication. I know that there is a consensus that everybody wants this war to end, and I think that the U.S. is working strongly with European allies in terms of rebuilding Ukraine. But right now, they're still negotiating out a lot of this. The deal keeps changing and shifting. And so we're really going to see what comes. But I know that these talks are ongoing, and the administration believes it's making strong progress here.
Mika Solner, thank you so much for being with us. Jeanette Lowe of Strategas writing, it remains a question as to whether negotiated changes can hold and if Putin will agree to the ultimate plan. Jeanette joins us now. Jeanette, what do we know about what's been taken out of the initial 28 points that could potentially bring Ukraine closer to agreeing to this?
So, there's a couple of things that definitely started to push things a little bit more towards Ukraine's favor versus Russia's favor. That would be things like allowing Ukraine's military to be larger than it was under the 28-point plan, the potential for it to still be allowed to enter into NATO at some point if there is agreement, to allow NATO troops to be in Ukraine, but not on a permanent basis. So those were some things that allows Ukraine to have a little bit more stability with regards to its military, but then also having more security guarantees longer term. So we'll see if that holds. I think one of the issues has always been whether or not Putin really will agree to a deal. He came to the Alaska summit, made it seem like there was going to be progress made with President Trump, and then basically the talks went nowhere. So I think that remains to be seen. We hadn't seen Putin specifically say that this would be something he would agree to, even when it was the original 28-point plan, whereas there was much more pressure on Ukraine to actually agree, and it was left to kind of see then what would happen with Putin on the other side.
Given that after this, or as this negotiation has been going on, we had the call yesterday between Presidents Trump and Xi. What role will China play in this? Do you think that they will be able to exert pressure on Russia to accept any sort of deal?
It's interesting because I think one of the things that we've been watching too is what's been happening in Venezuela, and could that be an effort to try to put more pressure on Russia to accept a deal? I think there could be some pressure with regards to China to try to get them to get Russia to accept a deal as well. It also could be just China watching what's happening. Maybe they hadn't been involved in these discussions and wanting to make sure that they were at the table and kind of seeing what might be at play with Ukraine and thinking that there might be some similar tactic that might be taken with regards to Taiwan, since that obviously was a piece of the conversation that they held yesterday. But I do think Trump is really trying to push Russia to get to a deal. We'll have to see if that ultimately is successful, but he does want the war to end. He does kind of want lower oil prices, getting that geopolitical premium out of the oil prices. He probably also wants to separate Russia and China and having some those linkages during the war, breaking those apart a little bit, as he is trying to really remove the strength of China overall, kind of also focusing on decoupling the U.S. from China. All of those things are coming into play here. So I do think that ultimately it was probably more still about trade and Taiwan and issues with Japan at this point, and maybe even less so about Ukraine.
I was going to say, when it comes to trade, does it make any difference that these Ukrainian negotiations are happening at the same time that you have Trade Representative Jameson Greer and U.S. Commerce Secretary Howard Lutnick in Brussels trying to negotiate yet again with the Europeans on trade deals with the U.S.?
Yeah, I mean, it was obviously interesting that the Europeans were a little bit caught off guard by the original 28-point plan. So things are also within the administration kind of focused on very separate tracks at the same time. Things are definitely in their own lane, and then they do have spillover effects. But obviously, this has been something with regards to the EU and the US that there has been a little bit of tension with the Europeans thinking that with the steel and aluminum derivative products and things like that nature, that it seems like the 15% tariff rate that they've ultimately had is not going to hold and is not going to be as beneficial to them. They're obviously also looking for other tariff exemptions, thinking about things like wine and spirits and pasta. So there's also that very separate thing. But I think those I would probably tease apart. I think this is much more focused on there was the effort in Gaza that was relatively successful. The administration wanted to take that momentum and put it towards getting some sort of deal with regards to Ukraine. And there's obviously this piece about trying to put a little bit more pressure on Russia with regards to oil, with Venezuela. And I think now there's just trying to see if we can actually get to a deal. But I do think Putin is probably the bigger question mark here.
There's a potpourri of issues here, and I'm trying to parse out how much is cost of living issues, how much is some sort of domestic win to celebrate international victories, and how much is an effort to work with allies and really get some sort of understanding that can hold. How much of it do you think is a cost of living issue that makes the U.S. more amenable to potentially lowering tariffs or being more cordial in some of the discussions in order to at least lower anything that people pay back home?
Yeah, I mean, I think the one thing here is that the oil piece, even before this affordability issue has really kind of come to the fore over the past few months, the oil premium that, him trying to say, I want to end wars, I want to lower oil prices. This was something that Trump pointed out early on in his administration before he came in, and then early on in the beginning weeks and months. So this has always kind of been his goal here. So I think this is less about affordability and more about getting the war ended, but still having lower oil prices. The tariff exemptions, obviously, to some extent, were about lowering prices, but the administration had also flagged this early on. You always had Secretary Lutnick talking about the fact that the U.S. doesn't grow mangoes and that we'll probably have to exempt goods like that from the tariffs. So that is where we have ultimately ended up. Of course, it's happened as the conversations about affordability have really grown. So there is that component to it. But the fact that they decided to make the exemptions across the world for all of those goods. But even if you get some additional exemptions, let's say with Europe, and there's a cost coming down in some of those things, it's really not significantly large. We looked through all of the tariff exemptions that came out, and it only really reduced tariffs on an aggregate basis by $7 billion. And we still have nearly $380 billion worth of tariffs in place. So it's really not going to lower overall prices. It's really much more targeted at specific food items and that affordability aspect.
Jeanette Lowe of Strategas, thank you so much. Currently, affordability very much front focused during the retail season, and we've heard from some retailers about how they're handling it. A real motley picture here. I got to say, Danny, I mean, you look at the performance of these shares after they report earnings, and it's, again, choose your own adventure. It seems like everything is, as you were saying earlier, with some really delivering and some talking about efficiencies, Dick's potentially closing some Foot Locker stores.
And they're saying that even though they've boosted their outlook for a second quarter, and shares are being punished because everybody's looking for cracks, and the fact that they might need to turn to efficiencies, maybe that's a crack for Dick's Sporting Goods.
And this is the reason why so many people say this idea that AI made us cut jobs isn't really the story. It's actually we're just looking to cut money, to cut costs and preserve our margins. Coming up next, we'll be talking about that with Lauren Murphy of Wells Fargo as holiday shopping offers a fresh read on the consumer. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
about 2 hours away from the opening bell, and you can see futures just trying to find some kind of direction after being down as much as 0.2% on the S&P, now essentially flat. Even NASDAQ futures have really retraced. Yesterday was the biggest one-day pop going back 6 weeks, biggest two-day pop for both the S&P and the NASDAQ going back to May. The Russell 2000 turning around, up 0.2%, possibly on the heels of some comments from Fed officials yesterday. Take a look at 2s, 10s, and 30s, and you can see in the bond space, particularly on the front end, a bid. And this really comes after we saw San Francisco Fed President Mary Daly in an interview with the Wall Street Journal say she would support a Fed rate cut next month. She is not a voting member, but definitely is considered an ally of Fed Chair Jay Powell. There also has been Chris Waller, who wants to go. Of course, John Williams has also indicated, which is the reason why you are seeing a bid into that space. Here are your morning movers with Vonnie Quinn with 2 hours away from the cash open.
Well, Lisa, one of the narratives that's going to dominate today is TPU versus GPU, right? What are the switching costs? Would companies want to even switch? And that's because Apple is in the news, obviously up 4.25%. Meta is in talks, according to the information, to buy billions of dollars worth of Google's TPUs. Now, it could have gone the other way. It could have gone and bought Nvidia's GPUs. It didn't. And the question is, are TPUs better for inference? Are they more energy efficient? What would it mean down the road? Does it mean the beginning of the end of the Nvidia dominance? It's a big question. So you can see Nvidia down about 3.5% off its lows of the session, AMD down 3.8%, and those Alphabet shares rising. Let's get to some of the retailers now, because we had many report today. One of the better stories, Kohl's up 22%. That stock already up about 12% this year. So the interim CEO, Michael Bender, who was put into the position in May, has really proven himself in the third quarter, definitely stabilizing Kohl's. He has now been named full CEO. He is in that position from now on, and today bears him out. So sales were still down, but only by 1.7%. The estimate was for a decline in the third quarter of 3.9%. And for the full year, the outlook is now comp sales being down 2.5% to 3%, as opposed to down 3% to 4%. So you can see the ranges are a lot better. Different story at Dick's Sporting Goods. So Dick's down about 10% on the year, down another 8.5% today. It did raise its outlook for a second straight quarter, citing sales from existing stores. But consumer sentiment down in November, as we know. And this, how does it, bring Foot Locker into the equation? Well, CNBC is saying that it's actually going to sell some of the existing Foot Locker stores. And so that's one of the parts of this story. Adjusted earnings per share missed at $2.07. The full year forecast did get boosted, though, but obviously investors not buying this particular idiosyncratic retail story.
Thank you so much, Vonnie. There is this question of Abercrombie and Fitch as well. Those shares popping more than 10% after reporting better than expected earnings across the board. We'll get to that in a bit. What you are seeing, though, is, Danny, a sense that their third quarter comp sales came in not exactly well. They came in actually below, but you did see overall net sales increase and a sense going forward, some commentary saying people are really buying more strongly heading into the holidays.
It does contrast with what we've heard elsewhere, to be fair. You've had, Vonnie was just talking about Dick's Sporting Goods trying to close some of their Foot Locker locations. It speaks to this moment where if companies do innovate, and Abercrombie & Fitch has really changed their lineup, or you look at Gap, who's leaned into celebrities and different collaborations, that there is money to be spent. It's a story that's been evolving for the past few years. It's a consumer that has money to spend, but it's choosy, which makes it hard to develop an overall narrative about where we stand.
Yeah, the commentary coming from the C-suite. We achieved 3 years of consecutive quarterly sales growth, delivering record third quarter net sales with 7% growth to last year. The strong finish to back to school and fall seasonal transition very much front and focus. Meanwhile, spending on other things is on our radar this morning. Meta reportedly in talks to use Google's AI chips in data centers. According to the information, the agreement would help establish Google's chips as an alternative to NVIDIA's. The deal hinges on whether the chips demonstrate power, efficiency, and computing muscle. That is what Vonnie was talking about with TPUs and GPUs. Meanwhile, Apollo CEO Mark Rowan saying, quote, people have really just lost their minds when it comes to concerns over private credit. Rowan rejecting the idea that adding private assets to retirement and insurance portfolios can pose a systemic risk. Danny, this is what we've heard from so many of the titans of the private asset management world.
Yeah, because it's really hurt them. I mean, you look at the share price of these publicly traded companies of private credit, private equity, and they have been really damaged by it. I think it's a fair argument to make that it's not systemic. There can't be a run on the bank with these kind of companies. But maybe what some of the wobbles do demonstrate, and Mark Rowan has talked about this, that we are late cycle dynamics. So much money has been poured into the sector. It's no longer a niche corner of finance because of insurance money, because of the move into wealth, and that money has to be put at work. So has due diligence softened? Has it been moved to the wayside? And does that mean the certain blow-ups or at least stress you've seen just does become more commonplace?
So late cycle in private credit, early cycle in the economy, early cycle in some sort of downturn. I'm getting lost in terms of what inning, what cycle we're in, because I've heard 5 things this morning alone, Danny.
Yeah, maybe we're just, the cycle is dead. Maybe that's the answer, that the cycle doesn't exist.
Well, maybe we'll get some inclination from U.S. economic data. It is getting back on track. Sort of. Delayed September PPI and retail sales due this morning at 8:30 a.m. September PCE now set to be released on December 5th. Meanwhile, a slew of results from the retailers, as we've been talking about, continue to give insight into the U.S. consumer. And sticking with retail, just days away from Black Friday and the unofficial start of the holiday shopping season. Lauren Murphy, Retail Finance Managing Director at Wells Fargo, writing, holiday shelves are full, but prices may rise in 2026. Lauren joins us now for more. Lauren, thank you so much for being with us. We've been trying to get a read on the holiday shopping season this morning in an ad hoc way with all of the earnings reports that have been coming out. Do you have a better sense of exactly any consistent themes running throughout the retailers?
Yeah, so I think the good news is retailers, as I mentioned, are well stocked. The inventory is on the shelves. They're ready to meet their consumer where they're at. I think the constant theme is just this question of consumer sentiment and really what is going to be needed to get that consumer and traffic in the door this holiday.
Lauren, there have been various notes this morning. One from UBS Securities saying that consumers' willingness to spend has waned and they expect a mediocre finish to the U.S. holiday season. BMO on their survey saying that consumers are going to raise their spending on the holidays more moderately than they have in the past. What are you seeing? Are you also seeing that softening around the edges of a consumer spending this holiday season?
Yeah, so Wells Fargo economists are forecasting that holiday sales will be between 3 and 4% increase over year. However, that is not accounting for inflation. So I do think that consumers are seeking out value, they're seeking out discounts, and they're really mindful of their wallet this holiday.
A lot of what we've heard from the retailers, too, Kohl's being one of them, having a really good quarter. Best Buy, another one that's lifted their outlook because everybody is buying the new iPhones. Lauren, if there is this concern, is there a scenario where people have spent all of this money because they're concerned about the future? They're concerned about where prices go, where employment goes. So past strength can't necessarily be indicative of future strength.
That's right? This is still the prime time spending season between November and December. And we think retailers did a really good job trying to keep prices low heading into this holiday, pulling up forward inventory purchases ahead of price increases. I think we're seeing that in the results. We haven't seen the margin hits that we were probably anticipating. However, what we're hearing from our retailers is that may be coming in 26, right? They're trying to hold the line right now. However, the question is if they're going to have to increase prices just because they can't sustain it any further heading into 26.
And this goes to a question a lot of people have been asking. Have we already felt the ramifications from the tariff costs? Have they already been borne by a lot of these companies, or are they yet to come? Are you saying that they're yet to come?
Yeah, I think what we're hearing is there is a lag, right? Where people are, what we're seeing in the margins today are still at that pre-price increase because they pulled forward so much inventory in the first quarter. However, what we're hearing is that we do think that there will be further margin prices heading into Q1, Q2 next year.
Do you have a sense of how much prices will increase? Is it just commensurate with inflation? Is it beyond that? I mean, is there a range that retailers are getting a sense of during the holiday season based on what they can pass along and where now?
Yeah, I think that's a great question. I think what we're seeing, at least in this holiday season, is that there is a mixed bag of discounting strategies, right? And I think how that falls into price increases, where you're seeing retailers capping markdowns on well-selling items that still may have value that the consumer is still going to show up and buy, or they're trying to expand their discounting strategy to make sure that they're getting, that more consumers are getting value for a particular product. So I think it's a mixed bag, and that's more on the margin side. But as you relate to the price increases, I mean, I really think it's going to see where they have to hold the line and making sure that they're hitting their margin forecast because they're all worried about their bottom line P&L.
What about within the subsectors, Lauren? Are there certain parts of retail that are facing price increases more than others?
Yeah, I would say right now, most immediately, we're seeing it in home furniture, home goods, right? I think because there was such a high preponderance of sourcing in China in those industries, the price increases were just too swift, and they're already being passed through. However, I think we're seeing better resiliency in apparel and some specialty items as well. So I do think consumers are going to hopefully benefit from that this holiday season.
Is the home goods also an issue, just the fact that we've seen some of the big box home improvement stores that they continue to lag because of issues within housing? How does that trickle down to a home goods sector, for example?
Yeah, I think furniture is a good example, right? We're seeing a little bit more distress in that sector, knowing that just consumer spending, discretionary home sales, et cetera, right? People aren't going out purchasing houses, therefore they don't need to furnish these new houses. And so I do think that we are seeing the immediate impact of that across the sector.
Lauren Murphy of Wells Fargo, thank you so much for taking the time. And Danny, do you go to the store ever on post-Thanksgiving and celebrate by shopping?
As a creature who has a natural level of built-in anxiety, I can't do it because it skyrockets. I am one of the ones comfortably on my computer, like a cup of hot cocoa on one hand, scrolling through the deals. That's more my speed.
I think that you're more the common denominator than you are the exception at this point, given how many deals and offers I've been getting in my inbox. But it seems like people definitely decked out. Interesting to see some of the retail earnings that have come out this morning. A more positive tone than not, aside from Dick's Sporting Goods, but a sense that if you have a product that people want to buy with efficiencies, a lot of them are resurrecting some of their post-pandemic malaise.
But that's also why I'm kind of scratching my head, looking at, again, the notes that I mentioned from BMO and from UBS Securities saying that this is a consumer whose spending is waning. You're not necessarily seeing that across the board, but maybe it gets back to this issue we've been dealing with. People will say one thing and then they still buy when faced with deals.
Yeah, this has been the conundrum. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Gwynn. Vonnie.
Lisa, thank you. The European Union is rejecting the US's demand to ease tech regulation in return for lower steel tariffs. The EU's antitrust chief says the bloc's digital rulebook is, quote, not up for negotiation. The comments came after Commerce Secretary Howard Lutnick told Bloomberg his administration could relax levies in return for the rollback. President Trump signing an executive order on Monday establishing the, quote, Genesis mission, a federal effort to boost innovation using AI. It aims to coordinate research done by government agencies to integrate AI tools. Officials say the push will accelerate scientific discoveries in engineering, health, sciences, and energy. In sports, the San Francisco 49ers beat the Carolina Panthers on Monday Night Football. 49ers running back Christian McCaffrey had over 140 yards from scrimmage and a touchdown, while the San Francisco defense held Bryce Young and the Panthers to just 9 points. The Niners improved to 8-4 on the season, and Carolina falls to 6-6. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, powering the AI build-out.
We are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy.
Samantha Dart of Goldman Sachs joining next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Make it day 3 of a rally after 2 straight days of gains that were some of the biggest that we've seen since the post-Liberation Day rally. We are seeing an S&P futures, at least, that are turning around after being down as much as 0.2% earlier. NASDAQ also turning around as people get a little bit more optimistic about the efficiencies and some of the new progress and new developments going on there. You are seeing a little bit of a lift in longer-term yields, but just 4.03% on the front end of the yield curve. You do see a bid with the Fed very much in focus. San Francisco Fed President Mary Daly endorsing the idea of a December rate cut. Under surveillance this morning, powering the AI build-out.
Everything is about energy, right? Energy and technology are the main drivers of productivity. And we are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy. So the technology and the energy are combining.
Here's the latest. Electricity demand set to surge as the race to revolutionize AI calls for more energy. Samantha Dart of Goldman Sachs writing, as AI demands massive power, a reliable and ample power supply is likely to be a key factor shaping this race. Samantha joins us now. Sam, thank you so much for being here. Let's start there. The idea of a race against whom? Is this China versus the U.S. and a question of who can get the most computing power and then who can actually power said programming?
Yeah, these are the two front runners. You have today the U.S. holding over 40% of all data centers in the world right here. But China's number two, a little over 20%. And when we look at what's ahead, do we have the capacity to keep this going? I think that's where the differences really start to show, because in the U.S., we're already seeing about 8 out of the 13 power markets, regional markets in the U.S., already strained during peak summertime. Whereas in China, spare capacity is not only much larger, but we estimate it will get even larger over the next 5 years.
So without the U.S. building massive amounts of power the next 5 years, which is really going to be the time when AI is really ramping up, this really comes down to efficiency and how much more efficient can chips get, which is the reason why everyone's focused so much on Google today and this idea of their TPUs, the idea of a more efficient chip that uses less energy versus NVIDIA's GPUs. How much is that important and a necessary ingredient for the AI race to really continue in the United States?
I think it's key, because otherwise we're just not going to be able to add enough capacity to continue to fuel this. So, for example, already this summer we saw the Eastern Atlantic market in the U.S., the power market, really tight. We saw real-time power prices spiking to reach record highs. We saw capacity auctions reaching record prices. So it's the market positioning not just to price your peak summer price very high, but hey, we're going to need to pay utilities a lot more to build additional capacity in the long run, because what we have is just not sufficient. So either we get more efficient, or we're going to start to see bottlenecks, or at least a slowdown in the addition of data center capacity in the U.S.
How much is there a timing mismatch? Because everybody's running to the gold rush, the field of dreams, build it and they will come, trying to build more energy capacity. Presumably it takes some time for these to get online. Is there a concern that we are ramping up so much with our demand of AI and what we're expecting versus the ability of these projects to come online?
Yeah, it's almost like you have two lines. The data centers are coming in troves, and on the power generation side, it's not that it would normally take so long. You would ordinarily build a natural gas-fired power plant in 2 years if you had the turbine. But we have a 4 to 5 year queue to get a new turbine if you want to start a project today. So you're having to rely on other sources. And what do you have? Well, we're still building a lot of renewables, but they are intermittent, so they are not always there. You need something to back it up. We can't build nuclear because every time we try, it takes many, many more years than planned, and it costs a lot more. So we're sort of running out of options if we don't have that efficiency gain in the very near term. And the result ends up being that our peak summer periods are going to be tighter and tighter in power markets and giving room to price spikes and potentially even outages.
All this conversation also just always leads me to think, what does Europe do? Europe already faced an energy crisis. They're still trying to wean themselves off of Russian energy. Can they compete when even without data center demand, they struggle to get the capacity that they need?
Yeah, I think it's unlikely they can compete. And a lot of that is because they haven't even secured their energy sources. So when we think about who has enough energy to power all of this, and the U.S. has already become an energy net exporter. But if you look at Europe, even though a lot of Europe is not using Russian gas, for example, anymore, that dependency just switched to imported liquefied natural gas. You still have to import it. So almost 50% of Europe's energy has to be imported. So that dependency is still there. The grid is very old. They don't have rare earths. They don't have uranium. So it's a very vulnerable place to be.
So let's start talking about some price levels. Liquefied natural gas, how much do you see prices increasing, say, in the next 12 months?
Actually, we're now starting a wave of supply growth in liquefied natural gas, and the U.S. is a big driver of that. The U.S. is going to drive more than 50% of global growth in LNG supply. So that's the bright side for Europe, if I can find one, is that their access to energy is likely to become more affordable over the next 7
ओए गाइस, ये नेचुरल गैस में यहाँ पर अगर बुक करना चाहो तो बुक भी कर सकते हो, ठीक है। इफ़ यू वांट टू बुक द प्रॉफिट बुक कर सकते हो। बाकी थोड़ी देर पहले रशिया के प्रेसिडेंट की ओर से 2-3 कमेंट्स आए थे, पॉजिटिव हैं रशिया यूक्रेन वॉर के रिगार्डिंग। उन्होंने ये साफ साफ कहा है कि रशिया सीरियसली ले रहा है रशिया और यूएस के बीच में जो यूक्रेन वॉर के रिगार्डिंग बातचीत चल रही है, एंड हम वॉर को एंड करना चाहते हैं। तो मेजर न्यूज़ है। Russian President Putin declares the battle would cease once Ukrainian troops withdraw from contested areas, representing Russia's position on potential conflict for ending the ongoing military conflict. तो कमेंट तो सही है, लाइक जिस तरह की कमेंट हो रही है, देयर अ वेरी हाई चांसेस कि रशिया यूक्रेन वॉर हमें बहुत जल्दी ख़त्म होती हुई दिखाई देगी। लेट्स सी क्या इसका पॉजिटिव इम्पैक्ट आता है, बिकॉज देयर आर मैनी प्रोज एंड कॉन्स रिलेटेड टू दैट एज वेल। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। जिन लोगों ने लाइक नहीं किया लाइक कर सकते हैं, ठीक है। यूएस मार्केट ओपन होने वाला है 8 बजे, ध्यान रखना। यूएस मार्केट इज गोइंग टू ओपन एट 8 PM। इसको बुक कर लेना। ये नेचुरल गैस में यहाँ से एक ये बाइंग वाला जो ट्रेड था, सेलिंग में तो निकल गए होंगे, बाइंग से निकल जाना। यहाँ से एक सेलिंग का प्लान करते हैं वापस से। बाकी अब ऊपर से सेलिंग आती है तो मेरे अकॉर्डिंग अब प्राइस को थोड़ा सा अगर फॉल करना है तो बड़ा फॉल करना चाहिए। नीचे का लेवल भी डीप लेवल से टेस्ट हो गया है, सो चांसेस हैं अगर फिर ब्रेकडाउन अगर होता है तो दैट विल बी अ वेरी गुड ब्रेकडाउन एज वेल। लाइक भी करते रहो गाइस। हो तो कमेंट बॉक्स में पूछ सकते हैं बाकी।
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Monica Ricks. The U.S. has stopped processing immigration requests from Afghan nationals, and President Trump has urged the Pentagon to deploy another 500 troops to Washington, D.C., following the shootings of 2 National Guardsmen.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
The 2 guardsmen remain in critical condition. The suspect was taken into custody but was also hospitalized after suffering injuries during his arrest. Metropolitan Police Assistant Chief Jeffrey Carroll says it appeared to be a targeted attack.
The suspect came around the corner, raised his arm with a firearm and discharged it at the National Guard members. The National Guard members, there were other members that were in the area. They were able to, after some back and forth, able to subdue the individual and bring them into custody.
The shooter is from Afghanistan and entered the U.S. through a refugee program in 2021. The Biden administration program provided entry to Afghan nationals fleeing the Taliban takeover of the country after the withdrawal of U.S. troops. But he was granted asylum by the Trump administration in April. Hong Kong's worst residential fire in more than half a century is now triggering worries that high-rise housing in China's cities could be susceptible to similar safety risks due to bamboo scaffolding. That fire has now killed at least 55 people. Hundreds are still missing. The holiday travel rush is on, and millions of Americans are packing airports and highways to get to their Thanksgiving dinner destinations. This man tried something different.
Last year we drove, and it can be kind of a hassle. So this year we decided to take the train.
Heavy snow is slowing some drivers down in the Midwest, but for the most part, people are hitting the road for the holiday thanks to lower gas prices. Patrick DeHaan is head of petroleum analysis at Gas Buddy and says the national average should dip below $3 a gallon soon.
Yeah, we saw another week of refinery utilization that's increasing, and this is telling us that refinery maintenance, which usually is happening in fall, is starting to wrap up, and that's going to put downward pressure on gas prices in the weeks ahead.
Hear more from Patrick DeHaan on the Bloomberg Balance of Power podcast. Prices usually spike again in spring. Global equities are close to erasing their November losses amid rising bets for Federal Reserve interest rate cuts. U.S. stocks shot up for its 4th session in a row Wednesday, the Dow adding 314 points, the Nasdaq up 189. Money markets, by the way, are pricing in a roughly 80% chance of a quarter-point rate cut next month and 3 more by the end of 2026. A week ago, traders expected 3 cuts total. Wall Street's on Thanksgiving break, but stocks are still trading overseas. The FTSE in London is down 0.2%. The CAC in Paris is mostly flat, and the DAX in Germany is up 0.2%. The Nikkei in Japan closed up 608 points today, up 1.2%. The Hang Seng in Hong Kong and China's CSI 300 showed little change. Chancellor of the Exchequer, Rachel Reeves, announced $34 billion of tax increases in the UK this week in a budget that seeks to balance the demands of both bond traders and restive Labour backbenchers. She spoke exclusively about it with Bloomberg.
My focus
has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Chancellor of the Exchequer Rachel Reeves on Bloomberg TV. And shortly after Reeves delivered her budget, JP Morgan Chase announced plans to build a new tower for its headquarters in the UK, which could host as many as 12,000 employees. Construction is expected to take 6 years. French President Emmanuel Macron has announced a new voluntary military service program for people ages 18 and 19 to serve for 10 months. The program will start next summer, and young volunteers will serve in France's mainland and overseas territories, but not in France's military operations abroad. Macron says France isn't considering restoring conscription, also known as a draft, which ended in the country in 1996. The new national service is set to be gradually established. Here at home, more Americans are looking to buy homes despite higher borrowing costs. Here's Bloomberg's Dan Schwartzman.
Mortgage applications to buy a home in the U.S. surged last week to the highest level since early 2023, despite still elevated borrowing costs. The Mortgage Bankers Association's index of home purchase applications jumped 7.6% in the week ended November 21st. Currently, the 30-year fixed mortgage rate is at 6.4%.
Bloomberg's Dan Schwartzman. The FDA and CDC are still looking for the source of an outbreak of infant botulism linked to ByHeart Whole Nutrition infant formula. It's now hospitalized 37 babies across 17 states. Test results are expected in the coming weeks. President Trump has signed an executive order for a new AI project called Genesis Mission to boost scientific discoveries. Bloomberg's Amy Morris has that story from Washington.
President Trump is directing the federal government to combine efforts with tech companies and universities to convert government data into scientific discoveries, acting on his push to make AI the engine of the nation's economic future. It solicits private sector and university partners to use their AI capability to help the government solve engineering, energy, and national security problems. This even after the administration cut billions of dollars in federal funding for scientific research, and thousands of scientists lost their jobs and funding. In Washington, Amy Morris, Bloomberg Radio.
And crowds are gathering in New York City now for the Macy's Thanksgiving Day Parade. It'll feature dozens of giant balloons, floats, marching bands, and performances, all leading the way for Santa Claus to usher in the Christmas season. And that's news when you want it with Bloomberg News Now. I'm Monica Ricks, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast
to rebuild
from
and renovate, and of the need to do so safely. Seeing some of the losses that we saw in November, so just
survive because of the continuing support from its largest shareholder. But right now with the potential the bond extension proposal, it actually raised a lot of concerns from investors to take about whether right now government are trying to rescue the project instead of the developer itself.
If there is any sort of absence from the central government, what implications do you see this could have on the whole sector now?
Yeah, I think the government definitely taking more cautious approach to support this whole sector, because previously we have seen, Vanke's biggest shareholders under Metro have rolled, 30 billion yuan loans to Vanke, and Vanke has been always rely on that kind of credit line to support them to repay the debt. But right now we are seeing they are tightening the financial terms. So it's actually that's why cause investors concern about whether Vanke will be default finally, and whether they can still survive from this.
And in terms of the next sort of signpost, what are the next things to watch really for Vanke now?
Yeah, so Vanke will meet investor on December 10th and then trying to seek their support about the bond extension. So we will definitely keep a close eye on that to see whether they can get enough support. If it cannot, it will be possibly a default. And then, by the end of next June, next year, so Vanke has actually have, about 13 billion yuan notes coming to due. So that's a big number there.
You seem to be seeing a bit of a reaction in the property space here, not just when it comes to Vanke now. I'm just wondering, what are analysts telling you about the potential for contagion in the sector here? And is there any sort of risk of liquidity pressures from other developers now that we need to focus on?
Yeah, I think overall it's definitely a really negative news for the whole already fragile property sector, right? It will definitely undermine the confidence a lot, and then customer will once again to doubt. They might be more reluctant to buy homes, and then further on the sales price will slump further. So I think there's a more concern here. I think what's happened to Vanker is actually raise the question about where's the end of this property crisis.
Yeah. Trista, thank you. Trista Luo there, our China credit reporter, talking about the re-emerging risk when it comes to China's real estate sector there. And certainly we'll have more analysis on what's going on in this property crisis coming up. Zerlina Zhang of Credit Sites joins us in the next hour. Now, in terms of what to expect here, these growing headwinds on the macro side of things for China, investors will be watching out for fresh policy signals from Beijing, especially with that upcoming Central Economic Work Conference next month. For more, let's bring in our Asia equities reporter Xiaomi Cha on how important this meeting is and what are investors watching out for.
Yeah, so it seems like the investors are, looking beyond the earnings now. They're looking at the next event, and they're looking to see some of that stimulus coming from the policy side of things. Of course, the timing is very important here because we're going to have quite a long lull after this event, which is going to be about mid-December. And then the next political event that we're going to be seeing would be 3 months after the two sessions done. So it really has to come down to whether the policy, the language that they come up with is going to be positive. And this is a very important meeting, high-level meeting of all these people who are going to hammer out policy, especially about economic policy that will really, be the blueprint for next year. So all the head of states and all the SOEs are going to be there. So this is going to be important. Now, this event has the tendency of actually jolting the market. Last year, we saw more than 8% drop in a local benchmark a month after this event. Previous to the pandemic levels, for 3 years, we've seen that it actually raised market. So we can see that it is quite important. What the investors are looking at is the animal spirits.
Yeah, it seems like we talk about this sort of K-shaped economy, right, where you have the macro picture like investment, like property that continues to be in sort of a downturn. Tech still seems to be the one that is the brighter spot in this economy, right? The AI investment and the like. Can the Chinese market continue on just the tech space and this whole AI rally that we've been seeing all year?
Yeah, so we've been hearing a lot about this broadening out of this AI trade. So we've been trying to find out what's next in terms of AI trade, especially in Asia and in China especially. I think there's a whole narrative between China versus U.S. when it comes to chip, the rivalry there. And so it's always been the self-reliance theme when it comes to China tech. But now we have seen some of the pockets of opportunities in companies, Chinese companies that's tied to U.S. as well. So yesterday we've seen a story about Victory Giant that makes PCBs, the printed circuit boards for NVIDIA, for instance. So it kind of highlights that intertwined nature of this tech sector in both U.S. and China as well.
Tell us a bit more about this whole BYD, Alibaba, this sort of letter that was found where the Pentagon concluded that they should be added to this list of companies with ties to the military. What impact do you think it's really going to have on some of these really big names? Yeah, so back in January, I think, when Tencent and CATL was mentioned in the list, it really impacted their shares. But we're not really seeing that much today, although Baidu, Alibaba, and BYD are slumping. They were this morning. Again, it's not massive moves that we're seeing, though, still. So it seems like the market is kind of aware that there is this list, that oftentimes China the Chinese companies are linked to Chinese military. We've seen that in healthcare space with Biosecure Act as well. But going back to 2021, when the list was first released, and this is renewed every year, it seems like people are not very concerned. Okay, Sangmi, thank you. Our Asia equities reporter Sangmi Cha there joining us here in Hong Kong. Joining us now is Moneta Senior Investment Advisor and Global Market Strategist Ethan Devon. Moneta is an investment advisor with $40 billion U.S. dollars there in assets under management there. Ethan, it's great to have you. I got to get your take on China. The whole prospect of the real estate risks seem to be reemerging once again in a big way. The market has, for some time, has really kind of overlooked these concerns and really focused more on AI. How important is it, or how much weight are you putting on the risks that are around real estate in China now?
It's interesting. I'd say this has been a slow burn risk in China. It really has been running for about 4 years in the background. And I'm going to go back to the Jamie Dimon discussion around cockroaches and private credit in the US, because there were 2 incidences of cockroaches there. And generally, that has been brushed off as not systematic and not endemic of a larger problem. So I'd suggest also here we have this one China banker you've mentioned. I think, though, probably there will be a suggestion that this is an isolated thing, or at least a sign of a slow burn problem that needs to be minded at the background. But the attention of China has been firmly, as you said, on the tech side, on that story, on the massive advances being made. So it's a concern. But as we can see in markets seem to be able to hold 2 thoughts in their head at the same time.
How in terms of foreign investor appetite for China, how do you think that's changed? I mean, where you are sitting in the U.S., I mean, do you think, this whole kind of re-rating story is something that we can put in the past now when it comes to the equity market in some ways? Or do you think that there's still quite a bit of risk, investing in this market?
I'd say China has undergone a transformation in terms of investor sentiment. In recent months, we've seen it go from uninvestable, perhaps over a year ago, when there was still a suggestion that there was simply too much regulatory risk and there was not as much focus. Everything was focused on U.S. exceptionalism. Now, I'd say just the last 6 months, there's been a real recognition of the tech play being able to play out in these different parts of the globe, and a sense that there are some meaningful global players emerging and emerged in China. So that has definitely been a change in sentiment. I'd say in terms of the allocation, the U.S. investor is still only limited in their allocation away from the U.S. in general. I'm speaking for the average private wealth investor. And still they would regard China with some skepticism. It is still in the crosshairs of the trade rhetoric. And I suggest that it's going to be very much a peripheral allocation for them for now.
Okay, interesting. I just want to break this line here. Hold on a second, Ethan. We're talking about these wonka bonds now. So the yuan bonds, we've seen actually multiple ones that have rebounded, some as much as 20 yuan here in just the last few minutes. So certainly that's one thing to watch here. Maybe, was the sort of selling pressure that we've seen, is that now in some ways easing a bit here? Obviously, there's been a lot of talk about, what sort of policy stimulus we might see from China year end or even next year to kind of rescue the rest that we're seeing in the property market. In terms of stimulus, I mean, in terms of the China side, even, I'm just wondering how are you viewing it right now? I mean, it seems like a lot of attention, a lot of effort has been in developing this whole self-sufficiency, technological industrial power for China. At what point do they need to start really putting more stimulus in the consumer and property side of things?
It's interesting. This is very much reminiscent of 08 and the banks and being too large to fail and letting 1 or 2 sacrificial lambs basically show that there has been a pullback and not necessarily support of every financial institution. That was in the US. Looking here now, there is a need even for a state-backed entity to show that they can survive with market forces, because otherwise they will never attract outside investor attention if there's going to be this essentially this backstop. So that there is this tension. And I'd say with regulation and policy change in China, there's always going to be a need to get the balance right between state support and market forces. So the investors are watching it closely. I think they see that they're leaning towards market forces.
Okay. In terms of how to play this Chinese market, I mean, there's been a lot of people talking about, the valuations are still looking pretty cheap from the U.S. side of things as well. You're starting to see wobbles in markets that are very tech and AI driven, like Korea, like Taiwan. Do you think China, in terms of valuations, still look attractive to you?
I think it does look attractive, but it is going to be heavily skewed towards tech sentiment. We've seen that also to date. It has been basically a play on AI and tech. So it's not really offering true diversification, since the US is very much a play on AI and tech. So there's always going to be more emerging market risk factored into China when there is uncertainty, when there is a geopolitical development that puts it in the crosshairs. There will be a suggestion by investors that, well, are we getting paid for this risk? And right now, that the strong focus on the Chinese tech sector, I think that's something, though, that's not going to go away. I think it has piqued the interest we've seen about the ability of these AI companies to eat the lunch, essentially, of some of the more expensive and essential US models. So that factor has now become mainstream and a focus on China there. As far as the China consumer, I think we do know that is a force that has been perhaps underestimated while China was out of favor as an investment entity for US and other global investors. And the Chinese consumer, despite some of the woes, all consumers are experiencing woes around the world, and they're not necessarily being reflected in markets. So I think that there's a sense that the Chinese consumer should not be underestimated in that respect.
In terms of the global AI trade, I'm just wondering, Ethan, obviously we saw fallout from the NVIDIA earnings. Obviously there's a lot of discussion about Google and Alphabet and how they have these chips that are a viable alternative to NVIDIA here at the moment. Where does that lead to when it comes to the AI trade? Some say this is the perfect opportunity to buy on the dip when it comes to NVIDIA. But some say, look, I'm still not getting that ROI when it comes to all this investment into AI at the moment. Where do you stand on that debate?
It's Thanksgiving Day today in the US, and we're going to be hearing a lot about menus and food. And I think investors are getting quite picky when it comes to their menu. At AI, they said, do we necessarily want the entire sector? Where are the winners? Where are the losers? Maybe I've overindulged. I've binged on that one. Now I should scale back and have more of a balanced diet. So that's happening within the AI sector. We've seen NVIDIA suffer and Alphabet do well with the recent with Gemini 3. And some of the suggestion that we shouldn't necessarily assume that first mover advantage will prevail forever. And we can also see other sectors really pick up. Something like an Urban Outfitters stock to go up 17% in a day. This is kind of grungy teenage clothing. So we can speak to the consumer, perhaps, but speak to just where investors have taken their eye off the ball of other sectors. Healthcare, Eli Lilly, getting one's eye off the ball when it comes to the drugs that are really changing lifestyles across the US in terms of GLP-1s, and looking at, again, who will be perhaps the next movers in that, not necessarily first movers, but will take market share quite aggressively. So a lot of, I think, looking beyond the obvious stocks right now, a desire to have that balanced plate when it comes to equity exposure.
All right, Ethan, hold that thought. Ethan Devitt there from Moneta. She's staying with us, and still it is getting late there in London, so thanks so much for staying up for us this hour. Some other stories that we're tracking for you today. Shein is under pressure from the EU to curb sales of childlike sex dolls and weapons on its third-party marketplace after French authorities flagged the products earlier this month. Regulators have asked the e-commerce giant to explain how it prevents the circulation of illegal products. The European Commission says it suspects Shein's system may pose a systemic risk to consumers across the bloc. Automaker Stellantis and China's CATL have broken ground on a $4.7 billion battery plant in northern Spain, a project that underscores Europe's growing reliance on Chinese technology. The factory is expected to operate at 30% of its plant capacity by 2028 and employ nearly 4,000 people, producing about 50 gigawatt hours of batteries annually by 2030. And Chinese ride-hailing giant Didi has reported a 67% rise in quarterly profit, a positive sign ahead of a potential listing in Hong Kong. Net income totaled $212 million, driven by solid momentum in China that offset losses in international markets. Didi, often described as China's answer to Uber, was forced to delist from the New York Stock Exchange after Beijing cracked down on data sharing practices across the internet industry. And coming up, we're going to be live in Hong Kong as police make arrests over a fire at a high-rise complex that's killed at least 44 people. Our very own Min Lo.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, Hong Kong's worst residential fire in more than half a century has killed at least 44 people and left many missing. Police have arrested 3 people from an engineering company on suspicion of manslaughter. Let's get to our China correspondent, Min Min Lo. She's at the scene and joins us now. This is something that has, the whole world has been messaging me, asking, how is everyone doing? And it's just really our hearts go out to everyone right now with the situation. Just bring us the latest. What do we know at this point?
Yeah, I mean, just right next to me, there are dozens and dozens of fire trucks, and we just saw about an hour ago a new batch of firefighters coming in with their gears, changing shift with the other firefighters that has been in there. We saw them coming out looking just utterly exhausted, and it's been 20 hours since the fire started yesterday afternoon at 3 p.m. Originally a level 3 fire, but within 3 hours or so, it was upgraded to level 5, which is the highest severity. And up until now, we still don't know the exact cause of the fire. Authorities still say they are investigating, but they do know that the spread of the fire was far faster than what it usually would have been. And they said they found substandard materials here because this entire estate, there are about 8 blocks of them. They are all subsidized government housing, and they are 40 over years old. It was undergoing heavy renovation, so you can still see the remnants of those green meshing and the bamboo scaffolding. And authorities said that they found combustible materials, including styrofoam boards that were sealing the windows. They found tarpaulin sheets, plastic cloth, and so on that were not on par with compliance standards in Hong Kong. And so that's why a criminal investigation is ongoing, and they have arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence.
Yeah, it really raises this whole topic of bamboo scaffolding, as you highlighted there, Min Min. It's something that Hong Kong has used for decades, this sort of way of building homes. Do you think this is going to intensify the calls to really phase out this sort of bamboo scaffolding now?
Definitely. I'm sure this incident is going to bring a lot of scrutiny to the issue of the bamboo scaffolding, which is a bit of a controversial topic here in Hong Kong because there are some residents who are just very proud of this dying art of bamboo scaffolding, something so characteristic of Hong Kong. It's a disappearing art that you don't really see anywhere else. But at the same time, starting from March of this year, the Hong Kong government had already begun to phase out bamboo scaffolding, citing the dangers of it because there have been construction workers falling from height. There has been cases of the scaffolding collapsing and killing the people below. There has been other cases of the scaffolding catching fire as well. And of course, this is the highest profile incident today that will certainly, increase the debate around whether or not Hong Kong should really rethink whether it should continue using these bamboo scaffolding. And I think residents certainly are demanding answers as to why those non-compliant materials ended up surrounding these buildings here. Why wasn't there inspections and better enforcement? Certainly a lot of answers that we are waiting for.
Min Min Lo, thank you. We got plenty more ahead. This is Bloomberg.
Thailand, where the craftsmanship of Thai silk inspires a nation of opportunity, advanced technology, and innovation. With its strategic location and proven resilience, Thailand is ready to facilitate your investments. Now is the time to turn your vision into reality. Ignite Thailand. Invest in endless opportunities.
When we first started, cyber threats were more limited in scale and severity. They were a bit like digital graffiti. Today, cyber threats are more sophisticated, persistent, and difficult to detect.
SICW unites public and private sectors to tackle today's cyber threats as one.
We have to work together to build a global cyberspace we can trust.
Join us in shaping the next era of global cybersecurity.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back. You're watching Inside, and we're seeing when it comes to a rally here, it continues on for another day, although we are seeing just marginal gains at, well, a third of 1% to the upside when it comes to Asian stocks. But as we mentioned, global stocks are set to erase the November losses there, of course, on these Fed cut bets. Keep in mind, overnight, we also heard from the likes of JP Morgan flipping their forecast and saying that the Fed might actually cut rates in December now. They previously thought it was January where we would see the next cut. But they said, look, the pivot from Fed officials supporting cuts in the near term, notably from the likes of John Williams, the Fed Bank of New York, had pushed them to reconsider. Here with us now is Ethan Devitt from Moneta. She's back with us and still awake in London for us in the, 3 a.m. or so. Ethan, it's interesting, right? The amount of the switch that we've seen in Fed cut expectations. I think it was, just last week, we're talking about 30% odds. Now we're basically close to 80% right now. Do you think the clouds around the whole Fed rate cut path, is that just basically parsing now? Or are we getting more clarity on that front?
We get closer to the appointment of a new chairman, and now Kevin Hassett seems to be the favorite. That a little bit of uncertainty is clearing. If we have a strong President Trump supporter and advocate, as we're seeing in Kevin Hassett, there's even suggestion that rates could go below 3% quite quickly, and that would be a pretty substantial move. So that certainly is where the probability change came from. At Moneta, we've always expected some cut in December. We thought that the data was actually absent, so that was a problem. This is a data-dependent Fed, and especially after the shutdown. But still, the jobs data was coming in so soft, so murky, that there was a suggestion that even though inflation was not yet subdued, the focus on jobs and soft consumer sentiment would be the element that pushed essentially the Fed over the indecision edge into making a cut.
So how do you think this rate cut cycle is going to look like here? I mean, obviously, December, I think people are still, getting closer to thinking that that's close to being priced in. How are we looking at 2026? I think the market's still thinking maybe 3 more. Is this going to be more of a meeting-to-meeting sort of way on how the Fed's going to gauge whether to cut or not?
Yes, I think we're going to see the existing chairman show a lot of restraint, because that's been his kind of modus operandi up to now. He is on the exit side, so there's no need to necessarily attract any particular favor, and he will be data dependent. And I think that will be his hallmark, his legacy. Chairman Powell is restraint at the Fed. When it comes to the new chairman, then I think really all bets are off in terms of the pace of change. There is always the opportunity to make a bumper cut, and that I think will be very dependent on markets. It still seems to be that markets drive the Fed just as much as the Fed driving markets.
Does that mean, softer dollar and steeper curves moving forward for next year, Ethan?
A lot is going to depend on rhetoric, we believe. As it's interesting, the softer dollar kind of came about when there was a lack of confidence in the U.S. around some of the geopolitical positioning, trade, a sense that perhaps U.S. exceptionalism was on the outs. That was where we saw the weaker dollar. I don't think it was orchestrated. Now we've seen that the Fed has been really lagging other central banks in terms of cutting, but nonetheless, the dollar has been strong. And why has that been strong? We again return to just the sense of the U.S. being the leader when it comes to technology. So even if rates are cut, if that leads to a very strong U.S. economy and is actually the stimulus that really provides that growth that other areas around the world seem to struggle to gain, then it could well not necessarily mean a weaker dollar. We could actually have the strong dollar. And I'd say that the current strength in the dollar is evidence that it has not always behaved according to expectations and trend.
And when you're looking at signs of risk sentiment, right? I think the last few weeks it's really been crypto, as maybe some people say was the culprit and what led to the sell-off in November. We're back around 90,000 for Bitcoin now, but how are you assessing sort of this asset class, or at least these signposts here, and how to determine where risk is going to go?
Say Bitcoin has been an interesting indicator. Maybe that's been the canary in the coal mine around risk sentiment. There has been a suggestion that we still are sort of figuring out at the discovery phase as to how Bitcoin is behaving. And we know that Bitcoin has been not a diversifier, not a hedge, not behaving like gold. It has actually been a pretty high octane risk asset. And that's why it's so difficult at a firm like Moneta to know where it fits in the portfolio, because we don't know its characteristics. Now it seems to be kind of an early indicator of investor sentiment going sour. And I'd say that has been more sustained than we might have expected. This weakness we're seeing in Bitcoin, there is a lot of expectation that it will continue to go down. There may be a bottom around about maybe the 50s, the 60s, but certainly lower from here. And that's because there's this discovery phase now, a shift to AI. The hype cycle may be coming to an end, and we may be in a sifting and discovery phase.
Okay. In terms of, as you look for your outlook next year, what sort of asset classes do you think are going to do well? I mean, obviously, there's been a lot of talk about private markets, and maybe that's where you're still getting the most returns here. What are you looking at in terms of your kind of pecking order of what's going to outperform next year now?
Well, we do know at Moneta that we cannot sacrifice growth. Our investors are long-term investors. They need to participate and have real returns after inflation. We think inflation is not yet subdued. We think 3% or higher is very likely in 26, particularly if there is more monetary stimulus. So in light of that, we need to participate in inflation-resilient assets. That means equities, but it means broad-based equities. Some of these sectors that were overlooked that I mentioned before, something like financials, healthcare, industrials, energy. Those are all areas that have perhaps had less attention, but they need to get attention. Global investing, not just China, Europe, areas that are more levered perhaps to the old economy, but are still trying to stimulate growth. And the talk in Europe, and I'm actually going to your offices in Bloomberg later today for a post-budget interview, Marin Talks Money, the Bloomberg live podcast, we'll be talking about just how the UK in particular is trying to stimulate growth. That's in everyone's minds. The action by the US and geopolitics may well have been the strong medicine that Europe and other areas needed to start focusing on their own economies and spending again. So that's a very exciting prospect for 2026. So looking global, and then, of course, keeping, yes, to private markets, keeping allocations there, but having much more selectivity in mind, not just following the crowd, looking at something like private credit, has it become overhyped, and looking then at real assets where we can get exposure to, again, that inflation resilience that needs to be across any portfolio. So I'd say a very optimistic outlook, but a need to be skeptical and not necessarily buy momentum trades.
Yeah, I was going to get your take, since you are in London, about this budget that came out overnight. It seems like they're talking about 26 billion pounds of tax increases in this budget. Do you think Reece did enough to really kind of balance the demands of what the bond market and what bond traders have wanted, and what some of these labor backbenchers have wanted too?
Well, it's interesting. We'll see what the analysis is by Marin at the live podcast today. But I'd say it has not been received as badly as might have been thought. In the US, generally, high taxes would equal very negative outcome for growth. In the UK, the alternative to these high taxes would have been spending cuts. And the spending cuts, there was very little tolerance for that, very little budget, essentially, among the consumer to have an additional spending cut. The consumer here has already been under tremendous strain. They've come down. They're still experiencing higher inflation than elsewhere, still over 3%. There has been a lack of growth. There has been a lack of job creation, and that consumer cannot take any more. So perhaps the fact that this is the ultra high end that is being targeted by the taxes, they'll focus on Main Street versus Wall Street here in London. And I'd say that markets have received it quite well. It's been exceptionally well telegraphed, though. No surprises here. And that's been a new hallmark and calling card of the current government, is leaking information in advance. We can see that perhaps has calmed markets because they knew what to expect.
Ethan, thank you. Ethan Devitt there, Senior Investment Advisor and Global Market Strategist at Moneta, joining us live from London here early this morning. You take a look when it comes to, we talk about the fiscal sort of discussion. Certainly, we got to talk about Japan as well, just given this sort of fiscal budget that just came out from the new government as well. That certainly is going to be the one thing that we're watching when it comes to some of these Japanese assets here today. But take a look at the Nikkei, right? We are back above that 50,000 psychological level for the first time in a week, and it's really been led by some of these AI shares, the electrical equipment, bank shares were also bought in as well. So really kind of support what we saw from the U.S. overnight as well. 156 from strength, slight strength coming through for yen this morning. The energy sector has been a big gainer from the AI boom in Japan. You take a look at Osaka Gas. They're looking to invest in more U.S. gas-fired power plants as a push to build more data centers drives a surge in demand for reliable energy supply. The president, Masataka Fujiwara, spoke exclusively to Bloomberg about their outlook.
Currently, the demand for data centers in North America and in Japan is key in driving the power generation business. Prices are determined by the equilibrium between supply and demand, but the volume of demand itself is increasing in Japan and America. The Japanese Ministry of Economy created the 7th Strategic Energy Plan this year, and within that, there is an expectation that electric power will increase from the current level of roughly 1 trillion kilowatt hours to 1.2 or even 1.6 trillion kilowatt hours. Nuclear power and renewable energy are simply not enough. Therefore, we believe that our very environmentally friendly natural gas-based power generation business has a sufficient chance to grow.
I understand that you also acquired the SEBI oil and gas company back in 2019. How does that fit into Osaka Gas strategy?
Japan's population is not increasing, which makes the domestic market very challenging. Osaka is Japan's second largest city, but no new buildings are being constructed. For us, there was no way to expand the business domestically. So, we first expanded from Osaka to the entire country, including the Tokyo metropolitan area. But with many competitors, we realized that to achieve further expansion, we had no choice but to go overseas. North America is very stable, its legal system is solid, and for us, it is an ideal location for monetizing and growing the business. Therefore, we decided to venture overseas nearly 20 years ago. At times, we faced difficulties and failures, but today we are significantly growing 3 key areas in North America: Freeport LNG, independent power producer power plants, meaning natural gas-only plants, and Sabine. This is part of our strategy.
And President Trump wants a lot of investments into the energy sector in the United States. Are you planning to put more capital there?
There is the push from Mr. Trump, but also the population of the United States is increasing, and a number of data centers being built doesn't compare with Japan. Furthermore, demand is very strong. Even if the Democratic administration suddenly demands that all energy sources be renewable, I don't believe that is possible. Natural gas is an extremely important energy source. We believe this is true for both America and Japan globally, so we will invest fully in that sector. All of our know-how and technology are concentrated there, and since we can leverage our expertise in this field, we will focus on natural gas. We don't believe this will change significantly, even if the administration changes.
And that was the Osaka Gas President Masataka Fujiwara speaking to Sherian in Tokyo. Well, coming up, the UK Chancellor's budget gets a warm welcome from investors, but may not impress voters, facing $34 billion in tax hikes. We're going to hear exclusively from Rachel Reeves next.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, to Japan now, Bloomberg has learned that the country is planning to issue almost $74 billion in new bonds to fund Prime Minister Sanae Takaichi's economic stimulus package. Let's get more now with our Bloomberg economics and government reporter, Yoshiaki Nohara. Yoshi, there's been a lot of speculation on how she's going to pay for this. What more do we know at this point?
Right. So we know that she is going to issue the more extra additional JGBs to fund the stimulus package. But she's emphasizing another fact that, the overall issuance of JGBs for this year is going to be less than last year. So she's obviously trying to, cool down some concerns about the fiscal health because of the spending plans she has.
Yeah, I mean, there was a lot of speculation whether she was going to be, Japan's Margaret Thatcher or Liz Truss. Do you think she's done enough here to reassure the bond market of fiscal responsibility?
I think it's too early to decide. One key question that the market is awaiting at this point is the content of extra JGB issuance. Looking for how much of that mix is going to be in the 10-year JGBs or shorter-term maturity JGBs. All of those small things are going to be important because we've seen over the past several months, that super long JGB yields have been very susceptible to any concerns in the market regarding the fiscal health. So we don't know the kind of details that the market is looking for at this point. We just know the overall size of additional issuance going forward.
Yoshi, we were just talking in the break about what an interesting start to her prime minister, her basically term, right? Because for one thing, she has to deal with fiscal expansion, which is something that she's campaigned on. On the other side, I think something that, we didn't quite foresee was this sort of China and Japan spat that continues on here. There was an interesting report from the Journal that President Trump, in that phone call with Takaichi, did actually urge her to not provoke Beijing when it came to the issue of Taiwan. She's basically dealing with multiple fronts here, just the first few weeks in office.
Well, it's a really difficult mix of challenges any prime minister would face, especially during the first month or two in the office. And as you mentioned, that the second part challenge, regarding the China tensions, this is not. I think it was not on the original agenda that she was thinking, but it's happening in the wake of her remarks regarding Taiwan. And she's in a difficult position because she will not be able to retract her comments, even though the Beijing is strongly urging her to do so. But at the same time, if she insists on that point, she can infringe the, she can add some uncertainty to economic fronts, and possibly not just between Japan and China, but also trade truce that the U.S. has with China, because Taiwan is such a flashing point between the two nations.
Right. Yoshi, thank you. Yoshiaki Nohara there, our Bloomberg economics and government reporter. And meanwhile, the UK is turning to taxes to shore up its government coffers. Chancellor Rachel Reeves has announced $34 billion of tax increases in a budget that seeks to balance demands of both bond traders and members of her ruling Labour Party. Reeves spoke to us exclusively, and we began by asking about the unprecedented early release of the budget documents by the Office of Budget Management.
Richard Hughes and the OBR have confirmed that they have launched an investigation into what happened. It obviously was a serious breach. They've apologised for that and put out a full statement.
The leak aside, are you happy with the market reaction today?
I think it's best for chancellors not to comment on what's going on in the markets. But what I was determined to deliver today, as well as cuts to the cost of living and cuts to NHS waiting lists, was cutting borrowing and the debt. And you can see in the budget today the increase in headroom, more than doubling the headroom to £21.7 billion, and indeed meeting that target on the stability rule a year early.
Well, you talk about cutting borrowing. The Institute for Fiscal Studies says it's a spend now, pay pay later budget. What do you say to traders who are still concerned that this fiscal tightening is backloaded?
Well, listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also we want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now with better balance sheet management, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto?
Well, the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office of Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill, as being positive for the economy. Well, and indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that their OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete. Just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government. But that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about. Whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for for shares for companies newly listing in the UK, I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the forms that we've set out.
Well, no confirmation of no new tax rises.
Well,
Chancellor.
no Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
That was the UK Chancellor of the Exchequer, Rachel Reeves, there speaking to our colleague Lizzie Burden. And as we talked about, right, the market did take it pretty well, this budget from the UK. Take a look at how, FTSE futures are looking like here. We'll see how we see day two of this, because we did see the pound rise to 132 levels here, extending some of those gains here this morning. And this recovery in gilt markets seems to be continuing as well. We're at 442 for the UK 10-year yield. Still ahead, we'll discuss the growth outlook for the APAC region with Natixis. The CEO of India's L&T Finance also joins us to discuss risks and opportunities in India's financial sector. Plus, more analysis when it comes to China's property woes with credit sites. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg.
You have to have very clear global strategy to bring progress for humanity. Thinking from the customer point of view and taking the right decision, taking the right action, it may cost you more money in the short term, but you are creating customers for life.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back. You're watching Insight. We're taking markets and, really we're focusing on what happens when it comes to this risk rally. Looks like we are continuing on here for another day. And really when it comes to global equities, we are on track to erase the volatility and losses that we saw in November. So that pullback in November certainly was that just a one-off. Now that we have seen Fed cut rates there really being boosted just the last week as well. Just really the likes of John Williams, I think, from the New York Fed that really kind of shifted the sentiment here that, maybe they are looking more likely to cut in December. You have JP Morgan, also economists there flipping their forecast and saying, December looking more likely than January now. So you are continuing to see equities are up in Japan by about 1% here. We're back above that 50,000 level as well, of course. And we're watching, of course, the likes of Kospi and Taiwan still doing okay here today. Keep in mind, U.S. markets will be shut for Thanksgiving on Thursday. So we're dealing with maybe potentially lower volumes here in the next few days. But Bitcoin, that certainly is one thing to watch, right? We're seeing a bit of a recovery. We're back above 91,000. That certainly that sell-off and really the relentless selling when it came to crypto was one of the reasons why we did see risk asset sell-off in November. At least we see that side and that asset class stabilizing as well. Certainly when it comes to Hong Kong break there, of course, we got to still check the bond space here and what we're seeing with China Wanke, right? So certainly there was a lot of wobbles here. We did see some of these bonds plummet to sort of record lows. We did see some suspension of some of these bonds earlier this morning. We have seen just the last couple of minutes, the yuan bonds actually rebound as much as 20 yuan, I should say. So that certainly maybe sees like there's a floor on all this as well, but there's still a lot of guideposts on what we need to see next year, in particular when it comes to any signs of central government support for the developers. So that's going to be front of mind. We have credit sites there. Zerlina Zing joining us here this hour to talk more about the implications. Another story that we're tracking is, of course, in the China tech space as well. The Pentagon is accusing major tech companies of aiding the country's military, recommending that Alibaba, Baidu, BYD, and others should be added to an official list. Now, Deputy U.S. Defense Secretary Stephen Feinberg informed lawmakers of the allegations around 3 weeks before President Trump and Xi met late last month in Korea. Let's bring in our Bloomberg Asia Tech correspondent, Annabelle Jewellers, on really, what do we know more about this? I mean, this was obviously, weeks before what happened in Busan. So what does it all mean?
Yeah, it's very interesting, the timing, as you say. The letter that we're understanding, because we've cited it or seen it at Bloomberg, but it's from the Deputy Defense Secretary, that's Stephen Feinberg, to lawmakers in the U.S., and it's dated October 7, so really close to that meeting between Presidents Trump and Xi on the sidelines of the APEC summit. But what you mentioned, some of the companies that are cited in it. There's Alibaba, there's Baidu, there's BYD. These are some of the best known names in China. But this here, you can see in this graphic, also goes through the 8 companies total. And I think it's really interesting to call out just the international significance of this, because you can see, for instance, InnoLight, Eoptolink as well. These are the optical transceivers that caught a lot of attention earlier this year, but they're essentially integral to building AI supercomputing clusters. They do have a lot of global clients. RoboSense is another, that's the second biggest LiDAR maker after Hesai, but RoboSense is a company as well that's actually involved as an NVIDIA partner in their robotaxi platform as well, their autonomous driving software project. So these are companies that have a lot of international partnerships and global ambitions as well. But yes, as you said, the content of this letter, so it's Feinberg sent this to US lawmakers. He called out these companies for having links to the Chinese military, and also recommended that they should be added to the 1260H list.
Yeah, what if it makes it on the list? How significant would that be? Because, we've seen a few weeks ago, there was an FT report that did talk about Alibaba's alleged ties to the military. They, obviously denied it. But is it enough to spook investors, the scrutiny that we're seeing from D.C.?
It certainly spooks investors. When we had this 1260H list doesn't actually carry any sort of legal ramifications. So it is important to say that. But in terms of the investor sentiment, it sends a message clearly, because this is the U.S. government saying these are the companies that we think have links to the Chinese military. Now, you mentioned Alibaba, and Alibaba actually did respond to our reporting on this morning as well, and they're completely denying having any sort of involvement. We've seen other companies like Hesai, for instance, pushing back strongly when, again, it had to fight these allegations earlier. But the market reaction, you're seeing a lot of these stocks a bit under pressure in the session today. Of course, it is a bit of a low conviction trading generally across the board we're seeing in Asia today. So you're not seeing huge outsides moved in them. But the list is only made public once a year. So that's important as well, because we don't actually know. You've got this recommendation. Has the 1260H list actually been updated? We won't maybe know that for another few months, because the last time it was made public was back in January. That was a time when we saw selling pressure in names like CATL and Tencent, for instance.
Yeah, how do you think this could evolve? Obviously, it seems like it could complicate where U.S. and China relations are going to be, given that we are in this sort of trade truce here right now.
Yeah, yes, I think that could definitely be an implication of this. In terms of the response that we've had, the Pentagon didn't want to respond any further on this story. It is a letter, I guess, in their view, that was dated again back several weeks ago. But China has definitely weighed in on this matter, and we did get a response out from the China Foreign Ministry saying that they want the U.S. to essentially course correct here. They're calling these actions as erroneous. I think when we think about the military links in general, it is important to note as well that there are a lot of big tech companies in the U.S. that have links into the U.S. military. So it's not abnormal to see tech companies having ties to defense. That is a playbook that you see in other parts of the world as well. But obviously the US is making a point here that these are ones that are actively involved with the PIA.
Sounds like you know a lot about this issue, too. Someone that's going to school on this very topic of defense tech. Annabelle Jewellers, our Asia Tech correspondent, the perfect person to talk to us about this story, our tech correspondent there. All right. Another story that we're tracking in terms of the geopolitical side of things is President Trump reportedly advising Japanese Prime Minister Sanae Takaichi not to provoke Beijing on the question of Taiwan's sovereignty. Now, the Wall Street Journal cited Japanese officials saying Trump's move was worrying, suggesting he didn't want friction over Taiwan to endanger Washington's trade truce with Beijing. Now, Trump called Takaichi earlier this week, shortly after his hour-long conversation with Chinese President Xi Jinping. I want to bring in Alicia Garcia Herrera, the Chief Asia-Pacific Economist at Natixis CIB. She joins us live from Taipei. Obviously, I want to get your perspective on what you're hearing on the ground about this China-Japan spat. But, you know, the sequence of events, right? There was that call with Xi first that President Trump had, and then with Takaichi. What does that signal to you, really, on where things are going when it comes to this sort of issue?
For me, it's quite clear that Trump doesn't like the Takaichi's approach to this. Maybe, I would say she may have been prompted by the conversations before the summit with Xi, Takaichi, Trump's first conversations. That if we recall, you know, the Trump administration was quite adamant before that summit that allies should show their support in case there would be an attack on Taiwan, support to the U.S. So, you know, in a way, it's kind of strange that once Takaichi made those comments, and have to say she did forget to say that would be once the U.S. would have intervened, because that's exactly what the Constitution allows her to do. But having been a little bit blurred on the message, to say the least, still the Trump's lack of support in any way has probably surprised Takaichi. So in that regard, I think that there has to be a feeling of how lonely Japan is on this endeavor. And that will probably call to self-correcting measures by Japan. Maybe not outright apologies, but self-correcting measures, because the U.S. is not really clearly there.
Yeah, the journal kind of mentioned, you know, could this be some sort of new reality that we're seeing in relations between the U.S. and China, that it's not just about trade, but this Taiwan issue is very much linked now to these discussions?
Exactly. I think, you know, Trump is quite trapped with its own problems, affordability, latest election results in the U.S. So I think Trump does need a truce. I mean, and anything that comes in between is just not of his liking. That's what's happening, even for something as important as Taiwan. So I think that's you're absolutely right. We are in a different phase at this juncture. Will it be different once if Trump wins the midterm elections? I don't know, but there's a long way to go, and China's going to profit from that space for sure.
Alicia, we've been talking about just kind of what your outlook, you know, Natixis just came out with their 2026 sort of report. And it seems like you are seeing this sort of K-shaped economy, you know, not just in the U.S. You could extend that to China in some ways, where, you know, you're seeing bright spots like AI and the investment and the money that's being piled into there. You know, obviously in the U.S. there's tax breaks, but on the flip side, you also are seeing a weakening labor market, consumption that, you know, there seems to be a lack of confidence there. China seems to be going through the same exact thing. How long do you think the sort of K-shaped economy can actually last?
Well, the biggest problem even is that we don't know whether this is a K-shaped, cyclical K-shape, or is mostly a structural K-shape because of changes in the labor market related to substitution of labor by AI, but also, of course, in the case of the U.S., even more so, is just technological progress. More generally is automation in China, AI in the U.S. I mean, all of this is pulling the strings towards less labor shares. We call it less for workers and more for capital, and that is true everywhere, as you said. But this has implications for nationalist movements. For, you know, everybody's going to try to get more of its own pie, and the pie is going to shrink. So yeah, K-shape, and the key problem is it structural? Is this structural?
For China, we seem to see some of the structural issues around the property sector once again reemerge itself. I'm talking about China Wanke now with the latest news. How tolerant do you think policymakers are going to be still on this property slump?
Well, I think Chinese policymakers are still kind of not ready to do much more for the real estate sector, because they've seen the economy grow without. We basically had the worst fixed asset investment in real estate in probably history, minus 14.7, nothing happens. Growth continues. Why? Because we have this massive boom in export. So I think they probably think that they can cope with it. However, as you rightly point out, we're not out of the woods. We also have Banque. I mean, all of these real estate developers can't survive without demand coming back. So I just worry that that policymakers feel that kind of underestimate the problem because it's worked so far, but it may not work in the future. So, how much more time can you have these big developers suffering without demand is really a big question for the Chinese economy, especially because it relates to the financial sector. Not so much through developers, because the loans to developers now are very, very small, but more generally about local government supporting these developers. Those are like 15% of bank assets, and that's where the bulk of the problem is. So I hope they're not underestimating this problem.
And in terms of policy levers, what do you think they can address at this point?
Well, I think as we see it, next year exports will be tougher for China. For many reasons beyond protectionism. I mean, we even see the capex coming down for all of these export-related companies. So there's going to be less to export, still a lot, but less demand for those exports for sure. And that means that China will need to pull the strings of additional stimulus. What we've seen in 2025 is basically infra-related stimulus, not consumption-related stimulus. So I can imagine that they will keep on investing in infra, and the most obvious one is hydropower and upgrading the grid. And that's a lot of money that is needed for that. So I think they're going to just do more fiscal, not so much monetary, because rates are too low already, and especially yields are too low in China.
When you talk about fiscal, I mean, it's interesting you mentioned that the Fed can continue to cut, but Asia's central banks are done when it comes to their rate cutting cycles. Tell us a bit more about that. Why do you think that they're done? Yeah. And do you think fiscal stimulus can actually kind of take the reins here moving forward?
Yeah. So BOK was done, as we saw this morning, and I think why is BOK done? It's because the won is just too weak, and this is true for many Asian currencies. We have, the high yielders, whether it's Indonesia or the Philippines, clearly too weak. Currencies are too weak to play around. If you see what I mean, it's risky. There could be sudden withdrawals of portfolio flows. We didn't see many this year anyway. It's mostly about FDI that has come into ASEAN. But, for that, I think you can't play with fire. The other example is Taiwan. The currency is just too weak. So can you cut? I mean, Taiwan wouldn't have to cut. On the contrary, they would have to hike. But, in case of Bank of Korea, it's just the only exception is RBI. I mean, they can cut. Because as we learned, there is a lot of space, but they are not comfortable with a very weak rupee. So the whole idea is currencies are already too weak. So it's hard to cut. If you've already cut, you front-loaded your cuts because you were worried of Trump's tariffs. So now your currencies are very weak. You don't want to cut more. Yeah.
You also mentioned about the tech cycle running out of steam for next year. How do you think this is going to play out? Because right now, everyone seems to be still so optimistic about the amount of investment that's going on into AI. In this part of the world, it's still relatively not as much as we're seeing in the U.S., so maybe there's still room to kind of invest in these sort of stocks in particular. But what sort of slowdown are you foreseeing, and how is it going to impact this part of the region?
Well, I would say beyond the usual suspect, TSMC, with demands that, like others that probably can't even cope with because it's kind of the bottleneck, or ASML in Europe. I mean, those kind of absolutely non-substitutable products. For the rest, there's going to be overcapacity. Everybody has invested massively, both hardware. If you think about the number of LLM models, open access in China, it's just competing with each other. So it's very hard to make profit out of this. And I think by the time we see that only a few companies can actually swim in terms of showing their financials, and those, as I said, are hardware but highest end, the rest are going to have a hard time for their valuations are just too high, especially in the US. But even in Asia, I would say that there will be a correction.
Alicia, it's great to have you. Alicia Garcia Herrera, their Chief Asia Pacific Economist, and Natixis CIB joining us from Kaohsiung. Taylor, when it comes to some of these consumer stocks in China, it's certainly interesting, right, what we're seeing here after Beijing announced new measures to boost spending. So they talked about here unveiling plans to better align supply and demand for consumer goods, including the likes of, yeah, you got this, collectible toys to boost growth. So Pop Mart, that's why you're seeing shares are popping there, climbed as much as 10%. We come off a little bit here, but you're seeing it, a lot of buying into the Laopu Gold, some of the smart sort of home sort of appliance makers like Haier, that's up about 1% here as well. So certainly that is one thing to watch very closely. How Labubus are maybe going to help in the lift the consumption story in China. Also, another thing in our deals team, Bloomberg has learned that China's Anta Sports is weighing a bid for German sportswear giant Puma. But the race won't be easy, as you see rival Li Ning and Japan's ASICS are also said to be in the running. For more, let's bring in Manuel Balgori, who leads our APAC deals coverage, on why do you think would Anta want Puma?
That's a great question, Yvonne. Anta has been quite acquisitive in the past. Remember 3-4 years ago they acquired in Finland Amerisports,
yes,
to bring in new brands into their portfolio. So this would be similar. They would be buying an iconic brand that is somewhat struggling. Puma has been under a lot of pressure. The shares performance has been pretty poor. And under the new CEO, they're trying to come up with a new strategy to see if they can drum up a little bit more interest in the brand. But it remains to be seen. And in the meantime, some of the shareholders are also pushing the company to see, okay, let's see if the new strategy works, but how about potentially we explore other strategic options? And that's where the likes of Anta or Li Ning or potentially ASICS come into play. There are not that many iconic brands that might be in play around the world. So whenever there is one, like Puma in this case, there is always appetite for sure.
Yeah, you mentioned some big names that currently in the running as well, right? ASICS, Li Ning. Is this going to be a tough race for Anta then?
It is slowly moving, Yvonne, and part of the challenging reporting that we faced is that the situation is at the very early stage, we understand, and there are different moving pieces. It's unclear how quickly things will be put together, but the companies are definitely doing some exploratory work with the hope that they accelerate somewhat in the coming months.
Yeah, I mean, Puma is such an iconic German sportswear brand, Manuel. I mean, maybe not as big as Adidas, but do you think that a Chinese company would it meet some sort of resistance in any way?
That's a great question. We've seen that resistance across many industries. Perhaps consumer retail is one in which European countries or other markets around the world are a little bit more welcoming. So I think the Anta Sports, Sports deal that I was referring to, that was a $5 billion deal a few years ago, and that didn't face a lot of opposition. I think, again, this might be one of the few sectors that are still a little bit easier to strike deals with Chinese buyers.
Yeah, leaning Fila too. I think about that one also. All right, Manuel, thank you. Manuel Balgori there, who leads our APAC deals coverage. Coming up, we're going to be live in Hong Kong as police make arrests over a fire at a high-rise complex that's killed at least 44 people. This is Bloomberg. After that fire in a high-rise.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
A lot of our inspirations for new features comes from experiences in our own daily life.
The other day, I needed to double check an important meeting schedule by finding a specific call recording. Thankfully, with call summarization feature on my Galaxy, I could quickly find it.
Our users ask complex questions, and our model has to be able to speak multiple languages. What seems impossible now can quickly become possible.
housing complex, killing at least 44 people. Many more are still listed as missing. Let's get to our Minmin Lo, China correspondent. She is at the scene and joins us now. Minmin, I believe rescue efforts have been going on for close to 24 hours now. What's the latest?
Yeah, I mean, I can feel the smog here. It is stinging my eyes. You can smell the putridness of the smoke. And it's been more than 20 hours, and we keep seeing new fires popping up in different apartments. And it just shows you how challenging it is to fully put this out. Because if you don't fully put it out and something is left smoldering, the fire would spread again. And it's popping up in different parts of these apartment complex behind me. There are 8 blocks in total, housing about 2,000 units, 4,000 residents who used to live there. And earlier this morning, we did see some people being wheeled out on stretchers, were rescued after being trapped inside for many hours. They looked conscious, but the rescue efforts, the firefighting is still ongoing, and it's been extremely devastating. There are a lot of Hong Kong residents who are here just watching the fire burn. I saw some of them just standing here quietly praying, some of them crying in tears. I saw residents who tell me that this is where they used to go to school, and they pass by this area every day. They have friends living there. They told me one of their friends who were affected is living with their relatives now with no idea what to do for the longer term future, because it's just highly unlikely that they will be able to recover any items from the homes behind me, because you just see the blackened shell of the buildings right now. And, you know, these families are just heartbroken and at a loss. Many of them just so shocked at how fast the fire had spread.
Yeah, can you explain what authorities have said so far? Why did it spread so quickly this time around? In particular, when it came to the bamboo scaffolding too, Minmin.
That's right. So this estate is very old. It's about 40 over years old. It's government subsidized housing, and it was undergoing heavy renovation. So there was a lot of bamboo scaffolding. There were these green mesh surrounding the building, and authorities said they found substandard materials. They found flammable materials at every floor, and there were like styrofoam boards sealing the windows. There were plastic cloth, and these are all not up to Hong Kong's compliance standards, and that's why there is a criminal investigation going on. Police have arrested 3 people from the engineering company over manslaughter and gross negligence.
All right, thank you so much. We've got plenty more ahead. Welcome back. You're watching Insight. We're checking Indian markets here this morning. And an hour into trading, we are seeing still continued gains across those markets. Sensex is up about 0.4%, which is hovering around that 86,000 level here as well. And the IMF has and talking a little bit more about GDP, that certainly is one thing we're watching out for that's coming up as well. And then there's also this new FX regime, right? The IMF has reclassified India's exchange rate regime 2 years after suggesting that the country's central bank was intervening too heavily in the currency market. The Washington-based lender is now calling it a, quote, crawl-like arrangement, marking a change from the previous stabilized classification. We'll more or less bring in our South Asia economy and government reporter Anup Roy in Mumbai. Anup, tell us a bit more what this new classification means.
Yeah, so the crawl-like arrangement would mean that the IMF perceives that RBI is allowing more flexibility into the rupee. So under the new governor Sanjay Malhotra. So under the previous governor Shaktikanta Das, the rupee had remained quite stable. It did not move much. But since Sanjay Malhotra took over as the governor since December last year, the rupee has moved quite a lot. The rupee has moved some 4%. It has depreciated. So IMF is observing more flexibility in the rupee and hoping that it will continue like this. So from a stabilized arrangement, rupee is now into a crawl-like arrangement.
Okay, so what does it mean for the RBI in particular and the currency markets?
That would mean that rupee will be more market determined. RBI will probably not intervene much to determine, RBI does not determine a level, but it does intervene frequently depending on the volatility, etc. But a more flexible rupee regime would mean that the markets will have a greater say in the price discovery of the rupee. So that would mean that the rupee could be under depreciation bias if the tariff tensions continue, or if the tariffs are sorted out and FDI flows emerge, then rupee could appreciate more. So it will be more like market flow oriented.
Okay, in terms of the economy, what has the IMF said? It looks like they've maintained their forecast here for the economy to grow 6.6%. What assumptions are they making?
So IMF has increased the forecast for this current year to 6.6% from 6.4% they had said in July 2025. That is because of the strong second quarter, April, May, June quarter. However, for the next financial year, they have cut the growth forecast to 6.2% because of the tariff impact. Now, they are saying that if the tariff impact, if the trade negotiations are done, if the tariffs are sorted out, then economy will probably go back to its potential of 6.5%. Indian economy otherwise is robust. Its external sector is good, but the tariffs will significantly impact US's exports to US.
Anup, thank you. Anup Roy there, South Asia economy and government reporter joining us out of Mumbai. And we mentioned about GDP, right? India is set to announce its GDP growth data for the fiscal second quarter. That's going to be happening tomorrow, right? And for Bloomberg Economics, this is what they're expecting. Growth to have lost steam as weaker indirect tax receipts and a slowdown in services took a toll. However, excluding the tax impact, the economy is estimated to have expanded more strongly, and that's really driven by industrial output. Softer inflation is also believed to have boosted household purchasing power while easing input costs for firms. Joining us now exclusively now is Sudipta Roy, Managing Director and Chief Executive Officer of L&T Finance. It's one of India's leading non-banking financial companies and a unit of the multinational conglomerate Larsen & Toubro. Sudipta, it's great to have you. Obviously, we've been talking about a lot of the GST 2.0 reforms that really have reflected in consumption demand. How do you see these tax cuts really reflected when it comes to that demand picture here, and has it changed your growth projections in any way?
Yeah, thanks, Yvonne, and thanks for the opportunity. I think the GST 2.0 reforms, in which we saw the sort of GST rates being sharply revised downwards for most consumer items category, actually gave us a very good fillip in the festive period, which is the Diwali period, which happened in October of this year. And some of the categories saw very good growth. For example, in our two-wheeler segment, and our two-wheeler segment saw a massive growth. For example, if I look at last year's demand at an index of 100, this year's two-wheeler demand was almost at 230, as per the recent data sort of published by TransUnion CIBIL. The auto loans also saw a good amount of growth, 12 to 14% growth, as well as consumer durables also saw a good amount of uptick. So overall, the task that GST 2.0 had of spurring consumer demand actually has largely sort of hit where it was supposed to hit. And as far as lenders like us, we have seen a very, very good growth rate in the month of October. If I look at my October 25 to October 24 growth rate, our retail disbursements actually grew by a whopping 39%. So overall, yes, the demand has perked up. And as lenders, banks and non-banking financial companies like us are also stepping up on the credit.
And it's interesting, right? I mean, this is coming at a time when there's a lot of competition in the financial services space in India. A lot of foreign players are obviously joining into the rounds here. Sudipta, how do you plan to at least compete in that sort of landscape now?
See, I think the Indian market, and a little earlier we were talking about the GDP growth rate. Our internal estimates of, though the IMF GDP growth rate estimate is around 6.6, our internal estimates of GDP growth rate for this year is about 7%. The reason I say that is that because rains have been very good, about 112 to 114% of long period average. The rural wage growth rate is very, very strong, between 5 to 8%, and we are seeing a resumption of consumer demand. Now, India is a vast country, and if you see credit growth rate last year, credit growth rate last year, obviously retail credit growth rate last year was between 10 to 12% depending upon the region. And this year, RBI obviously has been focusing more on the growth story getting going. And given the vast nature of the country and the large amount of consumer sort of throughput, 60% of India's GDP is driven by domestic consumption. There is a lot of space available for both banks and non-banking financial services companies to lend. For us specifically, we are a very balanced sort of asset profile. About 44% of our assets is in rural areas and about 56% of our assets is in urban areas. So we actually straddle both rural and urban. And for us, we are a very, very large player in the urban area. We're the second largest microfinance lender. We are a very large tractor lender. So we expect that the growth that is coming in the rural areas will help us also grow our balance sheet, as well as we partake a lot of growth in the urban areas as well, especially in the two-wheeler segment, the personal loan segment. The personal loan segment actually has started growing quite well. The growth in the last 3 months in personal loans origination has been upwards of 30% in the industry. For example, our book has grown by almost 90%. So this growth has been overall secularly strong in the last quarter, and we expect the same growth story to continue in H2 as well.
Are you currently in any talks with any foreign players or even PE firms to raise capital then?
No, I think we are pretty well capitalized. And for us, we are currently at a debt equity of about 3.5. So, where we are positioned right now, we have enough capital to sort of suffice for our next 2 years of growth. Maybe, we will look at a capital raise sometime around middle of FY27 is when we will look at FY28, which is calendar 27, is when we look at a sort of capital raise.
And in terms of what sort of AUM are you targeting maybe here for the next 3 to 5 years now?
Good question. Right now we are about 1 lakh crore, which is a little about $12 billion. And in terms of our AUM growth sort of projections, we are targeting a very strong growth. As you know, the Larsen & Toubro Group runs a 5-year sort of planning exercise every 5 years. It's called the Lakshya or the target. So we are at the fag end of the Lakshya 26, which we started in 21. And our sort of compounded annual growth rate target at that point in time was about 25%. We are now at about 28%, and we have grown pretty well. So we are at the beginning of the Lakshya 31 planning exercise, and we will give out these numbers out in the beginning of the next financial year. But I can assure you that the growth rates that we have planned will be upwards of 2 times or even more than that in terms of AUM growth rates over the next couple of years. We do believe that the growth momentum in the Indian market is quite strong, and given our asset profile, we should be able to grow equally strongly in the urban areas as well as the rural areas. And as a well-capitalized NBFC, we intend to partake in the growth in both the sort of markets.
Yeah, given the growth that you're seeing, Sudipta, are you looking to, launching any new sort of product offerings, or at this point, are you looking at scaling back some existing businesses?
So we just recently entered our gold loans business. We actually did not have sort of a gold lending business, which is a very large and fast-growing business in India. In fact, it has been the fastest-growing retail asset class in India last year. So we wanted to partake in this business because when we looked at our sort of rural customer profile, we saw that our rural customer base has borrowed a huge amount of sort of gold loans, upwards of $2.5 billion of gold loans that has been borrowed by our rural customer base. So we said that this is a business where our customers are borrowing from others. We need to get into this business. So we acquired a small boutique gold loans firm and integrated into our business around the June of this year, and we are now setting up new branches. In fact, we'll be setting up 200 new branches this year, almost at the rate of 1 new branch every day for the rest of the year. So that is one.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
new business that we have gotten into. And obviously, we look at expanding our current line of business like microfinance, personal loans, mortgages, our two-wheeler business, and our SME business. So we will focus on growth on our existing line of business as well as on our newly acquired business. We will scale it up.
You mentioned microfinance. Obviously, there's been the surge of non-performing assets earlier this year. Where are we, do you think, in this crisis? Do you think we're out of the woods just yet?
Yeah, so in microfinance, actually, we were probably the least impacted. If you see the microfinance industry sort of loss rates last year in India, the loss rates, depending upon the lender, varied between 8 to 12%. So obviously, we have seen a deceleration of the sort of the origination momentum as well as the overall microfinance book size also shrunk by almost 20% for the industry. For us, we were the least impacted. In fact, but we are now the second largest lender. We were the fourth largest lender because of the sort of readjustment in the industry. We have emerged now as the second largest lender. Our loss rates were quite low during the period. We are actually the lowest. We came in at about 3.8% loss rate compared to an industry average of 8 to 12%. And because we sort of managed the crisis well, we are able to gain market share right now. During the period, our market share gained by almost 1.5%. And I do believe that the industry is almost out of the woods. Maybe a little bit of long tail of that particular asset crisis remains. But I do believe that the industry will go back to its growth path in about another, couple of months. However, there is a little bit of a liquidity issue in the market because some of the players are actually finding it difficult to generate enough liquidity to lend. So moment that gets sorted out, and the industry regulatory body is also engaging with the government on that as well. And moment that gets sorted out, I do believe that the industry will resume its growth path. However, with a lot of degree of caution right now, and I do believe that the growth rates in the industry will be muted in the coming future, and probably we will see not more than 5 to 10% growth rate in the industry.
Sudipta, it's great to have you. Sudipta Roy there, MD and CEO at L&T Finance. And still ahead on Inside, China's real estate sector suffers another blow as state-backed China More now on developer China Wanco's surprise proposal to delay repayment on a local bond, which is renewing concerns over a deepening housing crisis. Joining us to discuss this is Zerlina Zhang, head of East Asia Corporates and Asia Credit Strategy at Credit Sites, and she joins us from Singapore this morning. Zerlina, it's great to have you. It seems like we have you on every time there is a bit of a problem when it comes to the credit market in China. When it comes to this Wanco issue, some analysts saying, they pointed this move as maybe coming a bit earlier than expected. Were you surprised by this move?
Thanks for having me. I think the delayed payment of the onshore bonds, this timing is slightly earlier than our expectation, just because the company earlier said they did have funding for at least a maturity by year end. And there's the big policy meeting in December. So we would have imagined maybe in early next year, the company will go ahead with certain type of debt restructuring, but the timing is a bit earlier than our expectation. That having said that, I think since earlier this year, we have mentioned this company's standalone credit profile has been very weak, and all the pricing and all the trading is really hinged on the government support. And we are quite cautious about this type of company when the self-funding or the self-internal fund generation has been weak.
People are talking about the worst case scenario, right? In the event of Wanco potentially defaulting, what sort of implications do you foresee this could have on the sector?
I think the incremental negative impact on the sector or on the broader China credit market is actually quite limited. If you compare this with when China Evergrande or Coguard defaulted a couple of years ago, for a few reasons. The first is just if you look at the index level, China high yield property is less than 5% of the index weight versus 2021 it was more than 50%. And from a market impact perspective, perspective, back then the major participation in China high-yield property bond are the real monies, the institutional investors, private banks, but now it's mainly the fast money. And because of this ongoing China property sector slowdown, I think people are to some extent expected that the Vanke is going to restructure debt at some point. It's just the timing is a bit earlier than our expectation.
Well, at what point do you think policymakers are going to be forced to step in some way? Do you foresee any sort of new property measures that could be unleashed because of what we're seeing with Wang Ke?
We don't expect any major property measures towards the developers or for the governments to save the developers. Actually, if you look at the past few years, the central and local government, they haven't really saved any property developers or bail out any bondholders. I think on the ongoing basis, you will continue to see incremental small measures driven by the local government. But in terms of nationwide additional new money towards the property developer sector, I think it will be very limited. The central government has reaffirmed their stance that the new driver for the economy will be high-end manufacturing. It will be technology and other sectors other than the property. They no longer see property as the biggest driver for the economy. So we will be very surprised if next year the government decides to go ahead and bail out the property bond holders, or they would push out a lot of the stimulus towards the sector.
It's interesting. Some have said that, given what we're seeing so far, that there really has been no let-up when it comes to what we're seeing in the property sector, that eventually policymakers are going to move from just saving projects to actually saving developers themselves. You don't see that happening?
I don't think the government is going to save the developers because the China's property market has been much smaller compared to 5 to 6 years ago. So in theory, the government does not need that many developers, especially coming from the private sector. So right now, the outstanding or still performing state-owned developers, they could support the market in terms of the new home supplies and the ongoing build-out of the secondary projects. And in the China market, people are not looking into the primary market anymore. A lot of people are looking into the secondary market because there is enough supply and they might be able to get a huge discount in the secondary market as well. Going forward, definitely the government will still looking at those incomplete home projects. There will be additional funding towards the delivery of these home projects, but we don't think the government is going to put in a lot of additional new money to save the developers.
In terms of property sales, then, if we're not going to see meaningful support from the government, what are you foreseeing? What expectations do you have in terms of property sales for next year, then?
We think property sales will likely still go down and home prices will continue under pressure, especially in lower tier cities. Even if you look at upper tier, first tier cities such as Shenzhen, Guangzhou, in certain districts, the price is still continue going down. The root problem is still the home inventories is very elevated in China, even though we see a lot of measures getting pushed out by the central governments trying to digest this home inventory, but level is still very elevated. You basically don't see that much incentive from banks or the asset management companies to pour in new money to resolve the home inventories. Definitely there are measures about developing social housing to buy the existing inventories and convert them into the social housings, but this does not resolve the issue of still elevated inventory in the system. Going into next year, I think the government will likely look at the pace of the price decline in both the primary and secondary market. They will also monitor the local government's budget conditions because of the lack of land sales. But overall, we are not seeing a very high chance of additional credit contagion or additional spillover to the general macro economy. So I think it will be very difficult. The hurdle is still very high for the central government to push out very big measures towards the sector.
Zerlina, I want to end on a slightly positive note. When it came to news on New World. So they did get a bump in support when it came to this debt swap proposal. This is a pretty small win, I guess you could say, for bondholders, but what do you think comes next when it comes to New World?
Yeah, so when we looked at the exchange offer, we definitely think it was a positive sign that the family decided to throw in Victoria Dockside, which is the crown jewel assets for the bondholders. We had expected that these crown jewel assets would have been reserved for the bank lenders. So in terms of the security package, this is definitely to some extent compelling for the bondholders, but the security package itself is not direct collateral against the new dollar bond. So it is also to a little bit of surprise of us that the take-up rate is so high. Our fair value estimate for the new dollar bond was around 85 cents, and now it is trading above 90 cents. So from that angle, it is not so attractive, but I think a lot of the investors are pricing the scenario there might be additional equity injection from the family as well as from other equity holders. So for those betting on the equity injection scenario, there could be some additional price upside. We have cautioned that this is not something that real money investors or those with buy and hold strategy to get into. Right now, the involvement is very much from the fast money, and trading has been very technical. In terms of the next step, I think the company will need to continue addressing the outstanding dollar perp, the existing perp, so they could clear the hurdle of that dividend stopper and then pave a way for the additional equity issuance.
Zerlina, thank you. Zerlina Zhang there, head of East Asia Corporates and Asia Credit Strategy at CreditSights, joining us out of Singapore. Just one more last check of markets here right now. Looks like we've lost a little bit of momentum here on the back of this rally, but global stocks are actually on the rise there for a fifth straight day. They're really kind of cutting that drop that we saw in November to just about, 0.5% here right now. So looks like we are actually still seeing some green here, really led by the likes of the Nikkei 225, Kospi, Nifty also are seeing some gains here as well. Before we go, here's a look at some of our guests for tomorrow. We'll get insights on the latest investment opportunities in the region from Capital Group's Andy Button. And for our India Focus segment, we turn to the upcoming GDP report and preview the growth numbers with Nomura's chief Indian economist, Sonal Varma. That's it for us here in Inside. Horizons Middle East and Africa is next. This is Bloomberg.
News when you want it with Bloomberg News Now. I'm Monica Ricks. FBI Director Kash Patel says the National Guard shooting in Washington, D.C. is being investigated as an act of terrorism.
This subject definitely did pick the wrong country, and we will rise together as a nation to show the world what we do here. And we are thankful that we have the Attorney General's brave leadership and President Trump's brave leadership and priorities to safeguard our communities.
Attorney General Pam Bondi says the Justice Department plans to seek the death penalty.
We will do everything in our power to seek the death penalty against that monster who should not have been in our country.
The suspect was identified as an Afghan refugee who came to the U.S. after the Taliban's takeover in 2021 and had just been granted asylum by the Trump administration in April. As for the two guardsmen, Bondi says they're still fighting for their lives. At least 75 people have now died and more than 70 injured in a massive apartment complex fire in Hong Kong, where fire officials spent the night searching for trapped residents. 3 men from a construction company have been arrested on suspicion of manslaughter. Russian President Vladimir Putin says he's ready to talk to the U.S. about specifics in President Trump's proposal to end its war with Ukraine. But so far, he hasn't seen a final draft. U.S. presidential envoy Steve Witkoff is expected in Moscow next week. The holiday travel rush is on, and millions of Americans are packing airports and highways to get to their Thanksgiving dinner destinations. This man tried something different.
Last year we drove, and it can be
kind of a hassle. So this year we decided to take the train.
Heavy snow is slowing some drivers down in the Midwest, but for the most part, people are hitting the road for the holiday thanks to lower gas prices. Patrick DeHaan is head of petroleum analysis at GasBuddy and says the national average should dip below $3 a gallon soon.
Yeah, we saw another week of refinery utilization that's increasing, and this is telling us that refinery maintenance, which usually is happening in fall, is starting to wrap up, and that's going to put downward pressure on gas prices in the weeks ahead.
Hear more from Patrick DeHaan on the Bloomberg Balance of Power podcast. Prices usually spike again in spring. Global equities are close to erasing their November losses amid rising bets for Federal Reserve interest rate cuts. U.S. stocks shot up for its fourth session in a row Wednesday, the Dow adding 314 points, the Nasdaq up 189. Money markets, by the way, are pricing in a roughly 80% chance of a quarter-point rate cut next month and 3 more by the end of 2026. A week ago, traders expected 3 cuts total. Wall Street's on Thanksgiving break, but stocks are still trading overseas. The FTSE in London and CAC in Paris are pretty flat this hour. The DAX in Germany is up about 0.3%. The Nikkei in Japan closed up 608 points today, up 1.2%. The Hang Seng in Hong Kong and China's CSI 300 showed little change. Chancellor of the Exchequer, Rachel Reeves, announced $34 billion of tax increases in the UK this week in a budget that seeks to balance the demands of both bond traders and restive Labour backbenchers. She spoke exclusively about it with Bloomberg.
My focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Chancellor of the Exchequer, Rachel Reeves, on Bloomberg TV. And shortly after Reeves delivered her budget, JP Morgan Chase announced plans to build a new tower for its headquarters in the UK, which could host as many as 12,000 employees. Construction is expected to take 6 years. French President Emmanuel Macron has announced a new voluntary military service program for people ages 18 and 19 to serve for 10 months. The program will start next summer, and young volunteers will serve in France's mainland and overseas territories, but not in France's military operations abroad. Macron says France isn't considering restoring conscription, also known as a draft, which ended in the country in 1996. The new national service is set to be gradually established. The FDA and CDC are still looking for the source of an outbreak of infant botulism linked to ByHeart Whole Nutrition infant formula. It's now hospitalized 37 babies across 17 states. Test results are expected in the coming weeks. President Trump has signed an executive order for a new AI project called Genesis Mission to boost scientific discoveries. Bloomberg's Amy Morris has that story from Washington.
President Trump is directing the federal government to combine efforts with tech companies and universities to convert government data into scientific discoveries, acting on his push to make AI the engine of the nation's economic future. It solicits private sector and university partners to use their AI capability to help the government solve engineering, energy, and national security problems. This even after the administration cut billions of dollars in federal funding for scientific research, and thousands of scientists lost their jobs and funding. In Washington, Amy Morris, Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Monica Ricks, and this is Bloomberg.
So decent gains overnight on Wall Street. Certainly there is optimism when those in the markets are betting on increased rate cuts. And you're seeing almost 100% priced in for the month of December in the money markets at least. And the news that Kevin Hassett is in pole position with those dovish views has accelerated those moves as well. Lifted the equity markets. You saw a rally in treasuries, the equity markets, the S&P 500 ending up 0.9%. You are set for a fourth straight day of gains for US stocks when you look at the futures picture, pointing higher by 0.3% on the S&P E-minis. NASDAQ 100 futures looking to add 113 points. Here in Europe, the focus, of course, is going to be on the read across, given the upside we saw in the equity markets yesterday. You saw solid gains on Tuesday out of Europe. European futures looking to build on that, pointing higher by 0.7%. Here in the UK, the FTSE 100 futures picture looking to add 23 points. Of course, the scrutiny will be on UK assets, not just equities, but of course gilts in focus as well as the pound. Let's flip the board and look cross-asset. Talking of which, of course, the pound. There have been these moves betting against the pound in the lead up to this crucial budget, which will be announced at 12:30 p.m. UK time, of course. 131 right now on pound versus the dollar. Slightly higher in the session, up 0.2%. We'll see to what extent that changes and adjusts around the budget. The US benchmark 10-year rallied yesterday in the session, giving up some of that today, only modestly, but still just above that 4% line. Yields up just 1 basis point in the session today, again, after the rally that we saw yesterday. Gold at 4,161. The yellow metal getting a bid as well on rate cut expectations from the Fed, up 0.8%, and Brent remaining at around that 62 level, a little higher in the session, up 0.4%. So let's get to the details around the UK budget. The Chancellor, of course, Rachel Reeves, due to deliver her second budget in the House of Commons later today. Reeves knows that the much anticipated budget will need to placate both the MPs who've put Keir Starmer, the Prime Minister, of course, on notice, and the gilt holders who've been demanding a premium on UK debt.
Obviously, more headroom would be good, but there's always trade-offs because, of course, to build more headroom, you would have to increase taxes further or cut spending further. But we'll continue to manage that balancing act.
Well, in the build-up, the Chancellor made an unusual media intervention where she appeared to prepare the public for a hike in income tax, despite saying after her previous budget that it had, quote, wiped the slate clean.
It was a significant budget yesterday, but that budget wipes the slate clean so that we never have to do a budget like this again.
So can I take that a confirmation, no tax rises for the rest of this Parliament?
Well, no Chancellor is going to be able to tie their hands in that way. But there was a significant budget yesterday because we had to wipe the slate clean after the economic mismanagement, the chaos and the instability from the previous government. No government should have found themselves in the position that we did, having to clear up that mess. We've now done that and we can move on.
OK, so hearing from the Chancellor speaking, of course, back in 2024 and more recently. For bond traders, a key focus will be how much of a buffer Rachel Reeves creates against her fiscal rules. It was very slim the last time around, and whether it is enough to soothe those market concerns. Let's bring in Bloomberg's Lizzie Burden, who, of course, has spoken to the Chancellor a number of times and follows this story in great detail. Lizzie, outline for us the challenging situation the UK Chancellor finds herself in.
Well, you framed it perfectly, Tom. She is caught between the bond vigilantes on the one hand and the left wing of the Labour Party on the other. This is the biggest test of Rachel Reeves' political career. We're expecting the Office for Budget Responsibility to say that UK borrowing is going to be £20 billion a year higher by the end of the decade than it had seen back in the spring. And that is going to wipe out the headroom that you said she had left, that razor-thin margin against her fiscal rules of £9.9 billion. So she needs to rebuild the public finances. And at first it looked like she was going to do that by appealing to the bond vigilantes, by breaking Labour's manifesto, raising income tax. But then, of course, as you say, we had that policy U-turn, and her officials have been briefing that we can actually expect a smorgasbord of smaller tax rises. So now we ask, how much headroom is she going to leave? It looks like it'll be about £15 billion. Is that going to be enough for the market? And already that will be politically painful. You'll remember when George Bush Sr. said, read my lips, no new taxes, and he broke that pledge. He was punished at the polls. You heard there the Chancellor saying, and she said it to the CBI, to business as well, she is not coming back with more borrowing or more taxes. Never before has Labour polled this badly. She is really in a bind if she does more.
What are the individual measures we can expect? What is likely, what is unlikely from this budget later today?
The single biggest measure on the tax front is likely to be a freeze on personal tax thresholds, a stealth tax rise. Politically, we're also expecting her to lift a mansion tax on £2 million homes and more. But that might appeal to the left wing of the party. It's not expected to raise as much as she would like to raise. There could be more sin taxes, gambling, alcohol, tobacco. But really interesting on the spending side, how much she is going to cut. Is she going to leave all of the revenue raising to tax rises and just be stuck in this doom loop of having to come back and back and back for more tax rises? It looks like she could lift the two-child cap on benefits, which would cost £3 billion. And if she backloads the spending cuts to the end of the decade, there will be questions in the markets perhaps about debt sustainability. So we, as you say, watch the bond market reaction to this. Liz Truss looms large over Rachel Reeves every time she has a fiscal event. And of course, we watch the currency markets as well. There's been huge volatility in the pound-euro trade. And as you say, you've seen the pound weaker against the dollar. You've seen the expectation that it'll be weaker against the dollar as a result of this budget. If Reeves can pull this off, you could see a relief rally for sterling.
Lizzie Burton, thank you very much indeed. Let's get more in terms of the market positioning around this UK budget. Later, by the way, we're going to be talking with 91's head of managed income on the gilt markets, of course, as Lizzie was saying, so central to what happens today. John Stopford with those views coming up. The chair of the UK House of Commons Treasury Committee, Meg Hiller, and CBI chief economist Louise Hellem. All of those interviews coming up on our programming. Do not miss those conversations in the run-up to this crunch budget. UK Chancellor Rachel Reeves, of course, will deliver that budget at 12:30 p.m. today in London. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. And it doesn't stop there. The opening trade will break down the numbers with key business and political voices in its budget special tomorrow morning. Let's get more on the market views right now. Bring in Bloomberg's MLive cross-asset strategist Ven Ram, who thinks deeply about the pound, gilts and the reaction function around UK policy in the lead-up to this budget. Ven, what for you are the top-line implications on both gilts and the pound? What is priced in? What are the risks?
Morning, Tom. I think that the pound has kind of weakened in recent weeks in reference to relative to its fair value. Its investors have tacked on a significant risk premium to the pound since the end of September. It's now trading about 2.6% weaker than it ought to on the basis of my modeling. And therefore, I think that that risk premium is kind of quite evident. Now, Chancellor Rachel Reeves has quite a challenging task today to make sure that the risk premium is erased to at least some degree. But, you know, many of the measures that she's likely to outline or maybe inflationary, which may keep the BOE from cutting rates. Now, one of the measures we already know is the living wage, increase to the living wage, which is 4.1%, which is kind of inflationary. And it also strokes unemployment, the prospect of unemployment at the same rate. So I think that, you know, it's going to be a very tricky act. I mean, how much of fiscal, how much of debt is she going to incur? Is she... The UK's debt to GDP ratio is already 95%. So, but she can't borrow too much more. At the same time, she can't raise taxes because that's already backfired. So she's caught between a devil and the deep blue sea. So let's see how this goes. But there's going to be a significant demand from traders to keep that risk premium on gilts and the pound.
Yeah, it's a very thin line to walk, isn't it, for the UK Chancellor? One strategist telling us yesterday that they want to see a budget that is both disinflationary but also invokes stability as well. So those key factors to your point on the inflation dynamics here in the UK, which of course have been stickier, particularly when it comes to services. Switching focus then to the big news overnight, broken by our team on Bloomberg in terms of the front runner for the Federal Reserve. We're learning that White House National Economic Council Director Kevin Hassett is now leading, and that is according to advisors and allies of President Trump. Talk us through the market reaction to that potential outcome.
So far, the markets seem to be taking it okay because he was already a front runner, and the markets were thinking that, you know, this job in May is going to go to a Trump loyalist. So it's not a huge surprise to the markets that Kevin Hassett has been put up as the #1 candidate at the moment. But the question is, it's almost a given that rates are going to be cut next year. And with a more compliant Fed chair, I think it is more likely that we will see the terminal rate go down to 3%, which is what the markets are factoring in. Now, the key question is what happens if the Fed wants to push rates lower than that? If they go to, say, there have been suggestions made of 2.5%, which would be kind of ridiculous. If you think about inflation, core PCE has been averaging 2.8% this year, and you've got a you've got a real GDP growth of 2%. So that wouldn't argue for rates to be anywhere even at 3%, let alone 2.5%. So the Fed can have the rate that they want, but it is the front-end markets, front-end treasuries that will determine where the actual implications of the policy rate are. If you look at the 2-year treasury yield, it's holding around 350, and it hasn't meaningfully gone down below that level. And as long as the Fed continues to cut rates in defiance of inflation, I think that the markets will send out a very clear and loud signal to the Fed that, look, you can artificially lower rates, but you can't artificially engineer market rates, and that yield will come to haunt the Fed.
OK, Ven Ran, thank you very much indeed. Bloomberg's M Live strategist with the analysis on the Fed and the UK in the lead up to the budget. Ven, thank you. Let's check in on the Asian markets right now and bring in Min Min Lo, standing by in Hong Kong. Min Min, a decent session once again over in Asia.
Hey, Tom. Yes, it is a happy hump day here in Asia. As you can see, solid gains throughout the region. As you said, a lot of it is the tailwind out of the U.S., right? The repricing of the Fed rate cut in December. There is the Kevin Hassett factor as well. So you can see the Kospi up about 2.5% here. But we are watching some of the earnings that came out overnight after market close yesterday in China. Alibaba, big one, because yesterday it reported earnings that was better than expected. If you look at the revenue, 5%, that's a beat. The big standout was its cloud revenue up by 34%. But the reason why investors are punishing the stock now is because it saw the biggest profit slump as well on the back of the price competition with the likes of Meituan and JD. Interestingly, you look at the big rival Meituan, 5.8% higher. This is the biggest gainer on the HSI today. We are looking ahead to its earnings on Friday. We are, in fact, expecting a loss there. The reason why we're seeing this bounce is because there has been huge short interest on Meituan, but it seems like investors are now hedging or covering their short on the back of comments from Alibaba saying that their investment into instant retail is peaking already, and there's expectation that maybe the price war is going to loosen up from here on out, so lifting all boats in the sector. But flip the board, we are also watching SoftBank. This has been a very volatile stock. If you remember yesterday, it declined by about 10% or so. Today, recovering by 5.3%. Yesterday, it was because of the Alphabet story versus NVIDIA, but today we have the information reporting that OpenAI expects to see over 200 million paid subscribers by 2030, and of course, SoftBank heavily exposed to OpenAI.
Min Min Lo in Hong Kong. Thank you very much indeed. Coming up, President Trump dispatches top negotiators for meetings with Russia and Ukraine, but says tremendous progress is being made. Details are next. This is Bloomberg.
A lot of our inspirations for new features comes from experiences in our own daily life.
The other day, I needed to double check an important meeting schedule by finding a specific call recording. Thankfully, with call summarization feature on my Galaxy, I could quickly find it.
Our users ask complex questions, and our model has to be able to speak multiple languages. What seems impossible now can quickly become possible.
When we first started, cyber threats were more limited in scale and severity. They were a bit like digital graffiti. Today, cyber threats are more sophisticated, persistent, and difficult to detect.
SICW unites public and private sectors to tackle today's cyber threats as one.
We have to work together to build a global cyberspace we can trust.
Join us in shaping the next era of global cybersecurity.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. But Ito Renewables is unlocking this resource with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
Welcome back to Bloomberg Daybreak Europe. President Trump says he has dispatched top negotiators for additional high-level meetings with both Russia and Ukraine, but would only be willing to meet both leaders when a deal to end the war is in the final stages. The president says Special Envoy Steve Witkoff is likely to meet with Russia's Vladimir Putin in Moscow next week. Trump says progress is being made, but trying to reach a deal is a complicated process.
People are starting to realize it's a good deal for both parties. If they got to stop the war, they're losing a lot of people, a lot of soldiers, mostly soldiers.
In that 28-point plan that was originally leaked, there were some portions of that that said that Ukraine...
Well, that was an original proposal, and then from there we went back and forth.
So when it comes to ceding land to Russia, is that still on the table or has that changed?
Well, they're talking about going land both ways and trying to clean up a border. You know, you can't go through the middle of a house. You can't go through the middle of a highway. So they're trying to work something. It's a complicated process. Doesn't go that quickly.
Well, Bloomberg's Russia government editor Greg Sullivan joins me now for the details on this. Greg, where do we stand then when it comes to negotiations right now? What does President Trump hope to see out of these meetings with both the Russians and the Ukrainians?
Well, there certainly is a flurry of diplomatic activity, and we have heard from President Trump that he's expressed a lot of optimism that a deal can be reached. There was, of course, a report that the Ukrainians had signed on to a deal, but Ukrainian President Volodymyr Zelensky seemed to rebut that, saying talks were ongoing. It does appear that some of the differences have been narrowed, but sticking points remain. A big thing, though, that is outstanding is it's hard to see what kind of outstanding issues, settlements to those, could satisfy the Ukrainians that wouldn't be a deal breaker for the Russians, and vice versa. Major issues do remain, and it's unclear that they've made much progress on them, things like land and security guarantees. Nonetheless, the talks are continuing with Trump sending his envoy, Steve Witkoff, to Moscow. U.S. Army Secretary Dan Driscoll going to talk to the Ukrainians. He was here in Abu Dhabi talking with the Russians. So there are a lot of conversations ongoing, and the diplomatic process does seem to be continuing.
OK, and we continue to monitor that, of course, and any outcomes. Bloomberg's Greg Sullivan, thank you for that update. Meanwhile, Bloomberg is exclusively reporting that US presidential envoy Steve Witkoff, who will be meeting with Putin soon, advised Russia on how to pitch the Ukraine peace plan to President Trump, just days after Trump announced a peace deal in Gaza. In a phone call on October 14th that lasted a little over 5 minutes, Witkoff spoke with Putin's top foreign policy aide, Yuri Ushakov, to suggest they work together on a similar plan for Ukraine and that Vladimir Putin should raise it with Donald Trump. His guidance included suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in. President Trump was asked about the Bloomberg reporting while speaking to reporters on Air Force One.
That's a standard thing, you know, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. You know, that's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Coming up, Kevin Hassett emerges as a front-runner to be the next Fed chair. More on that Bloomberg scoop next. This is Bloomberg.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. But Ito Renewables is unlocking these resources with continued investment.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back to Bloomberg Daybreak Europe. Here's what else to think about today then. 12:30 p.m. UK time. This is where the focus of the UK is, of course. It is the budget. Chancellor Rachel Reeves will be delivering that budget statement 12:30 p.m. UK time. We will have, of course, full and comprehensive coverage and analysis in the lead up to, during and on the back of course, that statement. We'll bring you the full statement, of course, from the Chancellor at 12:30 p.m. and the analysis after that. At 1:30 p.m. UK time, we're going to get US jobless claims as we get signs, of course, of cooling in the job market in the US. Durable goods as well, that data is out. And at 7 p.m. UK time, the Fed Beige Book, given some colour in terms of Fed views at the regional level, at least. Talking of the Fed and leadership, Bloomberg has learned that White House National Economic Council Director Kevin Hassett is being seen as the front-runner to be the next Fed chair. That's as the search for Jerome Powell's successor heads into its final weeks. Hassett spoke to Fox News Channel's Hannity about this.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But, you know, we'll see how it goes. There are a lot of great candidates.
Let's bring in Bloomberg's Jill Desis. Jill, a key question then is how aligned Hassett is with President Trump. We know what President Trump wants, cuts from the Fed and a lot of them.
Yes, well, Tom, bottom line is that if Trump is ultimately looking for somebody who wants to push for more aggressive interest rate cuts, Kevin Hassett does appear to be that guy. You can take, plenty of his interviews with Fox News and others as maybe, sort of like a job interview for Fed chair. That seems to be something that, Trump seems to like here. And what we've heard from Hassett himself is essentially that he thinks that the Fed needs to be cutting interest rates more aggressively. He has said in recent days he'd be cutting interest rates now based on the data available to him. So if, again, given all of the context that we've seen over the last year and really beyond about how much Trump has really used the Fed as a punching bag, and Powell in particular for being, in Trump's view, too slow to cut borrowing costs, it would seem that if he positions somebody like Kevin Hassett as in that chair position, that he would have a stronger ally on the Federal Reserve.
What do we know about Hassett's position? What has he said about the Fed? What has he said about monetary policy?
Yeah, well, ultimately, again, what we're seeing is somebody that does seem like he would be much more open to pushing for interest rate cuts now. He's also criticized the Fed within the past few years, just saying that it allowed interest rates or inflation rather, to run up too much after the pandemic. So you do see a lot of those positions that are ultimately aligned more with what Trump and the Trump administration are really looking for here. One thing that I do have to caution, though, Tom, just in the scope of this search, is that we still know of really, including Kevin Hassett, 5 candidates who are up for this position. That does include some current Fed members, such as Michelle Bowman and Christopher Waller, as well as others, including ex-Fed official Kevin Warsh. So the field is still somewhat open here. We have had an indication from Scott Bessent that by the end of the year is when Trump would ultimately be looking to announce somebody. Of course, Powell's term does run through the first part of next year, so it wouldn't be expected to vacate the position right away there, but it could be that we get an announcement. And while Kevin Hassett is the front runner here, according to what we know, Trump also is, very well known for sort of surprise announcements. He could change his mind at any point here. So again, you're looking at those candidates right here, and we'll see where Trump ultimately lands.
Yeah, an important caveat. Jill Desis, thank you very much indeed. Coming up, we continue our UK budget coverage as Chancellor Rachel Reeves lays out her plans to define the shape of this UK economy. That is next. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Wednesday. These are the stories that set your agenda. Budget day here in the UK. Chancellor Rachel Reeves set to present her highly anticipated tax and spend plans as she looks to placate both the bond market and backbench lawmakers. Stay tuned for our special coverage. And in pole position, National Economic Council Director Kevin Hassett emerges as the front runner to be the next chair of the US Federal Reserve. Markets rally as traders ramp up Fed cut bets. And President Trump dispatches top negotiators for more high-level talks with both Russia and Ukraine and says there is no deadline for a peace deal. That's the geopolitics. Let's get back to the markets. 3 days of gains across US stocks. A very strong session for Europe as well yesterday. Set today for a fourth straight day of gains in the US if the futures picture holds up. Of course, US futures pointed to gains of 0.3% after the S&P 500 closed higher by close to 1% yesterday. Nasdaq 100 futures looking to add 118 points. Here in Europe, looking to build on the gains yesterday. Again, a decent session for European stocks on Tuesday. Today, futures pointing higher by 0.7%. The focus, of course, very much on the UK and UK assets. How much of a risk premium has been baked in ahead of this budget today? FTSE 100 futures pointing to gains of 0.2%. The FTSE 100 has outperformed the S&P 500 year to date, but it has that international exposure, of course. Let's split the board and have a look cross-asset. We will be focused on gilts when they start trading at 8, of course, and all the way through the budget, of course, but also the pound. 131 right now, close to 132 on the pound. We know there's been some short positioning around cable in the run-up to this budget. Currently up 0.2%, though, so some gains coming through for the pound. The 10-year stateside, just above that 4% level, 4.01. There was a Treasury rally yesterday, of course, on the news around the Fed, or at least the reports around the Fed. And Brent oil prices up by 0.4%. Let's get to our top story then of the day. It is budget day for the UK Chancellor, for all of us here in the UK. Rachel Reeves, of course, widely expected to announce a range of tax hikes targeting the wealthy to fill a £20 billion budget hole to avoid breaking those fiscal rules.
Markets know my commitment to the fiscal rules is ironclad. Some people say that we should just sidestep those rules, that we can borrow more without consequence by simply reclassifying areas like defence or education. But no accounting trick can change the basic fact that government debt is sold on financial markets. There are limits on the price that banks, hedge funds and pension funds are willing to pay for our debt. And we are competing constantly with other countries also selling debt.
And the market's full reaction to the budget may not be immediately clear until the official forecast of the OBR lays out its forecasts for the economy. To discuss this further and get more analysis on this UK budget, let's bring in Kit Rees, co-editor of Bloomberg Markets Today, and John Stopford, Managed Income Head at 91. Both, thank you very much for joining us bright and early on set today on a significant day, of course, for the finances of the UK. Kit, let's start with you, and you can lay out for us some of the policies that have been announced and what to expect. But let's start with this question around the central tension for this Chancellor between the bond market expectation and her backbench MPs.
Yes, so this is going to be a budget very much fraught with tension. So the bond market is going to be looking for a credible budget, one which is going to show that the public finances are going to be balanced, and they're going to be very much looking at the OBR forecast later in the day to see whether these are too optimistic and whether the whole budget can work. But then, of course, the backbenchers will be looking for things that are going to help people and help people with the cost of living. So Rachel Reeves's task is to stimulate growth, to bring down inflation, and also to appease bond markets. So it's a very hard task, and we'll see if she will manage it. But I'm sure someone will be disappointed. It's impossible almost to please everyone.
Well, that's almost guaranteed, isn't it? That's across this equation, there will be people who are disappointed, and maybe people who will be content with some of the measures. John, let's get you in with your view in terms of the market lens on this. What specifically are you going to be attuned to in terms of the language and the announcements from this Chancellor?
So I think coming into this, expectations got knocked back when Rachel Reeves moved away from income tax hikes. So I think the bond market's expectations are not that elevated, and they're probably more focused at the moment, assuming that she basically delivers some additional headroom, doesn't do anything that sort of smacks of a tax that unwinds things pretty quickly, like the pasty tax. As long as she doesn't derail the rate cuts that people are looking for, I think that's probably the thing that the market is focused on. If you look at how the bond market has been priced recently, it's relatively optimistic that we're going to probably get a rate cut in December, more rate cuts next year. So if she can pull off measures that don't push up inflation, put some modest downward pressure on growth, and meet her fiscal targets, then I think she's probably done about as much as we can expect.
You've listed a whole line of ifs there, which reminds us just how fine a thread she has to knit on this. Kit, on the inflation piece, that we know now through reporting that it's likely that the minimum wage is going to be going up, and pretty significantly as well. That is inflationary, is it not? What do we know about the details of this?
Yes, so the minimum wage is going to go up by 4.1% to £12.71 an hour. So it is a big jump. And in terms of it being inflationary, yes, and it shows that the tension between bringing down inflation, this big task, but also helping people and helping with the cost of living. So it's interesting that the Bank of England has always warned about these sort of secondary effects in the economy from higher inflation, and wage growth is one of those. And so it just shows that it's really hard to manage this, appeasing voters, but also making sure that some of the policies don't stoke inflation. So we'll just have to see how this plays out, whether employers will pass it on to the end consumer, as has been happening before with when they've been faced with payroll tax hikes. So, yeah, overall it just shows this kind of tension between getting it right for everyone.
John, does the hike in the minimum wage, does that concern you in terms of the gilt market reaction to that as an inflationary function?
Yes, to some extent. It's obviously, I think, expected. It's smaller than last year. It's against the background, I think, of a relatively soft labour market with private sector wages generally coming down. So I think it's probably about the level the gilt market can stomach or wear. And I think some of it, our view would be some of it's going to be seen through fewer jobs rather than necessarily price hikes.
PIMCO telling us, John, yesterday, and there's been a rally in the 2-year gilt and the front end of the gilt curve. The back end has been under pressure. PIMCO's saying there's further to go in terms of gains for the front end of the UK gilt markets, but they're concerned about the back end because of political instability further out for the UK. How do you think about that view?
I think it's a time horizon thing. I think in the short term, there is potentially a little bit of opportunity for a virtuous cycle, so falling interest rates and a budget that sort of does the job, doesn't upset too many people. I think longer term, clearly the UK has a lot of debt. We've had a fiscal rule, I think, for 28 years, and we've seen debt go from 37% to close to 100% of GDP. So fiscal rules themselves don't guarantee we're on a sustainable path. The market's concerned about that. So yes, but I would say if you look at what's driving the bond market, even at the longer end, it's more probably inflation expectations and rate expectations at the moment.
Would you buy the 2-year at this point?
Yeah, we have some exposure to it. We added a little bit when the market backed up. I don't think it's a steal, but I think the risks are tilted in your favour if you own short-dated bonds and medium-dated bonds in the UK at the moment.
on a sector-by-sector basis, where have we seen some reprieve? Reports that the banks will be spared an additional tax. Other sectors in focus. What's the latest in terms of sectoral impacts from this budget?
Yeah, so we'll be watching a number of sectors. So housing's a big one, especially on things which could be announced, like a mansion house tax and the wealthy end of the market being targeted.
That's on houses above £2 million.
Yeah, so yeah, targeting that kind of the wealthier portion of the market. So we'll be watching that. Also retailers, if there's any kind of impact, any kinds of tweaks to business rates higher, we could be looking at that. And banks, I mean, yesterday we already saw a rally in their shares on the reports that there's not going to be a bank tax. And it's also interesting because banks have been some of the best performers in the FTSE 100 this year. So it kind of shows that these gains might be able to continue if, we're not going to see that. But yeah, those are kind of the main sectors that we'll be keeping an eye on later on.
John, what is your current thinking about the Bank of England? Does December feel locked in for you as a rate cut from the Bank of England? And if so, how does that leave the trajectory into 2026? Markets pricing and expecting to get below 3.5%, but not until, I believe, April, May kind of time at this point.
Yeah, I think that's right. So the market is pretty much fully priced for December, and I think the Bank of England, unless we get some shocking news between now and then...
what would throw that off course, do you think?
Well, I think inflation is probably the big one.
Not the budget, but...
Well, I imagine the budget has been pretty well trailed now, so it shouldn't come as a huge surprise. I think they will look at things like the minimum wage increase and so on, but also whether there are other measures in the budget which we would expect that are probably aimed at trying to bring prices down, so things like the rail fare freeze. So, yes, I think they're likely to cut rates in December, and I think then it's the beginning of, we will see a continuation of rate cuts towards neutral, wherever that is. We think it's probably closer to 3 than 3.5%, 4%. So, particularly against the backdrop of an economy that's looking pretty soft.
And maybe a more dovish Fed as well will give the Bank of England a little bit more space.
Yep.
John, in terms of, do you have conviction on a conviction view on the pound at this point? There's been some short positions being built up against sterling in the run up to the budget.
Yeah, I think exactly that's right. So, the market's gone into this relatively pessimistically priced, particularly post the decision to walk back on the income tax hikes. I think looks like the Chancellor can probably thread the needle, even though it is a difficult balancing act, as you've said. And given that the market has gone into this a bit short, I think there's room for some positive surprises on the pound as well.
OK, interesting. Room maybe for some upside for the pound.
Yeah, I think it's priced in some bad news,
yes.
and if we get some OK news, that's probably good enough for now.
OK. Kit, before we wrap this up, just remind us in terms of the headroom story, because this had been a perennial question for the Chancellor when she left herself just £9.9 billion in terms of headroom, and the question was why such a little slither that you've given yourself. And she was convincingly kind of trying to convince us that it was all about growth, and we get that, and that headroom would expand. What kind of level of headroom were you expecting this time around?
So probably somewhere in the region of £20 billion. That's probably what markets are going to be happy with. Anything more, that would be great. But anything less, we could see a little bit of a negative reaction in the bonds and the Forex market too. But basically, yeah, the bigger the headroom, the more room she's got for the economy. If there's any kind of shocks, they could withstand it better. And also if there's any kind of gyrations in markets. So, yeah, the bigger the better, but it's yet to be seen if
OK, but 20 billion is the number we're looking at for now, and we'll see how much that is adjusted with the statement, of course, later today. Kit Rees, thank you, of course, very much indeed, co-editor of Bloomberg Markets Today, and John Stopford, thank you for coming in bright and early this morning. Managed income head at 91, of course, on a busy day for John and the team. UK Chancellor Rachel Reeves will, of course, deliver that budget at 12:30 p.m. today in London. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. It does not stop there. The opening trade will break down the numbers, and key business and political voices will join for their budget special. That is tomorrow morning with all that analysis. Coming up, showing off their AI credentials, we're going to be talking to the CEO and co-founder of Legora about the adoption of artificial intelligence in the legal world. That is next. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back to Bloomberg Daybreak Europe. Now, the race to compete and win in the AI for legal space is heating up, with Europe's Legora recently raising a new round of funding and rapidly growing its law firm customer base. The Stockholm-based company, valued at close to $2 billion and backed by the likes of General Catalyst and Iconic, says it now has 550 law firms and legal team customers in more than 50 markets. It's also expanding here in the UK at a time, of course, when the government's growth strategy is under the spotlight. Legora CEO and co-founder Max Junstrand joins me now. Max, thank you for coming into the studio.
Thank you so much.
We want to get into what you guys do and the growth that you're seeing and what you're providing your customers with this valuation now at close to 2 billion, 1.8 billion, but we'll round it up for the sake. So you're getting close to that 2 billion mark. But on a big day for the UK, I want to start with clearly legal services in the UK is a huge industry. You've got an office here.
Yeah.
How are you thinking about UK business? Is the UK a good place to do business still, or do some of the missteps of this UK government, as their critics would describe it, put a dampener on the prospects in the UK?
For us, it's the biggest market in Europe by far. And we started the company in Sweden only 2 years ago, and the UK was our biggest growth market. So we've opened an office, we're close to 50 people, and we've also made the lap over the pond to New York. And of course, many of the biggest and the best firms have offices internationally.
Yeah.
We just started working with Linklaters, 40 offices all over the world. And I think everybody overestimates sort of how much energy it takes to really work with AI. It's a huge change in how you work. It's a transformational period and an existential crisis that some of these law firms are now going through.
But is the UK still a good place to do business and invest?
The UK is fantastic. We're growing like never before. UK is by far our biggest revenue market today. And I think if we look at how big our offices will be, we're scaling out of our WeWork very, very quickly. Getting our own space, I think, will be about 150 by the end of next year.
If there was one policy this government could enact to help a business like yours, what would it be?
So I think, AI regulation all over Europe has been a little dicey and difficult to work with. I think more, similar takes between Europe and UK would be good. Mm-hmm. Also, all of the visas has been difficult. We have so many talented people from the rest of Europe that we're sending here. And some of those new constraints have been quite, slowed us down.
Interesting. Talk to us about what exactly you guys do. It's an increasing competitive market. You've got Harvey AI in the US, you've got Robin AI here, Luminance as well. What is the proposition? What are you doing for your customers? What is pushing and driving the growth that you're seeing?
So we're helping lawyers solve end-to-end tasks with AI. And we founded the company in 2023 off the back of the release of the GPT 3.5 models. And since then, the sophistication in use cases that we help lawyers solve have grown exponentially. So it maybe started in sort of summarizing documents or translating things, but now firms are leveraging Legora to do end-to-end due diligence. They're using it for chronology creation. And you're sort of right on the spot that legal was one of these sectors that when LLMs came out, there was a lot of eyes on it. It's about coding, customer support, and legal. And so in these 2 years, I think we've seen an explosion in adoption. And I think that's really important. It's not only that law firms are putting out a press release saying, hey, we have some new fancy AI tool.
They're actually adopting
They're actually using it. And I think that's very important.
Are European and UK firms slower to adopt than their US counterparts?
No, I don't think so. And I think the reason why is many of the European markets, including the UK market, is very competitive. So firms are looking to get every single competitive advantage that they can. And they're seeing that technology and AI will be a core part of their competitive advantage sort of going forward. Many of the law firms have their own AI strategy, innovation strategy, and those are very, very serious.
Give us some details in terms of growth. What level of growth do you see now? What do you expect into 2026? Can you give us annual recurring revenue targets or what the numbers are looking like right now for you and the team?
So we'll be able to share some numbers on that later this year. But we started 12 months ago. That was sort of when we went into general availability. And we were 30 people in Stockholm. Now we're well over 220. We've grown the client count from less than 100 to over 550. And most importantly, we've made the move from mid-sized European firms to some of the biggest names in the world, like Linklaters, Clear Gottlieb, Goodwin & Procter. And the level of sort of enterprise that's expected in those client relationships is very, very different.
what is the impact on jobs? Which legal jobs are most at risk from your technology?
So, I think what it means to be a lawyer in the age of AI will be different from what it was to be a lawyer before. Just as being an engineer using AI is very, very different. If you're sitting in a law firm and all you're doing is reviewing documents and you're looking for sort of red flags, then I think you're either one, going to need to seriously lean in to learn these tools so you can sort of prove your value using them, or two, maybe you should think about what other tasks are possible to do within that firm. But I think law firms are facing a challenge in terms of how do we grow the next generation of talent now that they can leverage these tools, because it will be a client expectation that firms leverage these tools. And increasingly also on the in-house side, big banks, insurance companies, pharma, they're looking to leverage AI as a cost reduction mechanism. So I think everybody's sort of rushing to how can we use AI more effectively, and what use cases are we going to apply it for?
So as your tools and other firms' tools empower internal teams, does that mean less business for those external providers? Is that the dynamic going forward?
So our headline is collaborative AI for lawyers. And the reason why we say collaborative is, one, you're collaborating with the AI, but two, we are actually building the collaborative layer between law firms and their clients. So never before has law firms been able to take their expertise and scale it. Right? Because it used to be based on the billable hour, and you had to do 10 hours to do 10 hours of work. But now, if you really know something, you can build an AI workflow, and you can scale that to many of your clients. So a month ago, we released the Legora portal, which sort of helps law firms actually make this business transformation. Because inevitably, if you're using tools to be more efficient, you need to look yourself in the mirror and say, hey, are we using more or less hours here?
Okay, Max, thank you very much indeed. Really interesting in terms of some of the evolution of this technology, particularly with that focus on the legal space. Max Junstrand, CEO and co-founder of Legora. There's a lot more coming up. We're going to break down some of the moves around UK assets and the lead up to the budget. Stay with us. This is Bloomberg. Let's get a breakdown in terms of what has been happening as we lead up to the UK budget. Of course, 12:30 p.m. UK time. The pressure has really been on the long end of the gilt curve, the 30-year. And just look at the gap that's opened up versus the US and Italian counterpart. Look at that. Italian 30 years yielding 4.32 versus 5.3 for the UK. What a huge gap between the borrowing costs long term for both Italy and the UK. The UK presented by the white line. Blue is the US. And down at the bottom, look at that, Italy. This is partly down to political risks here in the UK. At least that is the view from the team at PIMCO. I was speaking to Rupert Harrison yesterday. He is cautious about the long end, doesn't like the long end at this point, but does see opportunities at the front end. And indeed, you have seen a rally in the UK 2-year on near-term expectations, of course, of Bank of England rate cuts. Let's flip the board and have a look at what's happening with the pound. We have seen these short positions. Here's the story in terms of pound versus the euro, the biggest trading partner, of course, being the European Union. We flipped on quite quickly from that. But what you've seen is euro strength putting pressure on the pound. That is a challenge, of course, when it comes to that dynamic and that trading relationship in terms of the UK and Europe. And that is the blue line there in terms of the pound versus the euro. More broadly, against another basket, the pound is actually holding up. Let's flip the board and see a look at the short positions building into the pound. This is concerns about borrowing costs, of course, concerns about spending coming through from this UK government. You have seen those positions, those bearish wagers on the pound being built up in the lead up to this budget. Our previous case from 91 saying there could be an opportunity actually to buy the pound. He thinks maybe some of these short positions will have to be washed out. So just a view there in terms of the pound. To watch, of course, UK assets, some of the risk premium that's been built in, and the divergence we've seen between the 2-year and the 30-year gilt story here in the UK. We're going to have special coverage, of course, of UK Chancellor Rachel Reeves delivering her budget, 12:30 p.m. today in London. For a different take on the budget, check out the Mary Talks Money podcast. Bloomberg UK Wealth Editor at Large, Marion Somerset Webb, gives her take on your money and the world of investments every week. Get that in your podcast, of course. The opening trade, though, is up next. Stay tuned for that. This is Bloomberg.
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Monica Ricks. Attorney General Pam Bondi says the U.S. will work to seek the death penalty against the man accused of shooting 2 National Guardsmen yesterday in D.C.
We will do everything in our power to seek the death penalty against that monster who should not have been in our country.
Bondi on Fox News. The suspect is from Afghanistan and, according to CIA Director John Ratliff, worked with the U.S. government there before coming to the U.S. as a refugee in 2021. Meantime, President Trump's doubling down on his administration's efforts to deport migrants and has paused all immigration application processing from Afghan nationals.
We must now re-examine every single alien who has entered our country from Afghanistan under Biden, and we must take all necessary measures to ensure the removal of any alien from any country who does not belong here or add benefit to our country.
The National Guardsmen are still said to be fighting for their lives after undergoing surgery. Hong Kong's worst residential fire in more than half a century is now triggering worries that high-rise housing in China's cities could be susceptible to similar safety risks due to bamboo scaffolding. The fire has now killed at least 75 people and injured 70 others. Hundreds more could still be trapped inside. A judge in New York who oversaw the sex trafficking case against Jeffrey Epstein has ordered the Justice Department now to take new precautions to protect the privacy of victims after some of the women's names were made public when Congress released a trove of documents. The DOJ has till Monday to privately show him information it seeks to release and provide a detailed description of the privacy process to protect Epstein victims. The documents are part of the Justice Department's request to unseal material from the grand jury that indicted Epstein in 2019. The Federal Reserve has released its Beige Book, and it shows little change in U.S. economic activity in recent weeks, with overall consumer spending declining, except among high-end shoppers. Employment was also down slightly, and prices rose moderately. It helped boost stocks, which closed in the green Wednesday for its 4th straight session. U.S. markets are closed now for Thanksgiving, but stocks are still trading overseas. The FTSE in London and CAC in Paris are pretty flat this hour. The DAX in Germany is up about 0.3%. The Nikkei in Japan closed up 608 points, about 1.2%. The Hang Seng in Hong Kong and China's CSI 300 were mostly unchanged. PopMart shares jumped the most in 3 months, leading a broad rally in China's consumer stocks after Beijing announced new measures to boost spending. The Labubu maker's stock climbed as much as 10% today after China unveiled plans to better align supply and demand for consumer goods. It's banking on big sales from global fans for Thanksgiving and Christmas. Toyota sales advanced in October as U.S. demand helped make up for a downturn in China and Japan, thanks to strong demand for the RAV4 compact crossover and other vehicles. Global sales climbed 3%. Toyota's nearest rivals, Honda and Nissan, both saw sales declines in October. Chancellor of the Exchequer, Rachel Reeves, announced $34 billion of tax increases in the UK this week in a budget that seeks to balance the demands of both bond traders and restive labor backbenchers. She spoke about the budget exclusively with Bloomberg.
I was always clear that I would never play fast and loose with the public finances because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do, more than ever, is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Chancellor of the Exchequer Rachel Reeves on Bloomberg TV. Here at home, FedEx plans to cut hundreds of jobs in Texas after a third-party logistics customer moved its business to a new location and different company. More than 850 workers will be affected. The move comes towards the end of a turbulent year for the logistics industry, jolted by President Trump's trade policies. FedEx is also undergoing major restructuring to merge its air and ground shipping operations into a single network. As millions hit the road over the holiday weekend, prices at the pump won't be too bad. According to AAA, averages are hovering just above $3 a gallon. But Gas Buddy's Patrick DeHaan says they could be even cheaper this winter.
I think we're going to see more months, more days below $3, potentially than above $3. So I think this sets us up for a very good 2026. Now, maybe a little front-end loaded with lower prices in the first half of the year than the second half of the year.
Hear more from Patrick DeHaan on the Bloomberg Balance of Power podcast. He says prices tend to spike heading into spring and summer.
The dream team.
And it'll be a battle at the box office this Thanksgiving weekend, with Disney's Zootopia 2 expected to top Wicked for good with as much as $150 million in ticket sales over the next 5 days. Wicked could make another $100 million. But even that huge haul may not even touch last year's Thanksgiving weekend totals. Wicked Part 1 and Moana 2 generated a combined $422 million. And that's news when you want it with Bloomberg News Now. I'm Monica Ricks, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
Make a bold move. Unleash your inner roar. You know you want more. The new Elevate ADV. Bold move.
LGT's investment solutions allow you to look to the future with confidence.
I think the market is very focused on what the Fed is going to do in December, and we are expecting 25 basis point rate cut. The market probability about the rate cut has been decreasing a few weeks ago and now moving back to 80%. So that is quite important. The rate cut in an environment where we see some slowdown in employment market, even if we haven't seen the data for a few weeks now, is supporting multiple expansion. And I have to say that while many clients are concerned about this multiple expansion in US, there is still growth there in terms of earnings. And so the earnings season was pretty good, and we recently upgraded US stocks, but also European stocks. So let's say we meet the market expectation in terms of future performance.
What's your take on equities in 2026? I know we're close to the end of the year, so there's the outlook that's coming up for the year ahead. If you look at AI valuations, are they going to be problematic?
I think one of the particularly element is that demand is still there. When we look into the rate of implementation of AI across the different industry remains still very low. So for the time being, what we see are CapEx spending, which has been very strong this year. We have expectation of CapEx rising 2026 and 2027. Demand is also increasing. So valuation in some cases is a bit stretched. But when you look into the companies which will benefit of AI implementation, valuation is around the long-term average. I'm thinking about companies which will implement AI, not only hyperscaler, but really application, and then valuation are around 20 times and on 28 times when we look into semiconductor. When we look into the overall landscape for 2026, with rate being down, multiple expansion can be continued to increase. So we are not concerned about the valuation right now. Volatility will probably increase from time to time. It depends over the last 2 weeks, but we are still convinced that AI will be a big driver for next year. What we are doing, we are more, I say, more diversified than in the past, so that's also help.
So how do you diversify your income? And I know, for example, you like commodities, but you also want to take advantage of what's happening in China.
I think in terms of diversification, within the equity space, we have increased Europe, where valuations are quite attractive, but also where we expect 2026 and 2027 growth to pick up after a few years of zero growth. We have been moving positive on Japan with the fiscal support that could push a bit not only the growth on the economy, but also economy on the earnings side. And we have been positive on Chinese stocks, especially Chinese stocks which are linked to AI. So relative to the past, where we have been focused essentially only on US stocks, we are now more expanding our overweight, our preference in our region. And then in terms of diversification, we remain very diversified across asset class. Our call on fixed income is still positive. We are still positioned on high-grade bonds and commodities more recently, with gold diversifying and reducing volatility across portfolio. So clearly 2026 is less concentrated than it was 2025 in terms of allocation, but also we see more growth coming and the Fed continuing to cut into early next year. So really we're still very positive about the global outlook.
Okay, Claudia, don't go anywhere. Of course, Claudia Panseri stays with us because we'll now focus on the UK. Of course, it was budget day. Markets reacting positively, more or less. They're kind of muted, I would say, after the UK Chancellor Rachel Reeves delivered her autumn budget. Now, Reeves also boosted her fiscal buffer with tax rises totaling £26 billion.
I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Now, the shadow Chancellor of the Exchequer said it was, quote, utterly outrageous and potentially criminal that the OBR released the budget before the Chancellor gave her speech.
It is unprecedented that this should have happened, that you have a Chancellor of the Exchequer standing up in the House of Commons whilst the entire contents of the budget has been released by the OBR about an hour before she did so. That is clearly completely unacceptable. So we do need a thorough investigation into it to understand exactly what has happened and therefore what consequences should follow.
Well, joining us now is Kit Rees, co-editor of Bloomberg Markets Today. Kit, so first of all, I mean, there's two things, right? First, you know, the OBR budget leak, which I'm assuming and hoping it will be dealt with rather firmly, and this we understand is like a digital security lesson maybe for others. But the bigger part, the budget was okay. It didn't ruffle any feathers. But do we worry about growth in the future?
Yeah, well, this is the really big question. I mean, markets seem to be breathing a sigh of relief that after weeks of chaos, speculation and U-turns that, you know, it was pretty much in line with expectations. So there are 88 measures, a huge amount to get through, lots for markets to digest. And while, you know, they are breathing a sigh of relief that it is as expected, a bigger focus on tax, raising tax in order to fund spending cuts, there's this big question over growth. And ultimately, is it going to kickstart the economy, which looks kind of unlikely at the moment. So we'll be hearing, of course, from business leaders and think tanks and the rest of it on what it could mean. But overall, there's still quite a lot of questions left there.
I mean, if you look at the reaction from the markets, I mean, again, it's muted and then you have a little bit of flare-ups as they're trying to digest. I had understood that this budget was never going to be growth positive. So is it in locksteps? You kind of, try and deal with it now, keep the show on the road, and then you take bolder measures further down the road?
Yeah, that seems to be very much the case. So kind of like spend now and tax later, and these things are being pushed out into further years. So there's a lot of uncertainty around that. And of course, with so many measures, lots of this sort of smorgasbord approach, which has been touted, where we have lots of little tweaks, it's not really certain how this will filter down into the economy and affect things later on. Also, it is the Thanksgiving holiday, so liquidity is going to be a bit lower. So any moves that happen, they might be exacerbated, and it might take a few days for this to properly filter through the market. So there's still a lot going on, still a lot to digest, questions over growth and the measures and getting through it all. So we'll see how it plays out in the next couple of days for sure.
Yeah, you're absolutely right. Volumes are muted, so you could see some flare-ups out of nowhere. Kit, as always, thank you so much. Kit Reese there, our co-editor of Bloomberg Markets Today. Now, to discuss the impact of the budget, let's get back to Claudia Panseri from UBS. Claudia, your take, again, the market, I guess, is now doing a bit of yoga. They're saying, okay, let's see what happens next. And she kind of calibrated, the chancellor calibrated so that there were no huge surprises.
So I think there are two elements which are quite positive. And I mean, we would love this kind of budget in France and this fiscal room. The first one is the deficit trajectory. So the deficit trajectory is going down. So that is very positive. And the second one is bond issuance. When you think about the market would have been expect much more bond issuance for next year, the reaction will have been negative. And these two elements are taken positively from the fixed income investor. The third element probably is about the Bank of England. I've heard many comments saying that the economy will slow down, but at the same time you have a BOE which will cut rate in December, and then still, according to our scenario, 2 times next year. So I think the risk of growth is offset by monetary policy. So on one side you have some fiscal, let's say, discipline, and on the other side you have a monetary policy able to offset the risk on growth. So this is the reason why the market has been reacting well yesterday.
Yeah, and Claudia, I mean, to your very good point, the OBR was also saying that, these plans will basically knock off some 0.5% percentage points off inflation in the second quarter of next year. So was this sought out to give a helping hand to the BOE?
Yeah, exactly. That is also the point. The implementation of the different tools which have been used to push down inflation, that will be positive and will push the BOE cutting rates, which is not always expected by the market. So you may have the short-term end of the yield curve moving down a bit, and that will help as well, to balance the risk I was mentioning before about growth. And everyone is mentioning that there will be impact on growth because of the rise on tax. I mean, once again, I think the UK situation is much better than the French one.
Yes, it's always relative. Claudia, thank you so much for joining us. Claudia Panseri, Chief Investment Officer, France for UBS Wealth Management. We'll talk extensively about France as well. Coming up, we speak to the President of the European Bank for Reconstruction and Development on Ukraine's IMF deal. That's next, and this is Bloomberg.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. But Ito Renewables is unlocking these resources with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francie Lacqua here in London. Now, at least 44 people have been killed and hundreds are still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Our China correspondent Min Min Lo has the latest from the scene.
I'm right here at the scene of the fire in Tai Po, the most devastating fire that Hong Kong has experienced since 1962. It started yesterday at 3 p.m. We're well into the second day now, and yet firefighters are still trying to put out the fire. Rescue efforts are ongoing, and then the crux of the issue is what exactly causes fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards. They found flammable materials like styrofoam boards sealing some of the windows, and they have arrested 3 people from the engineering firm for manslaughter and gross negligence. And residents certainly are demanding answers from the government as to why this was allowed to happen. Many of the residents are just completely shocked and heartbroken. They're figuring out what is the longer-term housing situation, and the authorities are now converting some schools in the vicinity into temporary shelters for them. But it's going to be a long, harrowing night for many of these displaced residents. Min Min Lo, Bloomberg News, Hong Kong.
Well, that's our China correspondent Min Min Lo. Now, 2 U.S. National Guard troops have been critically wounded in a shooting just blocks from the White House. Officials say a gunman was taken into custody after another guardsman returned fire and moved in to stop him. President Trump was in Florida at the time, but has ordered an additional 500 troops deployed to the nation's capital.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
Now, Puma is the biggest gainer on the Stock 600 today, following news that the Chinese sportswear company Anta Sports is believed to be amongst the firms exploring a potential takeover. Sources say that Anta, which is listed in Hong Kong and owns brands including Fila, has been working with an advisor to evaluate a bid for Puma, whose shares have fallen more than 60% this year. Now, let's bring in our Manuel Baigori, our team leader for Asia Deals in Hong Kong. Manuel, Puma shares have really struggled this year. So what's the appeal for a Chinese bidder?
Francine, the appeal is mostly to continue to expand and to get hold of a very iconic global brand such as Puma. As you well said, the company has been struggling. That's been reflected in the share price this last year. The company also had a new CEO in place. They held a capital markets day a couple of weeks ago with the expectation that a new strategy and a focus on new marketing and new products would rev up and kind of like create a little bit of a catalyst for the stock, but that doesn't seem to play out that well so far. Now the question is at what price this company can trade. Shareholders, including the Pinot family, who have a significant stake in the company. Obviously, they have very high price expectations. Just a year ago, the stock was trading at 45 euros a share versus 15 euros a share, excluding the bump today, following the exclusive from Bloomberg News. So there is a bit of a gap there that needs to be bridged between potential buyers and sellers. Meanwhile, bidders including Anta and Li-Ning, two very well-known sportswear companies in China, as well as ASICS, are doing some preliminary work, talking to prospective advisors, also potential partners, including private equity firms and financing banks, to see if they can put together a bid. So it's slowly moving. There is work behind the scenes being done, but there is a very wide bid-ask gap there that will have, to be addressed and may become a challenge.
Yeah. Manuel, thank you so much, as always, for that briefing. Manuel Baigori there, our team leader for Asia Deals in Hong Kong. Now, the IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the war-torn nation's international allies. This comes as the repercussions of the war are being felt economically in both Ukraine and Russia. Now, we're joined by Odile Renaud-Basso, President of the European Bank for Reconstruction and Development. Thank you, as always, for joining us. I mean, it's been a complicated situation, frankly, for Ukraine over the last 2 weeks with the comings and goings with the U.S., the allegations of corruption, very close also to President Zelensky. And then we have the news that actually at the staff level, there could be this big loan from the IMF. How much of this is a game changer?
I think this is a very positive news. I was in Ukraine last week when the IMF was discussing with the authorities, and I think that having this agreement at the staff level on a macroeconomic program for Ukraine is very positive because it creates an anchor for the policies to be implemented and for supporting countries to continue to support Ukraine in its difficult situation.
Odile, I mean, this is basically a 48-month arrangement, right? Under the extended fund facility, so they could potentially, access $8 billion, but there are conditions attached, including adequate financing assurances from donors. What does that mean for what Ukraine actually has to do in terms of concrete steps?
So there are two elements. The first one is indeed they need financial contribution to support the program, as it was in the previous program, and that's where the EU funding is very important because the European Union is one of the key funding partners for Ukraine program, macroeconomic program, together with other G7 countries such as Canada, Japan, and so forth. So setting, the support is very important. And the second one is a policy that Ukrainians need to continue to implement in terms of reform, anti-corruption, functioning bodies, progress in the governance of the state-owned enterprise, but also fiscal efforts in order to improve tax collection, enhance the tax base, and so forth, so as to have also the capacity to provide more internal resources to finance the big deficit and the war effort.
How delicate is the situation on the ground, given all of these corruption allegations?
So the situation is delicate, first of all, because of the war. And, a lot of attacks on civilian infrastructure, on energy infrastructure. So a lot, the situation is, for example, on access to electricity, access to energy, very challenging. This is our top priority at the bank, to ensure that Ukraine has the capacity to support the winter through, for example, providing heating to people. And we work a lot with the authorities on an additional support for the gas company in order to be able to buy more gas and to have supply through the winter, but also build up more generation capacity. So the energy situation is very, very fragile and very worrying. And of course, for people living in Ukraine, it's a very difficult situation because you have a lot of alerts, a lot of civilian victims, and of course the situation of the front is also difficult. But overall, the resilience, the determination of the country is important. You mentioned the issue of corruption. Indeed, there is this investigation going on. On the positive side, having effective anti-corruption body that can investigate freely, put on the public and pursue the people who have been at the core of it is very important. And this is a very positive step. The role of civil society in Ukraine to support also this anti-corruption bodies and so forth is key, as we've seen in the summer. And this is a good progress. And this will need to be followed up, of course.
Have you? I was going to ask because this corruption scandal, has rattled a lot of Western investors, has rattled a lot of Western allies. Have you thought about it differently in terms of putting actually things in place to make sure that it's ring-fenced?
So we've worked already, for a long time on governance, for example, because this case is related to one state-owned enterprise, Energoatom, who is in the nuclear sector, and so state-owned company governance was for us a key priority, has been a key priority, and in the last few years we made some progress. This shows that there is further progress to be done in terms of how the companies are managed, what is the role of the board, what is the role of the government, transparency of procurement, and this is an area where we have worked with a number of companies on top of our own rules where we invest in these companies. We have very strict procurement system that we control. Yeah. So, but on top of that, in the management of the companies, I think further rules are important, and this is an area we will continue to focus upon.
Can you give me an idea of timeline? So again, the IMF's decision, as you laid out, is good because it comes amid some battlefield setbacks, because it comes also under this U.S. pressure to accept, these peace talks with Russia. So does the war need to end before access to these facilities, or can you start rebuilding at the same time as fighting?
Now, the program is built on the premises of a continued war, I think, and they said very clearly in that this will be adjusted if the war is over. So I think that's the underlying assumption. What will be very important for the program to be approved by the governance body of the IMF, which is the board, is that Ukraine needs to have the financial instruments, and that's where the decision-making in the EU about access, for example, to this reparation loan, building upon the existing foreign asset, will be very important. So the timeline for this decision on funding is absolutely key.
And for the EBRD, how much are you going to get involved in this?
So we are not directly involved because we have our own capacity to fund Ukraine thanks to our own capital and donor support for our financing. So we do not cover the budget gap of Ukraine. We are supporting the real economy, state-owned enterprise, access to energy, but also mostly private sector. And this is of course, having an IMF program is a good framework, but our funding is not directly related to the IMF program.
Odile, thank you so much for joining us. Odile Renaud-Basso, they're president of the European Bank for Reconstruction and Development, with a very, very important conversation on Ukraine and, of course, the rebuilding and the war there. Coming up, JP Morgan announces plans to build a huge new tower in London's Canary Wharf. Details next, and this is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
When we first started, cyber threats were more limited in scale and severity. They were a bit like digital graffiti. Today, cyber threats are more sophisticated, persistent, and difficult to detect.
SICW unites public and private sectors to tackle today's cyber threats as one.
We have to work together to build a global cyberspace we can trust.
Join us in shaping the next era of global cybersecurity.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks gain as traders raise bets that the Fed will cut rates next month. Traders also locking in a December cut by the Bank of England as the pain of tax rises in the budget is postponed. Shares in Puma soar on reports that China's Antisports is considering a takeover for the German company. Plus, JP Morgan announces plans to build a new tower in Canary Wharf in what will be the UK's largest office building. Now, the former Goldman Sachs chief economist, Jim O'Neill, is amongst those who've criticized the UK budget for doing little to spur economic growth. The Chancellor, Rachel Reeves, unveiled £26 billion worth of tax rises. Well, she told Lizzie Burden that the move will raise revenue to support economic growth.
Last year I had to close the black hole in the public finances left by the Conservatives, and in the budget last year I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
UK Chancellor Rachel Reeves there. Now we're joined by Bruno Scarica, Chief UK Economist at Morgan Stanley, and Maren Somerset-Webb, Editor-at-Large at Bloomberg UK Wealth. Maren also just did a fabulous event upstairs on our 8th floor with many questions from many audience members. So thank you both for joining us to try and understand exactly what was in the budget. What's the question you got the most, Maren? Because it feels like the Chancellor landed the plane. Yep. But actually we don't know how she's going to put growth to the test.
Yeah, interesting. This is the big question. Is there anything in there that would drive growth? The answer, of course, being no. And so one of the questions that we kept getting from the audience, and I think if we'd been able to go on another half an hour, we would have heard it again and again and again. The question kept me effectively is, what's in it for me? What are my incentives? And we had a couple of questions from younger people, the Henrys, high earners, not rich yet, saying, why would I stay? What do I get out of this? My marginal tax rate with my student loan is 51%. Those thresholds have been frozen. My income tax thresholds are frozen. I just pay more and more and more and more and more. And we're at this point where the income tax revenues are more or less equal to welfare spend. And this is it's a bad feel for ambitious young people.
Yeah, it's a bad feel, but at the same time, Bruno, it could have been much worse, right? Some of the things that were kind of thrown out there in the last month or not really spooked the markets. And for the moment, the markets are doing yoga and taking a big breath.
Yeah, I think gilts had a good day yesterday, certainly the longer end of the curve, precisely, I think, because the feeling was, OK, a bit better than expected. And the DMO did a lot of heavy lifting there in terms of the issuance profile and obviously the gilt remit numbers for this year in particular, which are things that the market focuses on, just the very near term. Let's take it one step at a time. I think in terms of what was really surprising to me is the degree to which we entered this budget speculation period. I think the real kickoff was NISA coming out saying this fiscal gap could be as high as £50 billion. And in the end, the OBR erosion was £6 billion. It was not much at all, right? We didn't even have to have any tax hikes if we had not had the increase in headroom and spending, and we still would have made it to the balanced current budget in the medium term. I was quite surprised by that, I have to say.
Yeah, it was interesting. We also spoke to someone from UBS about 15 minutes ago, and she's like, well, it's much better than France. France is terrible at the moment because they don't really have a budget and they certainly don't have enough fiscal space. Is there anything good that came out of it?
I mean, interesting, better than expected and not as bad as France. They're not great. I mean, there were a couple of signals. One of the things that we've been lobbying for ages on the podcast is constantly talking about stamp duty in the UK and how we have, basically one of the highest stamp duties globally, and it's really got to go. And my big hope was that she would step up to the plate and abolish stamp duty in the equity markets. That would have been a great step. Now, she didn't do that, but she sent a sort of, limp little signal that, if you IPO in the UK, then there won't be stamp duty for 3 years. It's something. It's the beginning of a recognition that she is occasionally listening, if not taking the best announced actions, listening a little bit. So, there's a little positive.
I mean, to your point, it kind of felt like it was a chaotic month, frankly, for the last 4 to 5 weeks. Yeah. It kind of felt like she didn't. I mean, it wasn't bold, right?
No.
It was kind of middle down the road, and let's push it back everything to next year.
Exactly. As we say, there was nothing in there for growth. There was nothing in there that really recognized our productivity problem. There was nothing in there that incentivized creative entrepreneurs to just keep going. So yes, it felt very much like, and I think a lot of people have said there's a budget to let Rachel Reeves keep her job, as opposed to a budget for the long-term good of the country. And that, of course, is disappointing. She had an opportunity, particularly with all the trailing, to do something bold, and she didn't.
I mean, the governor, Andrew Bailey, is probably a little bit relieved, because if you look at the inflation, again, it's kind of, the markets now really expect a cut in December.
Yes, so I think that's pretty nailed on. I would say, though, that probability of that rate cut did increase with the labour market data. That was really what kind of solidified those expectations in the aftermath of November. Unemployment rate at 5%. This is something that, given the guidance in November, I think market participants thought, OK, the BOE will take this seriously and lean against that. I think one takeaway from yesterday, this particular idea of not much news here, I think in terms of next year, if you look at it, we had, I think, the direct effect of government decisions is an increase in borrowing of about £3.9 billion. Mm-hmm. On a £3 trillion pound economy, this is really not much. And the takeaway was, well, for the Bank of England, is there really any news here? I would argue that the drop in inflation probably is marginal positive news for the rate cutting cycle. But in terms of that kind of extra fiscal drag that maybe frees up the path for the market to reprice that very front end, that obviously wasn't there yesterday.
I know in terms of expectations, I mean, there's not growth yet. Does a cut from the Bank of England in December, and then possibly one or two more next year help with growth?
Of course it helps.
Meaningfully?
Well, we'll see, won't we? Because we don't know what the other effects will be. And as I say, you move into an era where you have a historically high tax burden, you have a historically high welfare bill, and you have no obvious plan beyond that wasn't so bad, the Bank of England can cut rates a bit now. It's not enough, is it?
No, I mean, it's not enough. But, one of the other things that I know you've been looking at on your podcast is, do billionaires exit? And actually, is there if you look at the non-doms, is there a huge pitfall because people have left and the UK seems uninvestable at the moment?
Yes, I mean, this is obviously a problem. The non-doms leaving, that's about inheritance tax. And we talked about this on the podcast this morning. It's about nobody wanting, obviously, to have to give 40% of their estate to the UK government because they lived in the UK for 10 years. This is something that would be quite easy to fiddle with, quite easy to reverse. But we haven't done that. So the incentive remains for the very rich to leave the UK. The incentive remains for well-off foreigners who might invest in the UK to not invest in the UK. But the worrying thing for me, as I think I said earlier, is that we're increasing the incentives for our ambitious, relatively well-off young people to go and build their long-term wealth somewhere else.
And Bruna, overall, because this didn't move the needle at all, do you think the market can go back to it in 1 or 2 weeks and actually say, I'm better off elsewhere?
Yeah, I mean, I think it really depends on your view on the economy next year, right? So there's a lot of bearishness on UK growth. But if you think about it in terms of what's priced in the front end of the UK curve, well, it's kind of 2 rate cuts. It's not even as much as we're seeing in the US, where I don't think the general consensus is as bearish around near-term growth prospects. So I am a little bit more bearish on UK growth than the OBR next year. But that's really why my call on the Bank of England is more aggressive than what the market is pricing. And I think we do need to separate the structural growth challenges, which I agree with, right? 1.5% is just not enough for an economy like the UK, with the cyclical growth challenges, which are really very simple. Savings rate in UK is very high. Cut interest rates and it's going to be lower. Consumers will spend. So it's really about clearing that path for the BOE to cut, and we'll see whether the Chancellor has done enough with this inflation.
Bruna, is it just a win because the bond vigilantes have been kept at bay?
Well, yeah. I mean, I think obviously the main kind of focus yesterday was really what will the bond market do. I do have to say it's been a really volatile period, and we had a very, very big move in the aftermath of the income tax U-turn, right, or the apparent income tax U-turn, I should say. So I think it's important to look at the market moves in the context of what we had really last week as well. Yeah.
Marin's looking at me like you're really clutching at straws here. She'll let rip on her podcast. Thank you both for joining us. Bruna Scarrica, Chief UK Economist at Morgan Stanley, Marin Somerset Webb, Editor-at-Large at Bloomberg UK Wealth. And do check out Marin's podcast, Marin Talks Money, in which she gives her take on your money and the world of investments. every week. This week is particularly good and spicy. Now, JP Morgan planning to build a new 3 million square foot tower in London that would serve as its principal UK headquarters and could contribute nearly £10 billion to the local economy over 6 years. Now, the bank says the new site would accommodate up to 12,000 people and become its most significant presence in the region. Let's bring in Jack Sitters, our team leader for real estate and European investment. Jack, I mean, this is a surprise announcement from JP Morgan. How big of a vote of confidence is it, A, in Canary Wharf and the UK just one day after the budget?
Yeah, I mean, absolutely. It's huge. And I guess if we take a step back here and, if you'd asked me, or indeed if you'd asked Sir George Jacobescu, the architect of Canary Wharf, the former chairman and chief executive of Canary Wharf, who's advising JP Morgan personally on this, if you'd asked him best part of 10 years ago when the UK voted for Brexit, would JP Morgan be building what is undoubtedly going to be London's biggest office building, one of the biggest office buildings in Europe, in Canary Wharf, I suspect he would have probably said maybe not. There's a decent risk that they don't. But, we had a story the day. It's become clear since COVID and since Jamie Dimon, really leading the charge to get people back to their desks. They've been short on space. We knew that. We knew they were looking at options. We'd reported that they'd drafted in Foster and Partners to look at new plans. But, for Canary, it's huge. They could have left. They could have gone back to the city. I think one of the things it shows us is just how few options there are for big organisations who want a huge new office tower. There just really aren't any being built. Developers have had to put up with Brexit. They've had to put up with COVID. They've had to put up with higher interest rates. There aren't those buildings available. And so JP Morgan has really kind of gone down the maximalist option. They've owned this site for a very long time. They're now going to dust it off and they're going to build an absolutely enormous new HQ there, which will be great for Canary Wharf because that's 12,000 workers who are going to be using the restaurants, the bars, the shopping centres there.
Yeah, so, Jack, what does it also say about Jamie Dimon's legacy? He's put his stamp on Manhattan, and it does feel like he's now doing the same in London. Yeah,
absolutely, yeah. Well, we've got Diamond Town in Midtown Manhattan now, the big new office headquarters, and, a couple of other buildings around it. And we often, when speculating about his legacy, we talk about, 5 years. Well, this building is going to take 6 years to deliver. Yeah, you'd be a brave person to bet that he's not there to cut the ribbon when it's time to open it, and having fully put his imprint on London as well as on New York.
Thank you, Jack. Jack Sitters there, who leads Bloomberg's coverage of real estate and European investing. Coming up, U.S. tariffs reshape global trade. We talk to the company tasked with making sure that inventories stay stocked and that your parcels still arrive on time. That's next, and this is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment.
Global electricity demand is set to surge 75% by 2050. Infrastructure alone won't keep up. To power the future, we must change how energy is used, not just how it's generated. The missing link? Demand-side solutions that unlock efficiency, productivity, and resilience. The Bloomberg New Economy Energy Technology Coalition is uniting industry, innovators, and investors to scale these technologies for a future-ready energy system. Learn more at bloombergneweconomy.com/ntech.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the Pentagon is accusing major Chinese tech companies of aiding the country's military. The U.S. Department is recommending that Alibaba, Baidu, BYD, and others should be added to an official list. Now, for more, we're joined by Matt Bloxham from Bloomberg Intelligence. Matt, as always, thank you so much for joining us. What would it mean for these major U.S. tech firms to be included on the Pentagon list, and how have they actually been responding?
Yeah, I mean, to be honest, I don't think for any of these companies it would make a massive difference to kind of their business, because they're not really kind of that big in the US. And I think you have to kind of look at this more in the kind of broader context of the geopolitical tensions between the US and China. I think clearly, the US continues to try to find ways to put a brake on China's commercial military technology developments, and also these companies do supply and do kind of leverage things that are going on in the US market. Obviously Alibaba and Baidu in particular kind of very much in the AI race, so anything that the US can do to dissuade US companies from working with them or supplying key technology to them, I think is going to help the US administration's goal to kind of keep a brake on China's development.
Matt, I mean, we've also had this flurry of, Alibaba stories in the past days, a Quen chat box, and now they're making a rare foray into consumer hardware. Yeah. How should we read this? Yeah, with the glasses, look very much like the kind of Meta AI glasses. I think this is an inevitable evolution. They've been very popular in the US and European markets. It's not surprising that there's a good market opportunity for these in China too. And the technology is there and readily available and can be delivered at a good price point. So, for comparison, the Meta glasses cost about $800. These ones, the Alibaba ones, probably about $540, $550. So, coming in at a cheaper price and probably as good, if maybe in some ways, maybe a little bit better, given what we see in, for example, the smartphone market. Okay. I've tried actually the Apple Vision ones that were like mind-blowing. Yeah. Take a little bit of getting used to.
These are quite different because, they're continuing to allow you to kind of act as normal and just see something overlaid.
There you go, secret spy stuff. Big tech players from both the US and China are warning of potential memory chip supply shortages. How big of a problem is that?
Potentially quite significant. Obviously, we saw, was it yesterday? I think it was yesterday, Hewlett-Packard, maybe the night before, announced between 4,000 and 6,000 job cuts. That's maybe about 10% of their workforce. And they specifically called out pressure on their costs from memory chips. There's huge demand for memory chips from lots of, pretty much everything we use these days has memory chips in it. But the AI momentum has kind of really tapping demand, and manufacturers are shifting their capability to support that AI race. We're going to see that. Typically memory is about 15 to 20% of a PC, and some of these companies like Dell are talking about 50% increases in cost. So you could see quite a significant increase in the cost that they're inevitably going to have to pass on to the end customer. So we could well see prices rise for key technology, whether it's consumer or enterprise servers and PCs. So I think it is quite a significant issue. And, we see the memory market go through these kind of supply and demand kind of tensions from time to time, and I think this is just another one of those coming through.
Matt, thank you so much, as ever. Matt Bloxham there from Bloomberg Intelligence. Now, we're almost a year into Donald Trump's presidency, and tariffs will dominate his economic agenda. With tariff rates changing constantly and trade routes being redrawn, how do companies ensure they have stable logistics and supply chains? Well, joining us now to discuss all this is Oscar de Bock, Chief Executive of DHL Global Forwarding Freight, which arranges the transportation of cargo on behalf of global business customers. Oscar de Bock, thank you so much for joining us. I mean, you do the real stuff. We talk about this every day, but you have to take them from point A, point B with all the geopolitics and, the rewiring of global trade. So first of all, where do you see flows declining, and where are they actually increasing?
Yeah, no, and we not only have to do from A to B, but we also have to customs clear them as well, which is obviously where the complexity really lies. But indeed, the flows. To start with, what is interesting to see is that the overall global trade is still growing. But the flows themselves are drastically changing over time. And also because of the changes of supply chains that companies are setting up, because obviously everybody has to respond in some shape or form. And that actually happened already from 19 onwards. And the overall, from just in time, we're now actually to making sure that you actually have products available in the right market for the right rates. But so the other impact, which is an interesting one, is that the average kilometer traveled per product is fast increasing overall as well. So you see...
Is this because of trade routes? Because they're changing...
I'll give you some simple examples. For instance, where maybe in the beginning, this is a technology example, where you would have produced from China for the US. Now that actually would then be for China to Europe, and then from Vietnam to the US. Or an automotive example, which I thought was even more interesting, is what was originally some from China, US, and then actually became a factory in the Middle East that now does the US, and then actually from China to the Middle East. So you see that there's a colleague of mine always calls it that it's like trade is like water. It finds its way.
I heard the IMF managing director also said that, and I think people kind of forget it's just more expensive. How much more expensive is it to ship from just your general like cargo box? Has it increased significantly?
If you come back to the point I made earlier about the average kilometer driven per product, and
it's
so
more
yes,
expensive,
right? So that means that you spend you spend more over time on logistics. Also, the higher complexity that we are creating. I mean, customs clearance, to take one example, the amount of workload on customs clearance has increased drastically. That translates into cost as well. But what is an important element there is the whole digitalization agenda there, because in order to beat the cost part, it's also important to use digital tools. Yes, we all throw in AI and all, but for instance, on customs clearance, if you're interested, I have a very specific example where you can now see that through using agentic AI, we can increase the productivity on customs clearance by about 20%.
That's impressive.
And that can translate into capacity.
Oscar, you're also a great barometer, basically, of the current state of the global economy. So what are you seeing? Are consumer spending, are businesses weathering the tariff, but also tech transformations?
Yeah, the interesting part is that, one is in the old world, we used to have seasonalities, right? You would have, of course, end of the year, you would have the peak, you have the Easter peak. You don't see that anymore now, because the peaks...
So it's all the time?
Well, no, the thing is that you have lots of peaks, because every time that there's some kind of announcement of some kind of new regulation, then there's an acceleration of shipment. But then the stock is already there. And then it's... So this year, you've seen complete different trends in ups and downs on capacity than what you would normally see. And therefore, you don't see the same high season, peak season that you would otherwise see.
That's so interesting. So do you think this is to stay? And if you look at the first quarter of 2026, how are you doing in terms of demand and pricing?
Yeah, the way we look at 26 is sort of a careful optimism, as in it will probably be more stable. But I'm very careful saying that, because ever since I'm part of the board of DHL Group since 2019, every 6 months there was something unexpected that we could not foresee, and I think that is probably something there to stay. But putting that aside, the way we look at next year is that it is sort of slightly better than this year, flattish.
So give me a sense of what sectors you think will see the most weakness and the most strength.
Yeah, so you see, when you look at it sector specific, you have sectors in transition. So for instance, you have the healthcare sector, which is very much in transition from traditional prescriptive medication towards patient-specific medication, which has a whole different logistic flow. That sector, whatever happens with trade, is a sector that is evolving and growing. You see data centers, which is mind-blowing, the amount of investments that are being done in data centers, the point that was made earlier on semicons. Also there you see a major growth in semiconductors, because as was stated, semiconductors sit in everything at the moment. So data centers, because there's an enormous speed of investment and a high complexity of logistics to build that. We basically fly all that, and it has to be fast, and it has to be a high quality level. So, so that's another sector. On the other hand, you have the automotive sector, which is a sector definitely in transition. Not only where it's produced, who's winning the game, but also electric vehicles have less parts and have a complete different setting than traditional vehicles. So there you see a big change.
Oscar, we're also expecting shipping lines to restart returning to the Red Sea. What does that mean for global trade?
Returning to?
The Red Sea?
Yeah. So that's the interesting question, right? When is it going to happen?
And what happens?
And what's the implication of it? So the when, I leave that, obviously, because that's more a political question, because that all depends on stability. When it does happen, it has there's a lot of different scenarios that you can look at on what will actually happen. Because one, of course, there's between 10 and 15 days less travel time. Mm-hmm. So that means that you have an increase of capacity, but you also suddenly then have an increase of volume that goes into the same European ports. So that will have an implication on supply chain. So I think this effect that you've seen after COVID, for instance, you're also going to see probably here, because you need a whole supply chain that needs to stabilize, because consumer confidence will increase, most likely, so demand will increase at the same time, and then it all depends on what happens when, on how this ripple effect in supply chains will actually happen.
So interesting. Thank you so much, Oscar de Bock. There, we covered a lot of ground, and I could talk to you for a lot longer, because it's always fascinating to understand exactly how this changes. Of course, Oscar de Bock from DHL. Now, there's quite a lot going on in the markets. Stocks overall heading for the longest streak of gains this month. A couple of caveats. Let's wait to see exactly what happens tomorrow and that Monday against Thanksgiving in the U.S. Volumes may a little bit short, so you can have a little bit of quirky reactions. Bitcoin trading above $91,000 for the first time in a week. Gold little changed, dollar pausing a 2-day retreat. Up next, Bloomberg Markets, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Dan Schwartzman. U.S. Attorney General Pam Bondi says the Justice Department will work to seek the death penalty against a man accused of shooting 2 National Guardsmen yesterday in Washington.
If something happens, I will tell you right now, I will tell you early, we will do everything in our power to seek the death penalty against that monster who should not have been in our country.
That's Bondi on Fox News. The suspect is from Afghanistan, and according to CIA Director John Ratliff, he worked with the U.S. government there before coming to the U.S. as a refugee back in 2021. Bondi says the National Guard members have come through surgery, but are still, quote, fighting for their lives. Meanwhile, FBI Director Kash Patel says the shooting is being investigated as an act of terrorism.
That's the resolve that we have together as a team to bring to you justice for this heinous act of terrorism here in our nation's capital.
Patel blames the Biden administration for allowing the shooter into the country without proper vetting. The death toll from Wednesday's Hong Kong apartment fire has now risen to 75, with an unknown number of people still unaccounted for. The fire began on a section of bamboo scaffolding erected for a renovation project, leading the government to pledge to completely replace bamboo scaffolding with metal ones. Police have now arrested 3 senior figures from an engineering company on suspicion of manslaughter, with a criminal investigation soon to follow. The fire tore through the Wang Fuk Court residential estate in the suburb of Tai Po, which was once home to around 4,600 people. Russian President Vladimir Putin says he's ready to talk to the U.S. about ending the war in Ukraine. Putin says President Trump's proposals for ending the war could be the basis for future agreements. The Russian president says, according to what he knows, the original 28-point proposal was rearranged into 4 parts by Ukraine and the U.S. during talks in Geneva. The Kremlin has also confirmed that U.S. presidential envoy Steve Witkoff was expected to be in Moscow next week to meet with Putin. The Federal Reserve released its Beige Book this week, showing little change in U.S. economic activity in recent weeks. Overall, consumer spending declined except among high-end shoppers, while employment was also down slightly and prices rose moderately. The report, though, helped boost stocks, which closed Wednesday in the green for a 4th straight session. Here's some good news if you like to drive. Patrick DeHaan, head of petroleum analysis at Gas Buddy, says the national average for gas prices should dip below $3 a gallon soon.
Yeah, we saw another week of refinery utilization that's increasing, and this is telling us that refinery maintenance, which usually is happening in fall, is starting to wrap up, and that's going to put downward pressure on gas prices in the weeks ahead.
Hear more from Patrick DeHaan on the Bloomberg Balance of Power podcast. AAA has projected that a record 81.8 million Americans are traveling for Thanksgiving, with 73 million of them driving. FedEx says it plans to cut hundreds of jobs in Texas after a third-party logistics customer moved its business to a new location and decided to use a different company than FedEx. More than 850 workers will be affected by the move. The logistics industry as a whole has endured a turbulent year, jolted by President Trump's trade policies. FedEx is also undergoing major restructuring, merging its air and ground shipping operations into a single network. Labubu maker Pop Mart's shares jumping the most in 3 months, leading a broad rally in China's consumer stocks after Beijing announced new measures to boost spending. Pop Mart's stock climbing as much as 10% today after China unveiled plans to better, quote, align supply and demand for consumer goods, including collectible toys, to spur economic growth. The company is banking on big sales from global Labubu fans for Thanksgiving and Christmas. Toyota's sales advancing in October as U.S. demand helped make up for a downturn in China and Japan, thanks to strong demand for the RAV4 compact crossover and other vehicles. Global sales climbed 3% overall, while rivals Honda and Nissan both saw sales declines in October. U.S. markets are closed for the Thanksgiving holiday, but stocks still traded overseas. In Europe, the FTSE in London ended down 0.1%. The CAC in Paris was essentially flat, while the DAX in Germany saw 0.1% gain. Meanwhile, in Asia, the Nikkei in Japan closed up 1.25%. The Hang Seng in Hong Kong ended up 0.8%, while China's CSI 300 was down 0.1%. That's news when you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets podcast from Goldman Sachs. Listen now.
Hello, I'm Joel Weber.
And I'm Eric Balchunas.
We're the hosts of the Trillions podcast from Bloomberg, a deep dive into all things ETFs and investing. Eric, what's so amazing about ETFs?
It's never a dull moment. They track everything under the sun. 4 new ETFs launch a day, and they take in $4 billion every day. So it's where all the money's flowing to, and a lot of the innovation is happening. I call it the Silicon Valley of the investing world.
As you can hear, Eric's passionate about them. My role is to try and keep him in check and make all of this a little bit more understandable for the rest of us. Not always easy, but always worth a listen. So listen to Trillions on Apple, Spotify, or wherever else you get your podcasts.
Remember the Motorola Razr? Yeah, that Motorola.
Hello, Moto.
Today, you can find that logo somewhere quite different, on the chest of a police officer, a firefighter, or a paramedic. Over the past decade, Motorola has transformed. After spinning off its struggling cell phone business in 2011, the company doubled down on what originally gave it its name in the 1930s, public safety communications. Motorola Solutions is now a $60 billion plus powerhouse. It supplies everything from heat-resistant microphones to AI-enabled radios and even smart radios for firefighters. It also supplies license plate recognition tools that are used throughout the world. The company has generated shareholders a total return of more than 1,000%. That's crushed the S&P and left former cell phone rivals like Nokia and Ericsson in the dust. A huge part of that transformation comes down to one man, Chief Executive Officer Greg Brown. He's overseen more than 50 acquisitions during his time at the company, including the $4.4 billion purchase of battlefield-oriented networking specialist Silvus Technologies earlier this year. That deal brings drone networks and uncrewed tech into Motorola's portfolio, just as global conflicts and national security spending are on the rise. But it hasn't been friction-free. Fights with regulators in the UK and a years-long trade secrets battle with Chinese rival Hytera have led to tough questions around where the company should be building and operating. Through it all, Motorola has reinvented itself for a new era, not by chasing the next trendy gadget, but by being indispensable to the people who show up when everything goes wrong.